Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network. Welcome back to Opening Bell. We take a look at the key levels to watch here just after the opening bells have rung. And Kevin Green, senior markets correspondent, is with us. And every day he's noting key levels and trends to watch. And today, something different here is you have every sector in the green. NVIDIA helps to lead the way. Your thoughts?
Yeah, every sector in the green. We are seeing around 80%, 88% of the stocks in the S&P 500 in the green so far here. So a little bit different than what we've seen over the last week and a half, 2 weeks, Nicole. And obviously this is on the back of the NVIDIA earnings that we had, as well as the jobs report, which not so much the current month that was actually being reported September, but the revision to
Good morning.
has maybe put a little bit more optimism that we could see a rate cut in December. We will see with some Fed commentary later on today. If you're looking at the levels in the S&P 500, this is actually a very big one here. We did break above the 200 period moving average on the 15-minute chart. That has been an area of resistance, as you have seen in the past here. And we did see early on a lot of call selling taking place at this point in time here. Now, we are kind of testing it at the moment. If we are able to break through, break higher, you can actually look at another 50 points to the upside. 6,800 is catching some inflows here. It's also bidding up around $3.50 so far this morning when you're looking at the options flow. To the downside, if we have any type of reversal, which we have seen in the past, 6,665 is going to be your first area of major support. What we are seeing here now today that's a little bit different from yesterday. Remember, yesterday we did see a very strong start, but the positive volume flows just was not actually confirming that strong start. It was more of a short covering event. Today we're seeing a little bit different. Positive volume flows are definitely creeping into the market. S&P equal weight also moving to the upside fairly aggressively here. So the market is definitely risk on. I think right now the biggest thing for us is to be defensive in nature when it comes to the price action, Nicole. Let's hold these gains, let's not reverse, because we are still seeing a little bit of a lack of liquidity in the market. If you're looking at the bid-ask spread for the E-mini S&P 500, getting a little bit better, but once again, low market size, if you will, when you look at the bid-ask, could also lead to greater volatility. So VIX is moving to the downside. Let's see if we can continue to have this follow-through day, given the circumstances that we are seeing right now.
All right, and when we look at the long term, what stands out to you here? What's on your mind?
Yeah, so if we're looking at the E-mini S&P 500 futures chart here, I have the 6-month daily chart up. Obviously, we are seeing a move to the upside. Above that 50-day moving average is the first major area of resistance for this market. That's sitting at 6,756. Once again, we are talking about the futures. The next area of resistance is going to be the 20-day moving average in blue, 6,816 here. You're going to see that also kind of aligns with this resistance level to the downside, where we are taking those lower highs, making a line, making a trend line to the downside here. That would be your next major area of resistance for this market. For now, once again, gold are having a good day. They need to finish out just as strong here, and you can make a case for the bears, and don't want to leave them in the back here. You can make a case that we probably are in the next counter trend to the upside for a potential final flush. I'm not sure what the news items are going to be in order to do that, but we are in this second wave, if you will, of this pullback counter trend moving higher here. So really good action. We need some follow through today. MACD also looking pretty good. Trying to hinge here. You got a bullish MACD cross, that 12 EMA above the 26 EMA over the next 2 or 3 trading sessions. Nicole, I think the bulls have a little bit more in their favor right now. Cautiously optimistic is how I would treat this market.
Yeah, I mean, the guests are coming on and still being optimistic. I mean, Jamie Lee was talking about 7,000. James Jenner was staying intact. Nobody's saying, I'm taking my money off the table, I mean, at this moment. So still a lot of optimism. Kevin Green, thank you. Great to see you always. We appreciate all the work you do and getting us all those key numbers and levels to watch. Our market meetup panel standing by. Alex Coffey, Kevin Hanks. Great to see you both. Alex, I'll start with you. Good morning.
Good morning, Nicole. Yeah, building off what Kevin Green was saying in terms of the broad nature of the market, about 90% of the S&P 500 higher today. You talk about all the sector performance, but when you look at the market, I'll round up. We're up about 120 points, a little bit less than that now. But about half of that, about 60 points of which you could contribute just to the Magnificent Seven names, and about a third of that just to NVIDIA. So you really are seeing why there was so much hype going into this event. It wasn't just the AI story, but it's the mathematical importance of this move. But today, a wonderful start to the second half of this week, and probably what the market needed, Nicole, to kind of quell some of those fears.
Yeah, understood. What do you think here, Kevin? Welcome back.
Hello, Nicole and Alex. You know, I look at the market and we've been trading lower for days and days and days on two things, right? Fear of an AI bubble, worries about NVIDIA's earnings, and worries about a Fed rate cut in December. Those percentages went all the way down to 27% overnight. And today, back up to 41% chance of a rate cut. And the other word that everyone's been worried about is bubble, an AI bubble. I want to give your viewers some statistics. Going into today's trade, the S&P 500 in the last 12 months up 13%. The NASDAQ up 20%. Gold futures up 56%. Nicole, which is the bubble if you're looking at bubbles? So everyone's talking about gold and why you should be buying gold. Gold's up more than the markets. So I think this is a big relief of fears going into the end of the year, and I think this rally has legs, Nicole and Alex.
And this is why also the crypto folks and the gold folks battle it out, because we saw Bitcoin below 89,000. I think I'm going to try and see the low so I get the right number here. And the big picture here is that it was at 7-month lows. And that's a big deal here. I was just trying to see if it broke below 80. I see 88,600 yesterday was the low. So, I mean, what's going on there, right? So it's not everything just goes up. Alex?
Yeah, but I think this is actually a healthy thing, Nicole, which actually kind of adds credence to what Kevin's highlighting, which is, yeah, there's always going to be parts of the financial markets that are extended and are going to have to be repriced. I mean, we were talking about Beyond Meat when it was over $200, certainly not that now. We were talking about names like Tilray when they were over $300, certainly not doing that now. We've had conversations around some of these non-profitable tech companies within AI as well that have pulled back substantially. But you can't say that about NVIDIA. You certainly can't say that about the rest of the Magnificent Seven names. Sans maybe a Tesla, which you could get into a little bit more of a nuanced conversation around. But what makes this different, and I always am hesitant to say things are different than other times, but in the dot-com era, it was much more like the crypto boom of 2017, where anything put blockchain at the end of the name and you saw big rallies. Look, NVIDIA could be repriced substantially to the downside if there's an asset correction, but it's not because the company's not making money or it's doing something funny with financials. It's generating a ton of revenue, and it's turned itself into the biggest company in the world by a wide margin from sort of an obscure gaming chip company just 10 years ago. So sometimes you just got to tip your hat to the success and watch for these risks. Like, hey, Bitcoin, that's what it does. It moves around a lot.
All right, and then anything on the jobs or the Fed, because Ben Emmons is out and talking about payroll data, which showed
Good morning.
because of a revision down 33,000 due to a revision. It was offset in September with plus 119,000, but with that, the
Good morning.
rose from
How you guys doing?
basically 25% to 37%.
I'm a little bit behind,
And we got the Fed minutes yesterday. Kevin?
but I'm here with you guys
I
every day.
believe that today's payroll number showed two things. It showed the labor market unemployment rate actually ticked a little higher at 4.4%. That should focus the Fed on the labor market, while the month-over-month wage data came in at 0.2. better than expected. So inflation is not as worrisome. The labor market is worrisome. That leads to the percentage of a December rate cut going higher and higher, Nicole.
All right, and Jimmy Lee said, we need a rate cut. Well, you know the president wants a rate cut. Stephen Meyering wants a rate cut. And probably Bowman and Waller want rate cut. Okay, good to see you both. Alex Coffey, Kevin Hanks. Thank you for being with us, and thank you for being with me, friends, here on Wall Street. It's been a great morning. People are feeling pretty good about their 401ks and IRAs with the NVIDIA story really just making people feel a little more at ease about the AI story.
That's
This
why I
morning,
use Experian.
good to see you. I'm Nicole Federle, Morning Trade Live and Fox
Experian
News.
app. I can check my FICO score, explore savings tools, and get matched with credit card offers. Some cards are labeled no ding decline, which means if I'm not approved, they won't hurt my credit scores. That's confidence I can count on. Download the Experian app today. It's free. But when you're looking, the credit cards won't hurt your credit scores if you're not initially approved. Initial approval will result in a higher risk, which may impact your credit scores.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. Morning movers bring traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, morning movers only on Schwab Network. Exchange. We've got plenty to hit on both here and abroad over the next hour. So here's a look at what is coming up on today's show. We will examine how to avoid concentration risk in this increasingly AI-driven market as the mega-cap tech names continue to increase their earnings and capex. And over the next hour, we'll have example trades for NVIDIA and Walmart. Both companies are coming off a beat and raise quarter. market stand right now, about half an hour into trading, because we are off to the races here. The S&P 500 has reclaimed at 6,700 now. We're at 1.8% higher. Thank you very much, Jensen Huang, this morning, and also that delayed September jobs report for this performance this morning. The Nasdaq flying high to the tune of 2.2% right now. We're at 25,186 points. The Dow also putting on 1.4% this morning, and the Russell 2000 joining the party here, up at 2% as well. So we are seeing a risk on today off the back of this better than expected earnings report from Nvidia. The Super Bowl of earnings, we saw a nice global rally for tech related names as well across Asia and also in Europe. Let's take a look at where foreign markets stand as well right now, and take a look at the gains that we saw, particularly for the Nikkei 225, up around 2.5%. We do have, of course, reports of this fiscal stimulus package from Takaichi, but we did see some of the tech names rallying. We'll dig into that later in the program, but for now, we've got the FTSE 100 up 0.6%. The German DAX up 1.2% for this moment. The Hang Seng Index just on the line to the upside. The Chinese central bank sitting on their hands overnight with interest rates as well, despite the softness in the data. Let's take a look at futures products. We've got the 10-year yield backing off now. We're at 4.11. The US dollar index is looking perky off the back of the FOMC minutes, continuing to hold 100 there. Gold catching a little bit of a bid this morning. We're just above that key level of 4,000 right now, 0.2% higher. Crude oil is on the move as well, $59 a barrel. We've had the Kremlin coming out talking about no consultations with the US on Ukraine. Remember, we were talking about that yesterday to bring an end to this war. Bitcoin is catching a bid today. We're at 1.5% higher at 90,000 right now. So that's been a big focus very much for the markets, given this sell-off we saw yesterday at sub 90,000. So we're recouping some of those losses in the market this morning. So that's your setup for the day off the back of this earnings report, off the back of the data that we've been waiting for. So let's get to Kevin Green, who joins me now to get across some other numbers. And we're getting some existing home sales print. Talk us through what you're seeing as far as that one, KG, this morning.
Yeah, for existing home sales, we actually saw that number coming in at 4.1 million for the month of October. The street was looking for 4.08 million, so pretty much in line with the street's expectations. We did see a little bit of a revision down from the last month as well, coming in at 4.05 million. Last month at 4.06 million. So for the most part, existing home sales are holding up. For now, we obviously have seen rates move to the downside here on a general basis over the last couple of months or so. We're still not back to the levels that we saw pre-2023 or so. So for the most part, still muted. We are seeing inventory hitting into the market. Maybe some buyers are kind of stepping off the sidelines and getting into this market here. But as inventory does expand, we are expecting prices to actually come down, and that could also activate buyers in this market as well here. So very interesting print. Obviously, we had a lot of economic data, not only this morning, but with the Nvidia news last night. We are reaching, for the most part, highs of the session at the moment here. It looks like the market does appreciate it.
Yeah, absolutely. Another thing, of course, they do appreciate is the upside surprise we've got on the delayed September jobs report. Talk us through the numbers as far as some of the metrics that stand out to you, because the jobless rate did actually tick up, but it really was the 119,000, which came in much better than the around 50,000 that the market was expecting. That is the big focus today.
Yeah, we did see a better than expected print when it comes to the month of September. I'm not sure the market's so optimistic about the number that's in September. Obviously, it did exceed the street's expectations at 119,000 jobs. The street was looking for around 51 to 52,000 jobs to be added for that month here. But I think the big bright spot, which is why yields actually started to move a little bit lower, is the August print actually was revised lower. It went from positive print down to a negative 4,000 for August, and we did see a revision to the downside for the July print as well. What does that really mean? These aggressive revisions in previous months kind of gives us a better picture as to the health of the labor market, and right now that revision doesn't look that great, and so you might start seeing some members of the Fed, especially Barr, who is speaking right now, maybe a little bit more concerned about the labor market because of these aggressive revisions to the downside. Now, unemployment rate did actually increase to the upside to 4.4%. Previously it was at 4.3%. And average hourly earnings on a month-on-month basis came in at 0.2%. That's actually a really decent inflationary gauge here. You're starting to see that decelerate, and that could also help out CPI as well as PCE here. So I think this is actually kind of a Goldilocks.
Give me a second, I'm just dusting
Not
up.
so much concerned about the outsized jobs that were reported in September, but the revisions that we saw in July and August, I think, is really what's driving a lot of the enthusiasm that the Fed could still cut in December.
So So certainly looking at some of the revisions as well. That's important to keep in mind, particularly as you mentioned, we're seeing the bond yields this morning. Let's talk about what we're seeing in stocks here off the back of course, and now we've got Nvidia out of the way. Now we've got some of the September jobs out of the way. We're seeing the VIX backing off. We're seeing equities rallying today. What is that telling you? What are you seeing as far as the charts and the technicals are concerned?
Yeah, so you are seeing a crush in volatility for now. The VIX is sitting at around 19.6. Keep your eye out on the VIX if you're looking at it from an intraday standpoint. We are starting to see it actually inch up a tad bit. We are hitting highs of the session right now. And we're getting very close to that 20-day moving average for the S&P 500. We're only about maybe 20 points, 21 points away from that as of right now here. So at the end of the day, we've had an outsized move to the upside, up 1.8% on the S&P 500. Almost every sector is in the green. It was the last time that I checked, we have 80% of the stocks so far in the green right now. But you are starting to see maybe a little bit of a pullback in some of these metrics just on an intraday basis. This is a good day. For the bulls, you want to be able to hold these levels, stay positive, at least close above that 50-day moving average, and not see an aggressive reversal like we saw yesterday, which was, once again, part of a low liquidity type of market. So we got a lot of events out of the way. We'll focus more on policy moving forward, but at the end of the day, we still have to recapture that 20-day. I think that's going to be a very key area of resistance for the market, and that could also be a pretty decent point for short sellers to try to come in and knock the market back down. So good overall. Numbers were obviously fantastic, but this market still has to prove itself in more ways than one.
Okay, let's switch gears to the currency market, international markets as well, as far as what we're seeing in dollar yen this morning. We did see the yen actually weakening to the lowest level in around 10 months yesterday. It picked up a bit overnight, no doubt pressured by not just what you're saying with respect to what the Fed is actually going to do, but also on the other end of things, what they're talking about as far as more sort of expansionary fiscal policy over in Japan. There seems to be a little bit of pressure on the Japanese currency off the back of that, and seeing those bond yields with JGBs spiking this week. We've got the 20-year at levels not seen since '99. So talk us through the importance of this and why U.S. investors should be paying attention to it.
Yeah, I mean, look, we're having a great day, but I am going to bring this kind of up here. We are actually seeing 10-year Japanese government bonds blow out to the upside here. Actually, they're at levels that we have not seen since 2008. The country is looking like they're going to approve a stimulus package with the equivalent of around $135 billion. Now, this is trying to combat inflation in some respects, maybe also restart some of the housing market weakness that we see in certain pockets within Japan here. And we know that they just had an election, a new leadership actually taking the helm here. So what you are seeing is not only the yields in the Japanese bonds actually moving to the upside, but you are also seeing the yen weaken here. And the last time that we saw the yen weaken towards these levels was back actually in January of this year. What happened around that time? It was that big concern that the yen could actually break through that 160-ish area if you're looking at the US dollar yen pair here. And that actually caused a little bit of a concern when it came to heightened volatility, as well as the concern that maybe Japan actually does liquidate some treasuries in order to raise cash, in order to deploy within their markets here. Is that a number one thing for today? It's not. There's something to keep on the radar here. The yield market across the globe is still slightly elevated and moving a little bit higher here, and this could be something that does come back into the forefront here if this narrative around the debt market, sovereign credit, AI credit, if you will, continues to linger around, and we still see credit default swaps at an elevated level compared to historical averages.
Yeah, I mean, this is, of course, a sort of a fixed income story globally, isn't it, KG? I mean, I heard Ray Dalio also talking about it this morning. I mean, this is just showing us as far as the long end of a lot of these countries with their yields, as they're growing discomfort over the amount of borrowing that's needed to really fund a lot of their stimulus plans. So we'll have to keep an eye on that one. But as you mentioned, $112 billion stimulus package coming out of Japan that's being reported right now. Let's switch gears to the commodity space. Seeing that oil is ticking up higher. You and I were talking about the U.S. consultations to potentially bring an end to this war. It looks like the Kremlin has come out and denied that now. I'm also looking across gold as well, catching a bid. I actually just noticed this morning the Shanghai Exchange issued an alert to investors on risks of gold trading. Now, of course, this is something that sometimes the authorities do over in China when they're worried about some of the volatility there. What are you seeing as far as the commodity space?
Yeah, in Shanghai, I believe it was about a month ago, they did the same with copper. When we started seeing that aggressive move higher, they started putting limits when it comes to copper size as well as positioning. You can also see the same when it comes to lithium. Lithium over in China is ripping to the upside. If you're looking at that commodity as well, there's also a physical demand story that is there. If we're looking at the oil markets right now, you're seeing a nice little bump to the upside, up about 0.7%. Yes, Russia is kind of pushing back on this Russia-Ukraine peace deal that the U.S. has kind of offered here and quietly signed off on. And if you're looking at maybe some of the demands for Russia and what they would like to see for Ukraine, they've denied them in the past, probably going to deny them in the future, giving up a significant amount of territory, not able to have any type of support staff when it comes to countries in their country as well. There's a lot of things there. So you are seeing oil kind of re-rate a little bit higher, maybe a little bit of optimism there also when you're looking at the overall equity market as a whole here. I'm keeping my eye out on silver. I think that's the biggest risk gauge that we have in this market right now. Silver, industrial metal, obviously needed for a lot of electronics, needed for data center build-outs, short deficit when you're looking at supply out there. Silver, I think, is going to be your telltale sign. If you break out higher here, I think equity market's solid.
Yeah, I mean, silver managing to hold that 50, which is certainly an interesting move here, particularly as a lot of analysts out there have been talking about this sort of broad commodity bull market, so particularly moving into 2026. That is something certainly to watch as far as the precious metal. Casey, always appreciate it. Thanks for getting us across these key stories this morning. Coming up, we'll dive into the overall Q3 earnings picture and dive into the expectations for big tech CapEx trends. Morning Trade Line. We'll be right back after this. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com. Back on Morning Trade Line, Palo Alto Networks is lower this morning after its current quarter guidance arrived in line with consensus estimates. Palo Alto beating earnings expectations for the trailing quarter and announcing a $3 billion acquisition for Chronosphere. So that seems to be what is sending shares lower this morning, about 3.5% in trade today. Let's take a look at the winners and the losers on the session thus far, because as we've been talking about, it's been a very earnings-heavy, driven type week, particularly if you look at the big retailers as well. So you've got shares in Walmart that are up around 5.5% right now off the back of its Q3 beat and rates and guidance there. Same-store sales looking pretty perky at 4.5% as well. So overall, a good report from the retailers. Got Constellation Energy also up around 4.5%. And Tesla is up almost 5% in trade today. So it's a good day for the Elon Musk company as report card, particularly around this acquisition that it was talking about. Datadog is also lower to the tune of around 3.5%, Kroger down 2.5%, and Jacobs Solutions is leading the declines there to the tune of 5%. So that's a quick snapshot of your markets this morning, the winners and the losers on the session so far. For a look at the broad market, joining us now is Sean O'Hara, who's the president of Pacer ETF. Thanks so much, Sean, for joining me this morning. So, NVIDIA, I mean, do we need to say any more? What is it telling us about, this AI story? Do you think that the gains would be bigger if there weren't already these sort of lingering concerns around depreciation, valuations, and circularity here?
Yeah, I mean, I think what it's telling us is that the CapEx cycle is in full swing, if you will. When you look at what they reported, they beat on earnings, they beat on revenue, they guided higher. They're basically out of one type of a chip, so that they're backlogged there. And I think that's good for part of the market. The other part of the market that probably caused a little bit of the consternation that we saw was this big CapEx spend by some of the hyperscalers, and we don't know whether or not they're going to get a return on those investments. And so, NVIDIA is a perfect example, perhaps, as a way to be positioned for that massive CapEx, where you become a receiver of those dollars as opposed to a spender of those dollars. And so, there's going to be somewhere between $4 and $5 trillion spent on the AI build-out. A lot of that's going to go to buildings, data centers, but a big portion of it's going to go to the contents in the building, which is software, hardware, systems integration, names like that. Palo Alto is a name we own in one of our funds. We own NVIDIA, obviously. But I think, I would rather be on the receiving side of this massive CapEx than hoping that eventually it turns into a good return on investment. And I think that's what sort of shook the markets a little bit with some of the big hyperscalers. But NVIDIA is sort of reinforcing that they're going to spend the money, and I just want to be in line to receive some of those dollars. And I think you receive those dollars not necessarily by buying the hyperscalers today, but by buying the names that they're going to buy, which is equipment.
Yeah, absolutely. And we're seeing the NVIDIA effect really playing out globally. I mean, it was a good night over in South Korea, over in Japan, with some of the names like Samsung, the NVIDIA suppliers, like SK Hynix, your TSMCs who make the chips. You had good numbers out of Foxconn as far as their shares were rising, ASML as well. So it really feels like it's a tide that lifts all boats, but it feels like it's concentrated in technology, Sean. So what does that tell you about some of the risks out there right now, particularly when you get jobs numbers and revisions out like we got this morning, and some of the warnings we're hearing from the retailers about the consumer?
Well, I think maybe the more important story of the day was the Walmart story. They beat and guided higher. And interestingly enough, for those that are worried about, quote-unquote tariff inflation, their prices only went up 1%, which means somewhere along that line, either they ate some of the tariff or somewhere down the line somebody else ate that tariff. But what they're saying to us is, that the consumer is pretty healthy. I think there's winners and losers in that space. I mean, Target's obviously, going through a lot of difficulties right now, but those names that are winning are a pretty good indicator that, the consumer isn't really tapped out, which was the other narrative that was sort of challenging the market, if you will, which was, are we going to see a recession? Is this quote-unquote unaffordability crisis an issue? I think what we're seeing is that, the consumer's doing pretty good here today. Wages are growing faster than inflation. Inflation seems to be moving in the right direction. That means lower. And then I think next year, when we start to see the effects of some of the tax cuts in the big, beautiful bill, that'll put more money in the individual consumer's pockets. So I think the tech story of the day obviously is NVIDIA, and a lot of other names are ripping as a result. But the one that I think is the most indicative of really whether or not we're in a healthy market or not is that Walmart story.
Yeah, it's interesting you say that, and tell me if I'm wrong, but from what I was gathering from some of the commentary from the C-suite was that while they do sort of cater to a sort of broad-based kind of low-end consumer, they are still worried about that demographic. It's in fact some of the higher-income consumers that are trading down that seem to be sort of pulling the weight here, and that seems to be a theme we're seeing playing out across the space when you look at travel, when you look at luxury, when you look at what some of the airlines are telling us as well. I'm just wondering, with all of that in mind, what we're hearing from the tech players with CapEx, what we're hearing from the retailers, how do you play this market?
Well, I mean, I just one note on your categorization of Walmart as catering to the low-end consumer. I don't think that's the case anymore. That may have been the case 10 years ago because they were price. But since they've integrated the grocery store into a lot of their big centers or their big buildings or big Walmart centers, if you will, I think they're dragging in higher-end consumers because all of us buy groceries, for example, and so getting that traffic in the store maybe changes that narrative a little bit. I think the way you play this going forward, I think is you have to have a part of your portfolio exposed to the broad markets, i.e. the Mag 7, but I don't think we should be as concentrated as we are. One of the things that we like to pay attention to at Pacer is free cash flow margin. That's what makes NVIDIA such a great stock. They have a massive free cash flow margin. And for those who are watching, free cash flow margin is sales divided. Free cash flow divided by sales.
You need some smoke.
Measurement, are they converting their sales to excess free cash flow? NVIDIA is a superstar in that category with a free cash flow margin north of 50%, while their sales are growing 60% year over year. So for every dollar worth of new sales that NVIDIA makes, they convert that to 50 cents worth of free cash flow. That's not the only sort of tech and services name that's doing this. There are a lot of smaller companies in these broader indexes that are generating as much free cash flow and free cash flow margin and growing their sales as much as, say, NVIDIA. They're actually up as much, if not more than NVIDIA.
Fill up the chat box for me. I need to see if everything's connected right.
Nobody pays attention
Trying
to
to get it right, y'all.
I would be looking to sort of
let me know if y'all need to see my face or anything. I'm here with y'all all the way through. Pretty bullish so far, y'all. I don't really see nothing that's not bullish.
That will never get the overweight because of the way the broad
bullish means going up. Got horns, right? Bulls.
Yeah, understood. Shorter,
bullish.
Thank you so much for joining us today. We'll pick your brains again another time. Shorter, our president of Pacer ETF, appreciate it. Coming up, we will get a closer look at the bigger picture with the team over at Charles Schwab. Morning Trade Live. We'll be right back. I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so...
Sometimes,
Next. Try again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network. Shares of Block are on the rise after Mizuho raised its price target to $100 from $88, while keeping it up for ranking. Mizuho saying it likes the Block's AI product announcement, but is even more thrilled about the company's opportunity to lower the cost of acceptance by utilizing Bitcoin rails. Alright, let's take a look at the fintech space right now. Some of the other names in the market that are moving today. It's not right at all. Picture across the fintech today. We've got Klarna that's lower by around 3.5%. But Block is up 5.5% off the back of Mizuho's raise there, as we just mentioned. PayPal up fractionally, and Affirm is up by about 3.8% in the morning session. So it's a good day for most of those names today. Welcome back to your Morning Trade Live. It's time to have the big picture, so let's welcome in the team from Charles Schwab. We've got Liz Ann Saunders, Chief Investment Strategist, Schwab Centre for Financial Research, and Mike Townsend, Managing Director, Legislative and Regulatory Affairs at Charles Schwab. Very good morning to you both. Let's start with you, Liz Ann. I mean, we've seen stocks popping, yields dropping. Thank you very much, Jensen Huang. And also the delayed September jobs report. What are your takeaways?
Yeah, so the jobs report was a bit of a mixed bag, I'd say. You know, if you have a more optimistic assessment of the labor market, you could find things to point to, not least being the big jump in payrolls. But if you're on the more skeptical end of the spectrum, you could point to the downward revisions, the rise in the unemployment rate, although that was a function of the rise in labor force participation, which is sort of a good reason why the unemployment rate went up. So very much a mixed picture. But I think to your point about NVIDIA, I think that was the more powerful force in defining what the market is doing so far anyway today. So I think, you know, when you see the impact that has had on what we call the growth trio of sectors, tech, communication services, and consumer discretionary, which have not been the leadership areas, you absolutely can point to NVIDIA.
Yeah, all right. I just want to sort of get Mike's take on all of this. You know, obviously, given what we saw from the data, as Liz Ann sort of pointed out, I mean, you could look at this sort of glass half full, glass half empty. If you're looking at, you know, the number as far as the headline, or if you're looking at the jobless rate, or if you're looking at some of the revisions in the previous months. But we're also not going to be getting that October jobs report cancelled because basically they couldn't collect it. So what does this mean now moving into that December meeting?
Yeah, I think it's going to be really tricky for the Fed, Sam, because they're not going to have the usual amount of data that they rely on. And as you note, that October jobs report, you know, and remember that what we just got was the September jobs report. The October jobs report is just not going to happen. And then I think even once you get into some of the other reports, you're looking at sort of partial estimates and that kind of thing. A lot of people think it's going to be January before you've really got a good handle on the sort of state of the economy. So I think that puts the Fed in a difficult position. And obviously with some of the comments we've heard from Fed governors over the last week or two, you know, there's a pretty wide divide that's opened up within the Fed about whether there should be a rate cut. So I think it's a very much up in the air kind of situation right now. We'll see, you know, what else happens in the markets between now and the December 9th start of that meeting. But without all the data and with some of the skepticism that has been expressed by Fed governors over the last couple of weeks, you're seeing, you know, expectations drop pretty significantly for a rate cut.
Okay. So Liz Ann, now that we've got NVIDIA out of the way, very much signaling that the AI story and that narrative remains intact, and now we've obviously got some evidence of the data, albeit a little bit backward looking. What happens next? I mean, you know, as we move into 2026, what are sort of the major things that you're going to be paying attention to? I mean, have all these concerns around valuations and circularity of financing and depreciation worries gone away?
Not necessarily, but I think we're in a bit of a whipsaw kind of market where there are those underlying concerns about the circularity of financing, the fact that some financing is now coming via the debt markets and not the equity markets, concern about maybe some pressure on profit margins. In the case of a company like Oracle, CDS spreads kind of widening out. But then you get one earnings report that's better than expected, and that knee-jerk reaction is, you know, buy the dip, go right back into those names. And I think that's the pattern that's likely to persist. There's still that bias to be in names like this. Obviously, given the cap-weighted nature of the major indexes, you get a lift like that, it accrues to the benefit of the cap-weighted indexes. You shift away from what had been leadership over the past month in areas like healthcare and energy, but you could get to a point where you get some other singular piece of news that then shifts that trade in the short term. And that's the nature of retail traders being in the driver's seat here, that arguably have time horizons that are not measured in months and years, but measured probably more in minutes and days.
Yeah, I think the Wall Street Journal put it pretty well this morning, talking about how NVIDIA's strong results maybe just show that the AI fears that we've been seeing in the market in the last couple of weeks are just a bit premature for now. But you raise an interesting point around obviously how they're getting their hands on this money as well, particularly using the example of Oracle too, which has been a big focus. Mike, just switching gears back to you, I do want to just talk about some of these tariffs and then obviously what's coming down the pike as far as the next sort of Supreme Court decisions, what this could mean for markets. There's an interesting article out from Reuters this morning talking about how they actually might delay some of the chip tariffs now because they don't want to rock the boat with China. What's your assessment of all of this?
Yeah, Sam, you're looking at some changes with tariffs going on. I mean, first of all, the president has rolled back some of the agriculture-related tariffs that I think is really, driven by the election outcome a couple of weeks ago, where affordability and cost of living was really a central reason that Democrats did well in some of the races nationally. So you're seeing a little bit of a response from the White House to ease back on tariffs. But you mentioned the Supreme Court case, and that's going to be really interesting because those arguments were a couple of weeks ago. Now we're waiting for a decision on whether the bulk of those tariffs, the reciprocal tariffs, are even legal. And it opens up the possibility if the court were to throw those out that you would have north of $100 billion in tariff revenue that might have to be refunded to those who paid it. So a lot of sort of complicated uncertainty, I think, going on here. Don't exactly know when we're going to get that Supreme Court decision. Could be December. A lot of people expect it might be more like early 2026. But I think that's kind of put the tariff situation a little bit in limbo for the White House while they wait to see what happens. And they do have other ways to impose tariffs. But I think that's created a little bit of uncertainty going forward.
Yeah, it certainly has. And I mean, we heard from Walmart, obviously, which appears to be sort of eating it in the supply chain somewhere. At least that's what the numbers appear to be suggesting. But we'll have to wait and see. Liz Saunders, Mike Townsend, always a pleasure to have both of you on the program. Thank you so much. Appreciate your time. Coming up, it's time for the morning trade, and we'll take a closer look at Walmart after earnings. Morning Trade Live. We'll be right back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE.
Man, you guys only knew. Oh, we're about to get this money. Oh.
And it looks like Walmart is lifting all the others. Target is up 0.5%, Costco up 1.2%, and Home Depot up 0.8%, despite some of the concerns in their respective reports. So
Let's go. Let's go, Walmart. Let's go. Bring your butt up here, Walmart. So sick of your stuff.
We saw a beat, we saw a raise, sales look pretty healthy. What really stood it out, and what do you make of the reaction we're seeing in the markets?
I think there's several things that stand out here, Sam. And good morning to you. Walmart putting up a really impressive quarter. Like you said, they posted third quarter earnings and revenue that beat expectations. They also raised their full year outlook for the second quarter in a row. So those things stood out to me just on their face. Your EPS 62 cents came in 2 cents better than expected. Revenue came in at $179.5 billion versus $177, which was expected. Two of the biggest drivers here, though, were this double-digit e-commerce growth that they saw, as well as the company saying that it drew more shoppers across all income levels. And that's really what stood out to me the most. But first, let's talk about e-commerce. Their e-commerce sales globally were up 27%. All segments there posted sharp gains. In the U.S., e-commerce was up 28%. Those increases driven by those store-filled delivery of online orders and also growth in its advertising and third-party marketplace. In the U.S., shoppers made more trips to Walmart, and they also spent more while they were there in this quarter. They had a nearly 2% rise in foot traffic during the quarter, and nearly a 3% rise in the average ticket price in U.S. stores. That comp sales number for comparable stores, that's a really important figure for any of these retailers. Walmart's rose in the U.S. to 4.5% in the third quarter. That was compared to the year-ago period. That surpassed expectations for 4% growth. We saw growth of less than 1% for a lot of the other retailers who have already reported. Now, Walmart also raised its sales and earnings outlook for the second quarter in a row. They said they expect full-year sales to climb about 5%, adjusted earnings in the range of $258 to $263, which is also up. But Walmart's really important because they are often an indication of the health of the U.S. consumer, and they are saying that the consumer habits did not change during the quarter. That's what the CFO said. Shoppers spent selectively. They continue to look for deals as they have been, but they're really seeing a lot of high-income customers traveling to Walmart stores now, as they are looking for relief from the higher prices as well. That's where they're seeing a big uptick in the top half of this K-shaped economy. Some of them coming for the speed. They can now deliver about to 95% of U.S. households from the store in under 3 hours. They say that's a big driver for some of those more affluent customers. They're seeing the revenue related to those faster deliveries up 70% year over year, driven by that more affluent customer at Walmart. And subscription
Market's bullish, everything bullish, going up, everything going up. Look at this volume right here coming in.
With the government shutdown and SNAP benefits, but those have since rebounded, Sam.
Okay, so a pretty good quarter there for Walmart as it continues to cash in on some of those trends that you were talking about. Molly, thank you so much for that. I'll talk to you later. Let's trade it now with Joe Tigay, portfolio manager of the Rational Equity Alpha Fund. How are you approaching your example trade for Walmart off the back of this report card, Joe?
Yeah, very simple. I'm looking for all-time highs, a fantastic report. No reason to think anything else. And just kind of piggybacking on the rest of the market, getting boosts elsewhere, of course, in the market. The jobs numbers, the market is in love with that. The NVIDIA numbers, the market is in love with that. Looks like the Santa Claus rally has not been canceled, at least as of today. So it seems reasonable to think that the best months of the year, January, December, and November, might continue on that trend. So it makes sense to expect a bullish trend for that time period. So just looking out through January, I am going to be in the 105-110 call spread, all-time high 109 for Walmart. So looking for all-time highs here to reach my max profit this morning. I was looking at it right on the open. It was $1.80. I'm sure it's much higher now as Walmart has continued to rally throughout the day.
Right, Walmart shares are up 8.5% in trade right now, and we are off to the races for that name. And it looks like it's dragging up some of the other retailers as well. Joe Tigay, thank you so much. I always appreciate it. Portfolio manager of the Rational Equity Alpha Fund. Joining me there. All right, coming up, we will take a closer look at the sectors on the move this morning and how global markets are reacting to NVIDIA's earnings report. Morning trade lines back up this.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Coming to you live from the New York Stock Exchange. It's time now to take a look at the sectors that are moving markets this morning. So I'm joined by Alex Coffey to do just that. So what are your takeaways? I mean, obviously we're seeing Nvidia rallying today. It's a tide that seemingly is lifting all boats. So what stands out, Alex?
Good morning, Sam. When you look at the S&P 500 today, it's as broad a rally as we've seen really at any point over the last 3 months, with about 85 to 90%, depending on the hour of the day. So far, we're about an hour 20 into the trading hour 10 into the trading session here. It's fluctuated a little bit, about 85 to 90% of the S&P 500 companies above the unchanged line. You see the broad, nature of the green heat map there on the screen, but not only that, the colors are quite bright, and so this tells us that it's a broad rally, every single sector higher, but that the moves are also quite significant, and when that happens, it's a recipe for a 1.82% rally for the broad index.
Yeah, I mean, does anything in particular sort of stand out to you today? I mean, it's been an interesting move also in some of the discretionary names as well. I mean, alongside technology, it is also high. It's a nice rally for Tesla stock today. What else are you seeing out there right now that sort of sticks out to you?
Yeah, I mean, Sam, clearly NVIDIA is stealing the show, rightly so, post another really impressive earnings release. It's accounting for over 20 points of the S&P 500's rally, so at this point, let's call it 15 or so percent of the day's move. But more than that, it's seeing its broad mega-cap tech peers within the Mag 7 also move quite substantially. Not a surprise, 7 for 7 in the green. Also not a surprise that the colors are quite bright. But you can really credit with this index 3% move for the Magnificent 7, about half of the broad market of the S&P 500's rally just to the S&P, or just to the Mag 7 alone. So if we're up 120 points, about 60 of those points is just Magnificent 7 names. That doesn't account for a Broadcom. That is probably the second biggest contributor to today's move. So it really goes to show that the AI trade is striking back today after a couple weeks of some sluggish activity.
Yeah, it certainly seems to be easing some of those concerns that have been out there in the markets over the last couple of weeks or so. Yes, as you mentioned, the Broadcom almost 6% higher in trade today, so good to point out that one. Alex, thank you so much for joining us and getting us across these markets and sectors. Let's wind our scope and take a look at the Nvidia effect across global markets overnight. Asia was the first one to react to the better-than-expected earnings results. We saw chip-related names climbing from Tokyo to Taipei. Investors cheered the report. Shares in TSMC, which manufactures those chips for Nvidia, rallying over 4% in Taiwan trade. Foxconn, which supplies to Nvidia as well, also surging over 3%. South Korean memory giant and Nvidia supplier SK Hynix shares jumping over 1.5%. Samsung rallying over 4%, while over in Japan, SoftBank surging to 8% before achieving the session nearly 2% higher. Chip maker Tokyo Electron hopping over 5%. Tech-related stocks also charging ahead in European trade. Dutch semiconductor equipment maker ASML rallying up around 2% in the session at one point as well. Away from Nvidia, though, as we mentioned earlier, we are also keeping an eye on the yen. Japanese currency weakening against the dollar, which we've lost in 10 months as the greenback perked up following yesterday's FOMC minutes. Now, moves are on a combination of reduced rate cutting bets from the Fed and concerns about more of an expansionary fiscal policy over in Japan, with new pro-stimulus Prime Minister Sanae Takaichi reportedly expected to unveil the biggest spending plan since the pandemic to the tune of $112 billion, according to Bloomberg. Given the larger size of that, bond issuance will increase, putting more pressure on finances. JGB's been climbing the 20-year at its highest since 1999, and as KG pointed out, that 10-year blowing out to the highest since 2008 as well. All right, coming up, it's time to bring that out. We'll take a closer look at Nvidia's rise after earnings and bring you down to trade report when Morning Trade Live comes back.
market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, planning, whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make-or-break level for the stock. That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast.
Yo, how's the ladybug in the hell?
Long-term investor, our Investing Webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by
For real, like.
It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
The biggest event on the calendar this week in the Chipland delivered beating earnings expectations and raising guidance as the AI boom continues to share up more than 40% this year and trading high this morning as well. Let's take a look at the more chip space and see what else is on the move, because there seemingly has been a time that has lifted all boats across global equities really. So we're seeing Intel up 3.5%, Broadcom is also high, almost 6% this morning, and AMD also rallying to the tune of around 2%. Nvidia right now sitting at 3.9% higher. So that very much is the focus. Let's go inside out. And joining us now is Phil Finaro, the former founder and CEO of Boston Consulting Group, that is Plantinian. Thank you so much for joining me today, Phil. So what are your takeaways from this earnings report? There's a lot to like, but let's sort of break it down as to what really stuck out to you and what is the story moving forward.
Yeah. So I'm going to talk about the numbers first, and then I'm going to talk about how the technology drives the numbers, which is what everybody's missing. All the analysts, people who look at the chart, you have to understand the actual technology. So if you saw their performance, they actually in one quarter did double what they did in 2023, over $50 billion. Also in terms of 2024, they've almost exceeded their entire earnings in one quarter than they did in the entire year. So the real question is, why is that? And what's so special about NVIDIA? And the real answer is basically the AI revolution, but what I think is important for people to know is they should understand that AI is almost like electricity, essentially. Essentially, electricity went through people's homes, and then the infrastructure, and the offices, and the factories. AI is only beginning, in my perspective. But even more important, and Jensen has only started to talk about this, and I've actually been talking about it for 2 years, which is the transition from Web 2 to Web 3. And Morgan Stanley, Citibank, and Goldman Sachs has said that it will be at least a $10 trillion transition by 2030. And when we talk about Web 3, we talk about the immersive web, 3D, using digital twins and AI combined. And if you look at 10 trillion in revenue, I can easily see NVIDIA getting 1 trillion of that, 1/10 of it. And then the last item is the data centers, which you saw 90% of their revenue is from the data center. And again, we're looking at a cycle. We're moving from CPUs to GPUs. For 60 years, CPUs dominated the environment, single processing. Now we have accelerated computing, which is basically what drives AI. You need a GPU chip, which is what NVIDIA sells, to drive AI. And what that is saying is they're saying it's 3 to 4 trillion by 2030. So to think that NVIDIA would get 1/4 of that, where they're right now getting 80% of that, is actually a low estimate. So my prediction of $1,000 a share and $1 trillion in revenue is actually conservative.
And everyone seems to be a winner here in this environment, particularly when you talk about the TSMCs, which manufactures the chips, when you talk about the memory names that are obviously supplying to it, NVIDIA, when you talk about the semiconductor equipment type makers like the ASMLs of the world. And this is obviously why we have seen a reaction like we saw post-earnings. But can you keep it up? I mean, can we continue? I mean, I know you've thrown some numbers out there, particularly when you talk about AI workloads and the migration and the move to Web3 and the $1 trillion that, you know, it could potentially lead to, but I mean, how sustainable is this? Because, you know, Jackson Hole has also pointed to some of the constraints out there. I mean, there seems to be some worries around circularity of this financing, but more around the energy that's actually going to power all this stuff too.
Yeah, I mean, just to give you an idea, for every one chip NVIDIA has, there's 12 yours. So it's the supply constraint, which is the issue, it's not the demand. But to go back to that in terms of the overall market, and as aggressive I am at $1,000 a share and $1 trillion in revenue from NVIDIA, it's based on their products and their performance. I think investors have to be very careful about all those other stocks that do not have revenue or have negative PEs, and that's where you have to be careful. But in reference to NVIDIA, I'm a practitioner, as I mentioned to you before this discussion, and I see the value of NVIDIA. So if you want to talk about the data center, you must be wondering, how are they growing these numbers so fast? It's actually very simple. Anybody would do it, buy it all day long. When you put their chip in, it has 10 times more performance than a CPU. It costs 1/10 the amount, and it takes 1/10 the power and 1/10 the space. Who's not going to buy their chip all day long? And not only that, once you put it in, it actually drives AI, where you couldn't do that before with CPUs. So in terms of the data center, that's a layup. But really where the value is that has not been touched is in the physical AI space. We see a lot of generative AI, ChatGPT. We see the beginning of agentic AI, where you have an AI agent do work. That's only beginning, but it's starting to come. But in the physical AI space, what does that mean? That means where you create a digital twin of a building, and then you run it with AI in the digital twin. And generally, that's what I actually do. And we're getting 50% improvements. In addition to that, right now I'm looking at a pilot in Florida, where we're doing a road, where we're basically building a digital twin of the whole highway. And we're going to run it from the digital twin, which will create autonomous driving, which will create automatic detection of problems on the road. If you wouldn't believe this, but right now, they actually do most of those observations by sight. And if I remember correctly, the Titanic sunk in 1912 by looking at sight. We're here 100 years later, and most of the construction firms still are doing that by sight, believe it or not. So what does that mean? That means all the roads, the bridges, the tunnels are all going to be converting to Web3, and all going to need GPU chips, which means there's trillions of dollars of revenue potential for NVIDIA.
Okay, and everyone's talking about the ROI and obviously how companies are adopting AI, and I suppose that's the next big story. Thank you so much. We're going to leave it there. Thank you so much for joining us today. Phil Pinaro is the co-founder, I should say, CEO of BCG, Platinum at BCG, former founder and CEO. Thank you so much. Let's train it now. Tom White, host of Fast Market and executive trader for NVIDIA.com.
Yeah, maybe not as aggressive as your guest was there, but it's still a bullish outlook here in NVIDIA with this example trade that I got here. And it just takes advantage of, you know, we've seen great reports out of NVIDIA, but typically over the last few quarters, we might see a pop and then a sell-off a little bit. So I looked at a strategy that's a little bit more passive, a little bit more conservative, but still takes that bullish stance here. Going out to the December 5th weekly option. So 15 days to expiration. Got a couple weeks in this. And this is one of those strategies you can do over and over again. You just pick a strike where you think the stock's not going to go below over a specific duration. I looked at the December 5th weekly, the 185 strike put, selling that as a cash secured put, neutral to bullish. You're going to collect roughly about a 320 credit on it. Maybe about 350 right now. The stock has continued to pull back below 193 now. But the credit you collect is what you can make on this. So if you collect $320 per put that you sell. Where do you start getting hurt on a position like this is you go down to that break even of 180, 180 to the downside. So you've got a cushion of about 6%, nearly 6% before you start getting hurt on this trade. Now, you also have to look at this capital intensive, right? you can look at this two ways. I just want to keep that credit that I collected with the fact that I think it's going to stay above 185. Or that break even of 180, 180, or I'm willing to buy the shares if the stock continues to move lower, goes below 185. I get a sign on that put. I'm actually buying the shares at 180, 180 to the downside if I'm still short that put and it's below 185 at expiration over the next 15 days. So you've got to have a lot of capital on this type of strategy. But if, say, you put in $181.80 bid for the stock, you might not ever get filled on that. Here, at least you'll be able to profit if it doesn't fall below 185.
Okay, look at NVIDIA and example trade.
Hey, it's getting heavier.
That better-than-expected earnings report
Reversal
by
a
3.3%
little
in
bit.
trade by
Careful.
192 and change. Thanks so much for
On
that.
long side. Careful.
And let's just take a quick snapshot of where the market's at right now, because we have seen a nice broad-based rally on the back of this better-than-expected report from the darling NVIDIA, and obviously we did have jobs numbers out today, and probability of a potential for a 25 basis point rate hike.
Careful with all bullish.
Still below 50% as far as the watch call is concerned. We've got the S&P 500, 1.6% high. Thanks for joining me. We've got Trading 360 with Marley Kay coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we can rock it.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance. We're not saying they were changing enough yet.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way you're going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
We're 90 minutes into the trading day. Welcome to Trading 360. I'm Marley Caden coming to you live from the Chicago headquarters for Schwab Network. Here's what we have coming up in our show today. In our 360 round, we had our record-long government shutdown. We are going to finally take a look at the jobs data that we've got. It is from September. It is delayed, but we will highlight that in our 360 spotlight. Then for our disruptor, we'll be talking about Cisco after Cisco and IBM have announced a partnership to explore quantum computing. We'll break down that news and bring you an example trade. And then our big news of the day, our top story is NVIDIA. We'll discuss their earnings from yesterday and how the market is responding to them today in our 360 round. Let's take a look at where the markets are, though, as we are well into the trading day. This morning, we are in the green across the board, much of that thanks to NVIDIA and their earnings report. The S&P trading up 1.5% higher at 67.42.29. For the NASDAQ, we are a percent and a third higher, 25,070.50. On the Dow here, we're trading about 1.2%. That's at 46,702. We are up 563 points right now. For the Russell 2000, we are up a percent and a third, percent and three quarters as well here at 2389. On the 10-year down just slightly at 411, down about 0.4% right now. The dollar mostly unchanged, right around 111. Gold trading down about a third of a percent, 68.20. Crude oil up a percent, but still under that $60 a barrel mark. And Bitcoin is hovering just below that 90,000 threshold.
Just all the way back. Hey, look, first target right here.
So far this morning. I do want to welcome Alex Coffey and our first guest to the show today to talk about one of our top stories.
Like, give it and take it a little bit. Look at that.
Walmart having a really impressive report this morning. A bit of a different commentary.
Somehow just my money's gone.
That we've heard from, and it's why we're seeing
it's all right. Everything is all right. That's a loss, folks. Sometimes you got to loss. That's why I like the longest time frame. You got at least depends how you invest. If you're trying to invest, really. I like investing for a long time.
Up 6% here. Back near those highs as well, as you see. On the revenue front, never will it not shock you when you start reading the Walmart revenue numbers on a quarterly basis. Almost $180 billion and $179.5 billion ahead of the consensus of around $177. And remember, we're talking about a staple here, Marley. So typically not huge swings versus expectations. It's a pretty impressive beat. Quarter 3 U.S. comp sales up 4.5%. Healthy growth again for a stable company with this kind of scale. Really exciting investors today. They still say that e-commerce continues to be a bright spot. It's been a huge focus of the team at Walmart over the last decade. Really ramping up the last several years and continues to be a pretty nice growth driver. They did raise their adjusted EPS view for their fiscal year 2026 to 258 to 263. This is up from 252 to 262. So more of a narrowing towards the higher end of the range. They talked about revenue as well for the full year. 4.8% to 5.1% growth, which is pretty substantially up from the 375, 475 they had seen before. Then they also announced a change in their listing to the NASDAQ. That's sometimes interesting, but really not a huge impact.
Yeah, they'll still stay in the same ticker, just moving from NYSE to NASDAQ. But one thing that was really interesting to stuff out to me
I was thinking about something, so I don't know.
more affluent customer and how they
When I started getting distracted, I'll slow down my rhythm. I can't get too distracted. Let me stay. I gotta get to my, that's what.
One has to wonder if the omni-channel, the Walmart Plus, partnership with companies like American Express had changed that. You think about the
I'll play them one day, but you gotta train. You gotta practice and all that. I'm just not like mentally in the mood for it because there's lots been going on, man. Honestly, just lots been going on.
You can figure that store out, you get used to that experience, less likely to shift away, so a little bit of stickiness for Walmart as well, and of course just tremendous scale.
Yeah, I mean, just really incredible with their way their revenue came in, and if you look at the full year, it's
I mean, I'll play them eventually. We always have, like, when we start playing, we play a lot of games. They're going to be saved in history on chess.com.
I do want to talk more broadly, though, bringing in our next guest. We're going to talk about the Pubg Network. Pubg is a
and take a closer look at the markets as we're seeing them perform and more broadly and in more macro sense here. Joining us now, Brad Rapking, portfolio manager, equity analyst at Aptus Capital Advisors. Brad, thanks for being with us today. I'd love to get your thoughts on this rebound that we're seeing in the markets this morning.
It's been nice. Obviously, led a lot by the jitters going into the NVIDIA print, and they came in strong, and then great to see some positive news on consumer as well from Walmart.
Positive news from Walmart. We got that nice report from NVIDIA. There's been a lot of questions about this rally, and if the rally continues, if we were in some sort of meaningful pullback or correction here, or if we have the ability to keep this rally going through the end of the year. What are your thoughts there?
Yeah, I think history's shown. Give a shout out to Brian Dietrich at Carson Group. Had a great chart a couple weeks ago when markets are strong for the first 10 months of the year, you typically see those rallies continue through the end of the year, and that's kind of been the consensus on the Aptus side as well.
And so we're seeing some fatigue around the AI trade. We've been seeing it, it's been hitting for us, but now we've got NVIDIA. They came out with their blockbuster report, things looking great for them. Do you think that that's going to put some relief back in there? Are we going to have less of this AI bubble conversation, or have we made a meaningful rotation away from the AI trade?
I think we're probably in a bubble of people calling for bubbles. Not to be too facetious there, but I think there's probably always going to be a little bit of froth in newer technologies, and so pullbacks are healthy, and so wouldn't be surprised if you see any sort of healthy, what I would consider a healthy pullback, but it's nice to see NVIDIA kind of buck the trend and continue to show the underlying fundamental strength of their business and how that translates into AI.
And so in addition to NVIDIA being a story today, we also got the jobs numbers, albeit very delayed jobs numbers for September, but I'd love to get your thoughts and some takeaways from the report that we got and how it might influence the Fed going forward.
Yeah, it'll be interesting to see. I think that's been the shift in a lot of the commentary from just focusing more on the inflation side to the labor side. It was nice to see a positive number there, but that's been our take is, we think markets are, again, the path of least resistance is higher, but that labor side is really going to be the linchpin that hopefully continue to see a healthy consumer. And I think from our side, it might be more of a balanced labor market where not much job creation, but not much job loss on that side as well.
And I want to bring sort of Walmart into the conversation here while we're talking about the health of the consumer, because we got Walmart's report this morning. They're saying they saw growth across all income sectors, but particularly highlighting this upper half of the K-shaped economy, this affluent customer, the more high-income customer. They've really been holding up the spending. That's sort of the narrative that we've been getting from some of the other retailers. How sensitive do you think that particular cohort is to any weakening in the job market?
Yeah, I think there's obviously going to be some connection there, but we've also just seen this really positive wealth effect where stocks are near all-time highs, home prices are still hanging pretty strong. So this positive wealth effect, I think, can provide a little bit of slack, especially on the higher consumers.
And as far as your clients, what are you hearing from them? I keep hearing these themes of uncertainty. People are anxious. There's too many unknowns. What are the most common questions that you're getting?
Yeah, I think there's always going to be unknowns, and no one has a crystal ball to see exactly what's going to happen. And I think, not to pivot the conversation too much, but that's where our bailiwick is in the risk-managed ETF space, and how we use active market hedging to be able to kind of dampen down some of those concerns and help people remain invested. But again, most common questions I think you've already kind of alluded to is this AI trade going to continue, or is it starting to see some levels of exhaustion?
I'm glad you pivoted there, because we have seen this huge demand and uptick in appetite for options-based ETFs and actively traded ETFs. What do you think is driving the surge behind that demand?
Yeah, you're spot on. From our estimates, it's about $80 billion in the defined outcome space. And if you include some of the more active hedging areas, it's much bigger. I think my take is 2022 was kind of a wake-up call where we saw this really 30-40-year period where bonds served as this great diversifier for portfolios, but also positive real returns.
And when you have 2022 where returns really struggled and they didn't diversify portfolios, people start to try to think of other ways to be able to do that. And option-based ETFs, I think, are a natural way to pivot for portfolios.
So as that move from traditional bonds in 22 not offering the protection that they had traditionally provided reshaped investor behavior, sort of driving people towards this options-based ETF, what would you highlight as some of the primary uses for options-based ETFs for people who are less familiar with them?
I think we highlight and really narrow it down to three different ways that they can kind of be used. One, to manage downside risk. I think we've seen, obviously, the buffered space that's really been a popular avenue. And then a lot of it is based on improving yield or income. The income products have really exploded the last few years. And then the third way is just to maybe enhance or leverage, add leveraged exposure to your asset allocation.
And as far as those three that you just highlighted, which one do you think has the most traction right now?
Well, I think, I don't really particularly care for it, but I think the yield and income space has really grown. And our take is, they can certainly have a place, but when you're selling upside for potential income or for premiums to begin with, you're going to impact long-term compounded returns.
So if an investor wants to compare a defined outcome ETF strategy with an active option strategy, how would they think about that, in terms of timing risk and flexibility and potential profitability?
That's our take. There's obviously been a lot of growth in the defined outcome space, and it can be tough as an allocator or as an advisor to say, all right, well, my client is putting in money at various times throughout the quarter, throughout the year, and having to figure out which defined outcome ETF to use. Can just be taking a lot of time and can make your book of business a little bit less clean than what you'd like. We like and prefer active strategies that have a track record of success and actively managing through different market environments and taking away that past dependency or that time risk that we alluded to there.
And what advantage does an active strategy give in terms of a lot of volatility we've seen, and also like the tail risk environment that we're sort of in right now?
Yeah, exactly. I think that the active strategies are able to reset the sticks much quicker and monetize. So this year is a great example where if you're buying a set and forget it type strategy at the end of April, or probably at the end of March, you had this drawdown in the first part of April, and those strategies couldn't monetize. They had to sit on their hands and wait, whereas if you have an active strategy, they can monetize some of those hedges, roll out, and take some of those proceeds and invest it back into equities, and that's proven to be fruitful with the recovery we've seen.
Brad, we appreciate you taking the time to talk ETF strategy with us and also more broadly look at the markets. That's Brad Rapking from Asset Capital Advisors. And we've got plenty more to come today on Trading 360. Next, of course, we've got the big three. Three stocks, three charts, three trades. Ricky Pat will take us through the technicals, and Charles Moon will join us for the trades for Oracle, Carvana, and Western Digital. That's next on Trading 360 on Schwab Network.
markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, opening bell live at the NYSE right when it counts.
Believe me, when it comes to investing, you'll love Carl's way. Take a left here, please. But there's a Carl's way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Hayden. It's time now for the big three. We've got three stocks, three charts, three trades. Rick Ducat, of course, joining us to take us through the charts. And here to take us through the trades today, Charles Moon, stock strategist at Prosper Trading Academy. Great to have you both with us this morning. Charles, I'd love to get your thoughts on the market action we're seeing on the heels of NVIDIA's report. You know, a lot of green still across the board this morning.
Yeah, and you can see a lot really dependent on how NVIDIA is going to report. The AI growth story has been unraveling over the last few weeks. Stocks with the stocks that are tied to, AI, either development, data center, energy. They've all just are so far off their highs on these deep retracements. And so, this was causing a concern of valuation. Well, NVIDIA kind of eased those concerns with a very strong earnings report and says that the growth story is still in the picture, and a lot of these stocks are responsibly up. So, this was one of the first, I would say, kind of easing of concerns in the markets. Now, we're still in a risk-off kind of trend to the downside here. The overall markets are still struggling for gains. There's been some outliers. Google's been one of them that has been really, really strong as of late, but this is really going to be dependent on how NVIDIA's performance is going to be over the next week or so coming off this earnings report.
All right, so let's move to your first pick today. They are definitely one of the stocks we've seen pull back recently, just in the last month, down 18.5%. We're talking about Oracle here. Walk us through this one.
Yeah, so Oracle, it's struggled for gains after that extremely robust earnings report. They've been working lower. They actually came down and filled the gap, which was the closing price of the day before the earnings, and it traded lower below that level. So, it's not as if the market doesn't quite believe what their future revenue and booking revenue is going to be, but the market does have some doubt if it's going to be truly achievable because of the power aspect. But it looks like now Wall Street's starting to step in near this 200-day moving average. So today I was actually looking to see how it was going to trade around a very critical price, which is this 230 level. They found no buyers. The buyers that did come in got absolutely run over. So now I'm pivoting down towards this 210 level, which is right near this 200-day moving average. This seems to be kind of the threshold, the line in the sand that Wall Street's starting to put down. And if they can stay above this level, I like the reversion right back to around 225, 230. Ultimately, though, I do think this stock will get some legs if this market does rally towards the end of the year. Historically, we do have that Santa Claus rally in the picture. Even after a very, very big up year like we've had this year. So if we get towards that 245, then the price action there is going to be really interesting, because that's kind of that threshold where I'm expecting Oracle to try and make this make or break moment. There could be some resistance at 260, but ultimately I see it reverting back as high as 275 in the near term.
All right, Rick, so if we take a look at some of those levels here, 210 to the potential downside for a pivot, 260, 275 to the upside. What are the technicals showing us?
Right, 210 matches up right here with our recent low point that we established here. Also, it was kind of a consolidated area back here. Our green line here, I highlighted more specifically 217 because to me that looked like the high points, the subsequent low points, and about we hit lows once more. So the same general areas, though, is what I'm trying to emphasize there. So now we can see that we've had a little bit of a bounce off of that area. We have broken out to the upside from our falling wedge type shape. And, really, that 260 level, once again, very close. 257 to me was around where we had our best closes. That's about where we had our breakdown point as well. So that same general area, 260, is perhaps where you might be looking looking for resistance, there's not really a whole lot of clear signs of near-term resistance to look out for until we hit that point. So when we do look at some of our other studies here, our moving averages, purple 250 2-day exponential moving average, that one lines up pretty closely with where we saw prices bottom out recently here. The next moving average to be on the lookout for here, 21-day EMA comes in at 243 or so. Prices below our two shorter-term moving averages, they are trending downward here, so a close above those levels would be what the bulls will be looking for. RSI also improving somewhat. We are out of the oversold area. We've also broken above our downward sloping red trend line there, so a bit more positive developments as well. Today's candle not the most encouraging, though. We are significantly off those opening highs that we saw here, but the day is still fairly young. So finally, when we look at our volume profile study here, we can see that we have a volume node right around here that lines up with our -1 standard deviation channel and our 250 2-day EMA. Volume really starts to drop off once you get too far below 210. It picks up again down here near about 189, 190. So that could be a downside area to be on the lookout for if that was your area of interest. Up to the upside, on the road back up to that 260 level we mentioned, we topped out here in our volume profile point of control. That comes in near 233. So that would be another potential congestion area to work our way through. Things start to drop off once again in terms of trading activity above 250.
All right, so right now we're still trading at about 224, so kind of right in the middle of that range. Charles, let's move on to your next pick here. We're talking about Carvana. We saw them get a little boost yesterday after their CEO revealed their growth plan and their strategy going forward at a conference, saying he was comfortable with their predicted 40% growth rate. Are they right for a rebound here?
Yeah, and this is another one that's been kind of well defined at this 200-day simple moving average. Again, there's a lot of concerns about Carvana after CarMax's earnings and subsequent guidance. And, there's been a lot of chatter about, a high default rate with auto loans, but Carvana's really withstood a lot of this heavy-duty pressure that we've been seeing in a lot of growth stocks. And this is where it kind of stands out to me that they've been a pretty decent performer, or at least holding up a lot better than a lot of other names. And this is where I'm looking at a technical support level at 325. If I see buyers, because this has been a bit about the range where there's been some struggles, this 330, 325 level, where recently we've seen a lot of knockback in terms of pricing in Carvana. So they're able to actually now utilize this as short-term support. This could be a great pivot zone. Now, I'm not expecting huge explosive growth out of this stock, but I do like the idea for a snappy little buy to the upside, targeting around 347 to 350 in the near term. There is a gap fill at 353 that also could be attractive to buyers as an upside target. I don't think this is going to race all the way back to 375, 390, unless this market gets into some sort of sustainable rally. But I do want to see how it's going to interact. I want to see the price action here at 325. I see buyers step in and lift this price up. This could be a really buy low, sell high opportunity, low risk, pretty decent upside reward for the short-term trader.
All right, Rick, so a lot of levels mentioned there, potential support, move to the upside. What levels are sticking out to you?
Just to start with 350, like we were talking about that general point, that was a low point before we had a gap down. That would be the next area of interest here once we get beyond those highs. That looks like about 347 area too. So that would be the zone to watch out for. Never quite filled that gap. Also failed at breaking above our trend line so far today. The upper boundary of our two white lines here are downward sloping channel type shape. But if we were to go back a little further and look at some older levels here, 285 stands out. That was about where we had our high close, but that was about our breakout point, another test of that old level. That's where we bottomed out once more. So that really stands out as a noteworthy downside level to watch. But above that as well, 305, our darker green line, roughly where we kept topping out, bottomed out here, and then bottomed out multiple times more. And we did have one close below that, but even though we had that large green candle that was coincidentally the same place, 280, we touched on 285, the closing price managed to fight its way back up to that 305 305 level once again. So it's seeming like support for now has held on. We can see that we did top out at our 63-day EMA as well, right here near 340 or so, just below 340. So that would be another area to watch out for. But we also held on at our 21-day EMA so far near 327. RSI improving very modestly, still not a convincing breakout above the 50 level that separates bullish from bearish momentum, but getting closer, continuing to make very slight new relative highs as well. Also still a modest uptrend in play, corresponding with our much broader, longer-term downtrend here. So we'll see which one eventually wins out. That could be a further directional clue. When we do look at volume profile, the trading activity, we can see drops off below that 290 level or so. That's about where things really start to thin out. But if we were to look to the upside, our point of control, the heavy trading area, comes in around 340 to 350. So once again, this stands out as an important upside area. You can see the volume starts to drop off once you get above that level here. So that stands out once again.
Yeah, and right now trading just above that 325 level that Charles was highlighting. We're about 329, just under 329, about a penny under it right now. All right, your last pick, Western Digital, I just read a headline on. They got an upgrade, price target increase from B of A, raising their price target up to, I think, $197, so implying about a 25, 26% upside from where they currently are. You walk us through your outlook here.
Yeah, this has been, silently one of the stronger names in this segment. We've seen some really parabolic movement in SanDisk, SNDK. Micron, of course, has been a really standout name along with Seagate, but nobody really talks much about Western Digital. Well, we've seen Seagate and Micron really exhibit some short-term weakness a little bit more than what they have presented in the last month or so. SanDisk is absolutely getting smacked today, so we're seeing a lot of risk-off trading in this segment, but WDC is on watch. I was initially watching this 158 price level, but really this 150 is going to be critical. If they can maintain this price level, I do love the rebound aspect right back towards 170. Again, this is another one of those trades where I'm just looking for a short-term floor, really aggressive buyers to step in and looking for a general, buy low, sell high opportunity in a strong performing name. And ultimately, this is a low risk, high reward in a stock that's been an outlier in terms of performance this year. So this is really kind of getting at a critical point. Maybe this segment is going full risk off, just like we've seen a lot of other stocks related to AI segments. And this is going to be a very critical point at this 150. If they lose this level, it could certainly break down as low as 130 in the near term. But if they happen to hold this level, this is going to be a great dip to buy into.
All right, Rick, so as we take a look at the chart, does it appear they've got a shot to hold this level?
Anything's possible. I mean, and I would say it is encouraging that for the bulls, at least, that we've held on at this level near 150. That's where we've seen repeated low points. We had another area of interest here, these gold highs near about 137. That kind of stands out as well as where we saw our breakout point. But today's candle, not exactly the most positive for the bulls. We are off significantly from that opening high. We are on pace for a bearish engulfing candle, where today's large red candle is swallowing up the previous days. You would need downside follow through in the next session, though, after the close. So just kind of a grain of salt to consider if you were planning anything, based on that idea. We can see also the 21-day EMA, our yellow line here, lines up very closely with those recent lows near 155. So again, additional emphasis on that area. Our best close, 174.22, is the upside mark that stands out first, the most obvious area to beat. We are on the verge of breaking through our very short-term green trend line here. That's not even really a good trend line. I was just trying to connect the corresponding lows here, but we are making a new relative low below that point here. So look for a breakdown below that 50 midline here. Finally, when we can see our volume studies here, we are seeing a small accumulation of volume here around 155 or so. Not really too much else to work with until we get down here near 120. So in terms terms of volume, not terribly much help here. Often that's the case with stocks that are moving very fast, but we can see that our 150 area stands out once again. It's the site of our +1 standard deviation channel. So several technical factors converging in that same area here. Our +2 channel, upside boundary potentially 186.42 is a snapshot of right here in time for right now.
Yeah, and right now just slightly above that 150 level you highlighted at 150, 146. But year to date, Western Digital up more than 240%. Charles, we want to thank you for being with us today for Victory. That's Charles Moon from Prosper Trading Academy. And of course, Rick Ducat, our lead market technician here at Schwab Network. Thanks as always. Coming up next, we're going to spotlight the September jobs report. After the longest shutdown in history, we are finally getting some data coming out from the government. We'll take a look at how it's impacting the markets next.
Sometimes, you know, you could have done better.
So what do you eat?
Same goes for where you invest. Level up and invest smart with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, Options Corner, Futures Focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, on Schwab Network.
Yeah. But we need actual money though.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of the platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro foods and driving price actions from Fed policy to global growth to inflation prints and geopolitical risks. Smart, fast, and always live from Wall Street to Australia. Morning Trade Live, where markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
But everything's alright, everything's in the market. I got everything in the market like we're
Stay connected to what moves the markets. Download the Schwab Network app
Somebody's
and
making
stream
money while I'm sitting here
anytime,
trading
wherever
and
you are.
things is in place right now. Everything's alright. And the market's what's the market doing? Oh, it's pulling back. And the market pulled back a lot. Man, that's a lot. That's a lot. I mean, huge. Look at that, boy.
Joining us now to discuss further, Jeffrey Cleveland, the director
Coach
and
Ian.
economist at Hayden.
They're going through everything. Coach Ian. Coach Ian. They're going through everything. Oh.
19,000 jobs. We've got our 4.4% unemployment rate. It was better than expected, but what does today's report tell you about where the labor market is actually headed?
Well, Marley, I think there was a lot of hope that we would find clarity after the government reopened and we got more data. But the bad news is probably not. We'll still have a lot of the same debates ongoing. First and foremost, this is just September data. And last time I checked, it's almost Thanksgiving. So we're a bit behind. So it doesn't tell us a lot about what's going on in real time. We do think on the margin, the labor market probably softened since September. So I think that's something to keep in mind. We'd like to also look at the 3-month average of payroll growth. Right now, that's around 50 to 60,000 jobs per month, so a bit slower than the headline you see today. And I think the key reason that we focus on that is it tends to, for us, it means the unemployment rate is on a rising trajectory. So I think you see that if you just plot the unemployment rate, it's just moving up steadily from the cycle low of 3.4. And now we're at 4.4, and we do think we could be at 4.5 or 4.6 towards the end of the year and into next year. So yeah, those are some of the key highlights for me.
Let's talk about that 3-month average of payroll growth, because you're not the first person who's brought this up. if it's in that $50,000 to $60,000 range, that is well below the break even for what's considered a stable unemployment rate. How concerning is that number to you if we isolate it outside of the rest of the report?
Yeah, I mean, that's a big concern. Typically, payroll growth does not slow that much outside of a recession. There's been a couple of exceptions over history. Mid-1960s, I think early 1970s, and then the mid-1990s. So the slowdown, it is concerning. I think it's also interesting, a lot of pundits, commentators, analysts have said, hey, the unemployment rate, the break-even rate is now lower. This is possible. I'm not sure it's as low as they think. To us, it still means that the current 3-month average is probably a bit too low, and the tendency for the unemployment rate will be, instead of holding steady here, will be to rise a bit. So there's a lot of different commentary around that, though.
Certainly, and as you pointed out, this is old data. This is September. We're near in the end of November now. Now we know we won't get October. What we will get is some of October in November, but we won't get it until now, mid-December, and after the Fed's final policy meeting of the year. How is that going to impact the Fed moving forward? Because they will not get any up-to-date information ahead of making that decision.
Well, they'll have to rely on a lot of different things. Next week you get the Beige Book, for example, which collects a bunch of different business contacts and gives some sense on the labor market. I think they'll look at private sector data, so we can look at ADP, we can look at some stuff from Indeed, we'll be able to look at a few other things out there. And by doing that, I mean, our take, you can look at all of that stuff. I think it tells you that on the margin, the labor market has weakened since September. And I do think if I was a policymaker, that would make me a bit nervous. And given that the Fed funds rate is, I think, still elevated relative to the neutral policy setting, the bias should be to keep cutting rates. So I think that's how I would deal with the uncertainty. We can always find out later, maybe things will come out a bit better, and then that'll be great. But the question is, if there's that risk to the labor market, do you need to be 100 basis points above neutral on the policy setting? I think that's the way to frame it. I think we have enough information from government sources and from private sector data to say, no, we don't need to be that elevated. We can keep cutting rates.
And so even with the release of this data, we know how divided the Fed is right now from the Fed minutes that we got yesterday. But I'm taking a look at, the FedWatch tracker. We're only still at not even a coin's look, 40% saying we may ease, 60% saying no change. Knowing that we have those numbers on the back of the release of this data and the division within the Fed, what is your expectation for December?
I think rate cut is still very much on the table based on our outlook. Like I said, I think the question is, do you need to be, I would say, well above neutral, or do you want to get back closer to neutral? And you can do that by taking another step with another cut in December. I think that's right. I think yesterday the market was pricing only maybe a 25% chance of a cut. So the odds actually, Marley, have gotten a little more even, a little more 50-50. And that seems right to me. You have a committee, 19 people, 12 voters, so you have a lot of different views. Most of the Fed speakers that I've looked at in recent weeks have been, I think, more sanguine about where things are in terms of the labor market, more concerned
sorry about that, y'all. I called my mom.
And
I was talking to her for a little bit. I didn't abandon y'all chat. I'm actually watching y'all in the back, too, so don't y'all think I abandoned y'all, ever. Right here, chat. Yeah, I know this was a bunch of money right here. You see that? 1, 2. I mean, you see they coming.
December will certainly be interesting.
Y'all see that? Y'all see that they was coming.
Attention to the Fed speakers as we have in the.
You see how I had the trend? You see how I had the trend to a T, right?
Jeffrey, we appreciate you being with us to talk through this. That's Jeffrey
Right.
Cleveland, Director, Chief Economist
There you go,
at
man.
Regal. Coming up next,
We're trying to break down everything. It look like. All right, Coach in, y'all. Everybody get out. I'm about to get out of my stuff.
The company's announcing a partnership with IBM to explore quantum computing. Kevin Green will break down that news and give us an example trade next.
Stay connected to the markets in the Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network. anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets. Welcome in Nicole Petalides, host of Opening Bell and the Watch List here on Schwab Network. Nicole, good morning to you. We're about 2 hours into the trading day here. What's catching your eye so far this morning? Certainly lots of options.
But it really is. I mean, the most obvious would be NVIDIA knocking the cover off the ball, not only for this quarter, but also the outlook. Just Jensen Huang really quelling those concerns and investor fears about an AI bubble as he talks about the Blackwell chip and demand being off the charts. And you had Dan Ives talking about he expected them to beat handily, which they did, and now saying that it's a major validation moment for the AI revolution. So that has been put on the back burner for the brief moment. So people love AI again in tech, and that feels really good, at least for now, and particularly because the outlook was so good. So that brings a lot of good news. The other thing that really caught my eye was that it's not just the jobs report of 119,000 jobs added in that 7-week late September jobs report, but it was that revision for August down 33,000. And with that revision, of course, it was offset by the September number, but the number for and likelihood of the December rate cut did tick higher and went up to 37.1% from 24.7%. So we're back on the conversation of the possibility of this rate cut on December. So I think that's an important one. Walmart was optimistic, and that helped to lift, but every single sector was higher today. It's a great day. I'm just double checking to see. Well, now materials and industrials have turned red, but it just is a great day when people have 401ks and IRAs, and NVIDIA lifts all boats.
NVIDIA does lift all boats. A boat that is not lifting, though, despite better than expected earnings, Palo Alto Networks. They came out with a really strong report, but as I'm taking a look, they're down 5% today in an up market. Can you tell us what that's about?
Yeah, easily explained, and that is because not one but two acquisitions that are underway. And, you do have a top pick from Bank of America. They see this name here. Oh, I'm sorry, that was for NVIDIA. But the point is, people are still optimistic on Palo Alto because of what's going on with the company. I mean, they announced that they're acquiring CyberArk. That was in the summer, and that was a $25 billion deal in July. The board there at CyberArk has now okayed that deal. That's been approved, and that's likely to close in the second half of 2026. So that was a big deal there, and that's for identity security. When we think of Palo Alto, we're thinking cybersecurity. And the reason why, and I'll tell you about the quarter, which was great news. Revenue was up 15.5%. They raised the outlook on profit, raised the outlook on revenues, but now announcing another acquisition, and that's Chronosphere. And this is a cloud management company which will expand their AI tools and offerings. And so with that, that's a $3.35 billion total consideration with cash and also new equity, and that's also expected to close in the second half of 2026. So that announcement, obviously, as you well know, Marley, the acquirer often goes down. And so that's what's happening here. I mean, raising the annual forecast, the beat of 93 cents from the 89-cent estimate, that was clear. $2.5 billion. The estimate was $2.46 billion for the quarter. And as I mentioned, raising the outlook. So that's good news also for. And then I will leave you with the thought that, these online threats continue. They've become increasingly sophisticated. Companies are worried about cybersecurity, and this company continues to do everything as they're making these acquisitions to do AI offerings, have more security. So it seems that most folks would still say that it's in the right place at the right time. So right now it's at 189. It's off the recent highs of 223, but I see price targets from Goldman at 240 with a buy rating, D.A. Davidson 240, also a buy rating, and so on. And you do have UBS with a 220 target and a neutral rating. So those are all higher than where we are today.
Yeah, still bullish sentiment despite the fact that we are seeing this downward move on the heels of that announcement of that acquisition. Nicole, we appreciate you walking us through the report for Palo Alto Networks. And now it's time for the disruptors. Kevin Green, our senior markets correspondent, here with today's company. We're talking about Cisco. Kevin, Cisco and IBM just announced a quantum computing partnership. What can you tell us about that?
Yeah, we are seeing a little bit more optimism when it comes to the quantum space here with Cisco and IBM, really trying to come together when it comes to their own specializations in order to try and roll out a quantum computing system that could actually be viable for business applications over the next 5 years here. So it's leveraging IBM's talent when it comes to the fault-tolerant quantum processors here. That just really means that a qubit within their processor goes rogue for whatever reason, it's still able to compute and get to the right answer, if you will, and then also leveraging Cisco's quantum networking capabilities as well as their security capabilities here. So they are going to be combining forces in order to, once again, try to bring something that's viable to market over the next 5 years. And this has been a trend that we have seen in the quantum space. A lot of deals, a lot of mergers taking place, a lot of partnerships also taking place as well. And you could argue that IBM has been on the forefront of the quantum space here for the last 15, almost 20 years. I mean, obviously, a lot of people are talking about it over the last 6 months, but we've been working on this for a very long time. And Cisco also has some opportunities to leverage its own talents in order to expand their market share, potentially if something is brought to market that is going to actually fuel business optimism and enterprise spending here. So a very optimistic type of partnership. Let's see how this actually transpires over the next couple of months and if not years. But once again, just kind of showing that we're on to the next thing. AI is definitely front and center for right now. What's the next thing that can actually transform technology? It seems like a lot of these mega cap names as well as large cap names are looking towards quantum as that next best thing.
And Kevin, it's so interesting you point out the timeline. I feel like quantum computing has been something we've been aware of since we were children, but for you to say that they hope to have a full-scale network operational in the next 5 years feels like it might actually be here now. HSBC estimating quantum computing market could reach $65 billion by 2040, so certainly big potential here. But as we're looking at Cisco and looking to trade them, they are slightly positive on this news, but pretty neutral, but very close to their highs. They did hit a new high of 80.06. Knowing that we're trading near the top of their 52-week range, how would you structure an example trade here for Cisco?
Yeah, so if you're looking at the technology stocks, I mean, let's say over the last 30 minutes or so, we have seen them pull back here a tad bit. But if you're looking at Cisco, there's still front month implied volatility that's relatively elevated. And if you are bullish or even neutral on this name, you can actually look at a calendar call spread. So we're actually looking at the November 28th, $80 calls, buying those, and then selling the near term, the tomorrow's expiration, the 21st, the $80 calls there as well. Doing this for a debit of 50 cents. It's trading for around 45 cents, 40 cents as of right now. It has pulled back here a tad bit. But once again, this is for the stock to try to close at $80 if you are optimistic here. And then next week, it makes that long call position. Once the short option does expire, it makes it a lot cheaper in order to have some upside potential here. So risk defined, definitely. Neutral to bullish to the upside here. And just trying to leverage the IV structure within the options front in order to reduce the amount of premium rather than just buying a call outright here. So this is a neutral bullish trade. Let's see if it actually does pan out.
KG, we appreciate you being with us today for the Disruptors to talk through Cisco and their new partnership with IBM, as well as for that example trade. That's Kevin Green. And coming up next, we've got our 360 round. We are, of course, taking a look at NVIDIA. The company smashed earnings expectations yesterday. We'll see how it's shaping the markets today and what it tells us about the AI race. That's next.
You don't even know what words are. Like, you know, it's going
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I have a question for you. Sure. When did Granddad first start investing?
Granddad had an account
before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round. We'll bring in our panel to discuss NVIDIA. Joining us now, Hatem Diab, the managing partner at Gerber Kawasaki Wealth Investment Management, and Louis Kondratev, the trading associate at X Funds. Hatem, let's start with you. Your thoughts on this blockbuster report we got from NVIDIA yesterday afternoon?
Hey, good morning, Molly. I mean, it was fantastic. I don't think I've ever seen a company execute this well. I mean, yeah, they grew earnings 60%. They're printing a ton of cash. But for me, is guiding for 300 to 500 billion dollars in revenue over the next 2 years is really insane. I think the reality is all of us thought, or a lot of investors are thinking, that this AI is more of a bubble territory and kind of almost getting to the end. But NVIDIA has shown us that demand is just really, really strong and will continue to be for years to come.
And Louis, coming over to you, we saw the blow past these sky-high expectations. How does this quarter change the narrative that we've been seeing pivot a bit away from into this AI bubble territory? Are we looking at peak euphoria here, or did we get peak validation yesterday?
Yeah, so exactly. So we didn't see any economic data coming out of Washington, D.C. In October because of that shutdown. But I'm going to say that NVIDIA's earnings probably replaced them. That's my take. And the question was never, can they beat the estimates? It was, can they raise the forward guidance for Q4 and for the following year? And that's exactly what they did. You mentioned that $500 billion in pre-orders. They're selling out GPUs, the cloud GPUs. This company's on full steam ahead. I think the AI rally is just only going to continue, and we're still bullish long-term on NVIDIA.
And Hatem, what about this quarter gives you confidence and tells you that NVIDIA's business is still grounded in fundamentals and just not hype?
Well, first of all, they lost the China business and they still grew 60% year over year. So that tells you how well they execute. Two is really the margins. NVIDIA is running 74% margins. I think Jeff Bezos said a long time ago, your margins are my opportunity. And NVIDIA seems to be able to keep these margins because I don't think there's any other player in the space that can come close to how good their full stack is. So it's not just a GPU story, it's just really software, building, GPUs, and really the ability to iterate and innovate year after year. So if you're a data center trying to spend, I don't know, $5-10 billion or more, you're only going to NVIDIA and NVIDIA alone. So really that's why I think that the business is so resilient going forward.
And Louis, a lot of the sentiment that we were hearing yesterday when we were previewing the earnings was that it wasn't going to be so much about the numbers, but it was going to be about the guidance and if they could raise it and by how much. And that was really going to determine the response that we saw. They did obviously meaningfully perform well and meaningfully raise guidance. How meaningful is that $500 billion pre-order figure for Blackwell and Rubin?
Well, I think it's extremely meaningful. I mean, I think it's hard to make a bear case against NVIDIA right now. It's practically impossible. And I think the automotive revenue is something that we should really look at too right now because it only grew at 1% this past quarter, but I think it's an overshadowed and overlooked part of NVIDIA's business right now. You take a look at Waymo, Uber, Aurora, they're all using NVIDIA GPUs to train their AI models for autonomous driving. So if you're looking at NVIDIA, you're not only looking at these GPUs, but you're also bullish on autonomous driving, which we are. And if you are bullish on autonomous driving, then I think that NVIDIA has the opportunity to grow in this space a lot more than we're expecting.
And Hatem, I want to talk about some of these circular deals. We kept having these conversations about the circular nature of some of these AI deals coming into the earnings yesterday. NVIDIA certainly doing a lot of that, investing in these startups that are then ordering NVIDIA chips. How concerned should investors be that this is distorting demand, or if they should be concerned at all?
It's a fair concern, right? Like you don't want to be investing in your customers and have them just turn around and basically round trip in and buying more chips of you. But I think the question here is, how do you believe what Jensen says, which is the size of this AI trend is going to be X amount, so it's going to be several times bigger than currently is. And what the NVIDIA is doing by investing in these top players, they invest in the startups, they're investing in data centers, they're investing in design. What they're doing is really they're priming the pump, right? They're making sure they own the whole kind of infrastructure, they own the whole space, and what they're doing is they're helping these newer players really invest or at least build on the NVIDIA ecosystem so they can actually continue to be the main player. So for me, I think looking at these deals and knowing that a lot of these deals are actually financed by revenues actually is a positive, not a negative.
And Louis, last question to you. If you're a long-term investor watching NVIDIA, watching their performance, hearing these numbers, hearing their what do you do right now? Do you buy more? Do you hold tight? Do we start trimming?
Yeah, I think that's the question. We've been long-term bulls on NVIDIA, and we've been invested in NVIDIA for a while in our funds. But I think for recent investors, they should buckle up and get ready for a little more volatility. I think quarter by quarter, we're going to be keeping a close eye on NVIDIA.
You guys put something in the chat. Let me see if this is connected.
Almost holding up this economy. And I think you saw that this past month, we were down
Hey, say hi.
8%, and I think that dragged down the entire market as well. So if you're a short-term investor right now, I'd say hold on to your shares, but just look to the long term because that's where the real growth for NVIDIA is.
And Louis, I highly doubt that you were watching a board while you were talking just then, but you said to prepare for some volatility. And as you were talking, we watched NVIDIA turn into the red, now trading down about 0.25% after seeing some pretty substantial gains on the heels of their earnings. But I want to thank you both for being with us for our 360 round to talk about NVIDIA and their impressive earnings report that we saw yesterday afternoon. Tim Diab, managing partner at Gerber Kawasaki Wealth Investment Management, and Louis Kondratov, trading associate at X Fund. I also want to thank all of you for joining us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store. You can also tune in 24/7 on schwabnetwork.com. I'll be back with Market on Close with Sam Bottis at 3 Eastern, 2 Central. But Fast Market with Diane King Hall is coming up next. Stay with us.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange, and Wall Street is fading as we hit the launch hour, despite strong results from NVIDIA. That leading the fade after a pop out the gate off a better than expected quarter. What's wrong with Wall Street? We'll get into it shortly. The S&P 500 now lower by a little bit more than a third of a percent. Where's the weakness? You're seeing some weakness in industrials. That is followed by healthcare, but again, we're starting to see some pressure as well on information technology. Industrial information technology and materials leading the weakness now. Dow near the flat line, not above it. It is below it, off by less than 0.1%, or about 0.1% now on the nose. Nasdaq 100 lower by just shy of 0.5%. Again, we are starting to see a dent in NVIDIA, and that sometimes happens off the back of its quarterly results. Small caps right now, choppy as well, just below the flat line. Here's the roadmap for today's show. We'll look at example option strategies for Alphabet, Google, plus the team from Lifefolio will be along with new sentiment data on Ross Stores, and we have Intuit on our radar. It's got earnings out after the bell today. Now that we've got the roadmap for today's trading action, time to bring in my co-hosts and trading veterans. You've got Tom White in our Chicago studio, and Ken Hinks joining us live from the CBO with best cover from exchange to exchange and beyond. So we've been watching NVIDIA. NVIDIA started out higher off the back of its results. It beat expectations. The demand picture is there, but we are starting to see this fade. Revenue soared 62%. It's like, what more do you want? Tom, what's your take?
Yeah, Diane, I was in a good mood earlier. You know, I had some big headlines to talk about with stocks rallying. I believe the S&P 500 was up 1.75% at its high, now negative on the session. This is not good price action by any stretch of the imagination. You thought we'd get that lift from NVIDIA. Great report, great guidance. Some of the commentary from Jensen Huang kind of pushing back against that narrative that, you know, an AI bubble may be forming at this point. Ray Dalio came out this morning in an interview, said we're at 80% levels of a bubble, and Jensen Huang kind of pushed back against that narrative, and the market's not heeding the warning. Now, typically, or not typically, but historically over the last maybe 4 or 5 earnings events from NVIDIA, we'll get that initial pop a couple of times and then maybe sell off a little bit, or maybe a little bit of a sell-off. Maybe an exhaustion sell-off, but this isn't good price action at all. It's extremely bearish when you get a fall like we're seeing. NVIDIA down over 6% from its session high. So, yeah, it's the takeaway probably not positive, even though we got positive data, positive earnings. Walmart's earnings were good also. So, yeah, we just got to watch this, because going into the end of the week here, you know, it's just not a positive sentiment type of day when you get a big, massive reversal like that.
Yeah, that's a great point. And like to your point about the bubble, I mean, Jensen talked about this on the earnings call. He said, this is a quote, there's been a lot of talk about an AI bubble. From our vantage point, we see something very different. And he said, that's a reminder, NVIDIA is unlike any other accelerator. We excel at every phase of AI, from pre-trading and post-trading to inference.
How's everybody in the chat? Talk to me. I know I've been busy, distracted. Oh my God. But I hope y'all watching the market still. This is money.
And Jensen is not known to be like one of those CEOs who's, you know, just talking big talk just to talk it. Yeah, what's your take?
Get it right then. Get it right. Yeah. Yeah. Get it right. Yeah. Yeah. Tell them to send that bread, yeah.
The whips, the moves, the waves are bigger than normal because of where we are. Now, NVIDIA.
Yeah.
Things, right?
Nice.
Worried about NVIDIA delivering on the expectations.
Nice.
Across the board. We were also worried
My
about
man,
interest
boy.
rates and a Fed rate
Nice.
cut. Those odds are no higher. Now,
Yeah.
higher
Oh my God.
than
Look
they
at that.
were early this
That's
morning.
ridiculous.
27%.
That like truly ridiculous. Like
So that's close.
we were talking about this morning, or actually last night, but still, or whatever time it was. Like, come on, this is insane.
NVIDIA's
That's
earnings
insane.
show that we are not in a bubble and not in the late stages.
Let me see if I can find a recovery
That we got today, remember, it's September data
or a
that
bounce
we
or
got in
something.
October,
I did not.
shows that
I'm pulling for the bulls. I'm pulling for the bulls.
worries about inflation, and that should lead
Alright, hold
to
on.
a straight cut in December. But I think the swings are getting a little bigger, Diane. We were up. Those gap openings like we had this morning are usually.
Man, look at that though. Like, where all that come from? The volume is insane. Like, this is insane. Look at that. It's like 100 million points.
An up, down. Let's see where this market finishes the day and the week. I think will be very
All right, my
important.
bad.
These swings.
Like, that was truly amazing. That was probably one of the best puts ever.
I'm glad you mentioned the jobs report because we got that long overdue jobs report today. It showed the economy
I'm over
grew
here talking to my mom.
119,000 jobs. The unemployment rate did tick up to 4.4%. So it looks like a mixed picture there. But it also comes amid reports. We're seeing the Wall Street Journal report that there are thousands of layoffs coming at Verizon. And I think Kevin makes a good point about, the road ahead for interest rate, the path for interest rates from the Fed. It looks like we probably will, when you look at the CME Fed Watch tool, not get a cut come December. And so that's the question, I suppose, Tom, that seems to be the overhang. What's your take when you think about this jobs report that, to Kevin's point, it is September data?
Yeah, and it gave the markets an initial boost when it came out. I mean, better than expected. Now they did have revisions from the previous 2 months of a minus 33,000, so that kind of dug into maybe some of the gains here. But that unemployment rate ticking up to 4.4%, that's a concern. I know this is backward-looking numbers. I'd almost rather focus on the weekly jobless claims, which came in below expectations at 220,000 this for the week of November 14th or November 15th. So maybe that's indicative. This is lagging data, maybe a little bit of choppiness, in that September read here. But the unemployment rate going up a little bit, that's not a positive sign. Labor participation ticked up a little bit also in that number. But follow the weekly jobless claims. I think that's going to be a clearer picture of where we're at now. Wells Fargo coming out saying that we need a December rate cut. That doesn't change, what the Fed's thinking. We've had a lot of Fed speak recently, and a couple today, basically saying it's getting a little bit cloudy, that maybe we don't need a cut. We saw the FOMC minutes late yesterday afternoon. There's bifurcation on the decision of a rate cut in December, and those have fallen over the last month from 95% chance that we were going to get a cut to now below 40% that we're going to get a cut. So yeah, I just think this is cloudy. We're going to have to get more data moving forward, and we won't get that December or the November read on employment that's supposed to be combined with October until December 16th. So after the Fed meeting. So expectations right now, no rate cut, and you've heard a lot of Fed speakers say that they're not willing to cut in this type of environment.
Yeah, that's a good point, because you had the Cleveland Fed president, Beth Hammack, speaking today, saying, quote, this was in prepared remarks, lowering interest rates to support the labor market risk, prolonging this period of elevated inflation. It could also encourage risk-taking in financial markets. She also said that means that whenever the next downturn comes, it could be larger than it otherwise would have been. So it seems like there has been, some louder voices on one side of the coin when it comes to the Fed. And Kevin, you broke the weekly jobless claims number. So how do you take this all into perspective?
I just think that when you're looking at a labor market that's doing quite well, and for people that want to go out 2 decimal points, the unemployment rate was 4.44.
That's not getting any bullish volume right now.
And if
Like
that's
it's
not getting
very
the attention
subtle.
of
Like
the Fed, then this smooth landing that everyone talks about, they're going to get this wrong if they don't pay attention to the labor market. And the labor market should be driving. Remember, get a wages data, monthly wage data, 0.2. That is much lower than remember that leads, think
right
about
there,
0.2
though. But
times 12. That's a rate closer to 2.5 or 3% wage growth.
it's just
So
wild, bro.
inflation that's not caused by lower interest rates, it's caused by government spending and too much money being printed. That's what causes inflation. The Fed, it appears, is starting to lean very middle of the road on this, and they have a real fear of getting this wrong, Diane.
All right, let's dig into the retail sector. Walmart, those shares rallying. It did better than expected on both the top and bottom line. It was a beat and raise quarter. Consumers across income levels are talking there. They talk about, seeing more new customers there. That's interesting to me because I'm like,
I'm just switching time frame.
already. The shares rallying more than 6% right now. Tom, what's your take?
Yeah, initially when this report came out, good report. They raised guidance. The stock went down to about $98. We're up 6% now in the stock, just a couple percent off those all-time highs. But they said full-year net sales declined between 4.8 and 5.1%. That was up from 3.75 to 4.75. So good guidance there. The chief financial officer, CEO, came out and basically stated that they're seeing more affluent customers come into the mix. But this is one of those retailers that we talk about where, it used to be that they relied on the lower income consumer. And now that inflationary pressures are coming into fruition, that more of the higher end and middle class customers are starting to frequent Walmart. Well, I think it's also execution.
Ooh, that was a good shot. I see that chat.
The grocery side of
I
their
turned my
business, it's
camera
one
on
of those
that,
things
boy.
where it doesn't matter what bucket you're in.
Let's
You
get
need to
that
go to
shot
the
in,
grocery
boy.
store. They've expanded that. That's increased foot traffic. That's increased their e-commerce side of their business, which continues to grow pretty robustly. The advertising side of their business is actually growing also. So this kind of just maybe is reflective of, I mentioned that Atlanta Fed GDP now that continues to increase for this quarter, that the consumer's still out there spending. They're making choices. They're making, better choices as far as cost. And Walmart's in the crosshairs of that, and it continues to outperform and raising guidance, and sales way above expectations. I think they expected about $177 billion. They were up above $180 billion. So that was actually a positive, and the outlook's good, and the stock's not pulling back with the overall market on this pullback that we've seen either.
And that's the thing, Tom, to your point about grocery, like everyone needs to eat, and so for Walmart, its footprint in that segment is about 60% of revenue. So, they're going to continue to have demand there. When you think about its results, especially when you think about the retail sector this week, Kevin, what's your take?
I think what Walmart has done, how this business has evolved, and e-commerce sales up 27% year over year for this quarter. Think about this, Diane. They always had the best prices, right? They were always the most competitive when it comes to prices. But people didn't want to go in the stores. You know what part of their business is surging? Delivery of food is surging. So people can order from Walmart, get their prices, but not have to go in the store. That opens up a whole new sector of people that will now shop at Walmart. So I just think they continue to stay lean and agile, do new things. By the way, their advertising is just exploding as well. So this company, for the size and scale that they have, they continue to amaze me, Diane.
Yeah, that's a good point, because I will say that I often do their delivery now because it's just easier to do it that way versus going in the store. And Tom, you make a great point about how it moved earlier. I was surprised when it initially sold off a little bit off the back of this results because I'm like, what's not to like here? Let's talk about Block. Those shares moving higher and announced this $5 billion share buyback, or XYZ. That ticker business update here. Shares up about 2%. Tom, what's your take?
Yeah, and this comes a couple weeks after their earnings, which disappointed. They weren't good at all. So to come out and give not even a mid-quarter update, just like a post-earnings update, where they set some high bars. You mentioned the buyback on this one, but they said that annual gross profit growth through 2028 to be in the mid-teens. That was above what they stated prior to that. Income climbing about 30% annually. And, you know, I don't know if they gave a 3-year financial outlook, right? That's concerning to me because it seems like every time that this stock would get a little bit of traction, they'd have an earnings report, just like they did a few weeks ago, that was disappointing to investors. Jack Dorsey's kind of stayed out of the limelight here, but he was actually at the Analyst Day. They haven't had one since 2022. So this was a surprise, but I think more than anything, the 4.5% gains that we've seen this week were pulling back a little bit with the overall market. But at the same time, to give guidance that far out when you've had choppy earnings reports, a little bit dicey here. But the stock has underperformed. It was down over 30% before they came out with that announcement. It's made up some ground so far this week, but this is going to be, I think, one of those wait-and-see type of situations for this company.
Okay, you've got a few analysts boosting their price target on this one today. Off the back of this, Kevin, what's your take?
Yeah, Mizuho goes from $88 to $100. They maintain their outperform. I think this is XYZ a little frustrated with the price action in their stock. They think their company's doing better. They announced a $5 billion stock buyback. They kind of guided for the next quarter a little higher than expectations. So, this is a company, unfortunately, that has two different kinds of companies, and one is really tied to crypto. And so that crypto sell-off has probably affected XYZ, as that stock has always been somewhat correlated to crypto. So, watching that, it's just, this is one that, when this company started, with their ability for small businesses to use their products and their hardware, it was so impressive and so aspirational for the future. Then they get into Cash App, then they get into crypto, and it's kind of clouded what kind of company this is. But but these are certainly strong guidance levels going forward. Buying back their own stock, guiding higher numbers, man.
All right, shares up about a little more than 2% right now. Coming up, we got bull versus bear. The guys get their example trades put together for Alphabet. Google still has gained right now. It's been on the rise this week. We will have more fast market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with
market here on Schwab Network. There's Alphabet, Google working to extend their winning streak this week, holding on to this one gain right now. Today, the company announcing it's opening a new Taipei office that will be its biggest AI infrastructure engineering hub outside the U.S. It is also launching an update to its AI image generation tool, Nano Banana Pro, which is meant to deliver more accurate and legible text. Think about those images that you see and sometimes where the text looks weird in it. All right, let's put the trading glasses on. Welcome back in our co-hosts Tom White and Kevin Hinks. It is bull versus bear time. So before we get to your example trades, we got to talk about Alphabet Google, and it's been on this winning streak this week. It's off of the highs today, right? It is at a new all-time high, but now it's up less than 0.5%. Kevin, I'll start with you. Your take with how you think about this one today and this week in general.
Yeah, this stock went from unloved and underappreciated, and the news headlines were all negative, to now it's just glowing. It's the other end of the spectrum with Google Alphabet. Everything they do, they're doing well now. And, you talk about AI and people getting involved in AI. And, Google is the only company in all these AI companies that operate in every AI segment. Applications, language models, cloud, hardware. They're the only ones involved in all of them. Everyone thought search was going to get hurt by OpenAI, ChatGPT, and it's just not being hurt, right? And so they continue to get stronger, not to mention YouTube and Waymo and cloud and all the things that they do well as being almost a monopoly in search. And the moat, they just can't break through. Other people have tried. It's amazing now that the regulators are away from them, although they're never completely away. But this is a company that has gone from, we used to say on the show all the time, it's the cheapest of the Magnificent Seven. Well, look at the rally it's had last 6 months, up 71%. That is nothing short of amazing.
Yeah, a great take. Tom, it's starting to flatten out as we speak, which I'm sure is, listen, it gives some people opportunities, but probably frustrating for some. What's your take on Alphabet Google?
Yeah, that death of search, I think that's the big theme here. They kind of pushed back against that. They had search growth of nearly 15%. These are going back to growth levels that they saw a few years ago. Throwing cloud. Their cloud grew 34% year over year last earnings event. That was better than Microsoft's Azure. That was way better than Amazon's AWS, which actually grew at 20.2%. So they're beating their competitors. And then on top of it, you throw in Gemini 3 that was just released this week. It's getting rave reviews, and it's going up against ChatGPT 5, which had gotten mixed reviews. So they're doing better on that side of the business. Now they've integrated Gemini into their search business, so they're not losing market share there. They still have 90% of the market. Bing, I think, is about 4.3% market share in that search business. So they're not losing the stranglehold that they have in the core parts of their business, and then they continue to grow the other parts of their business even better. So was the stock a little bit overbought today? Yeah, on a technical basis, the RSI was above 70. Hit all-time highs after even the parabolic move that we've seen over the last 6 months or so, as Kevin mentioned. So yeah, pulling back here with the overall market, though.
All right, yes, indeed, it is starting to fade more with the overall weakness that we're seeing in the market. So let's get into it with the example trades. Kevin, let's start out with your approach.
Okay, so we have to acknowledge the rally that it's had lately. We have to acknowledge that it's touching overbought in terms of the RSI. If you go further, we all know that. So I don't want to be necessarily short this thing because the news flow is just so positive. But what I did, Diane, I went out, gave myself some time, and gave myself some room on the downside. So I went to the December 12th expiration. That gives me 22 days, 3 weeks of exposure. And what I did, I went out, looked at the expected move on December 12th, about $23. I went less than that. The stock has sold off a little bit, so I sold the 285, 275 put vertical. That was trading about $1.50. Now it's trading about $2.80. So I think this is probably one of those situations where you may want to move your strikes down and away from it, but selling an out of the money, high probability short put vertical that based on where we are right now isn't as far out of the money as it used to be, Diane.
Yeah, I'll go ahead and take it. Yeah, Kevin makes a good point. The stock's down 12% from its session highs, so maybe a little bit of redoing on the strikes may be warranted. But when he looked at this, he had a high probability of success on this one. But let's just break down what we have. 285 strike put in the December 12th options. Sell that, buy the 275 strike put, short $10 wide neutral to bullish put vertical. You could actually sell the 275.65 put vertical for more than $1.50 credit right now. So strike adjustment probably necessary, but you have to remember when you're putting these on. If you collect $1.50 credit on a spread, that's what you can make, right? $10 wide, you got $850 in risk. Kevin mentioned it's trading closer to 280 right now, so you'd be able to collect more. That would be less risk. It would take your break even down to 283.50 to the downside. So giving yourself better cushions on that one 285 strike. Now 61.5% probability of finishing it out of the money. The 275 put, that's about 73% chance of finishing out of the money. So strike selection may be warranted, especially after a $12 pullback from those all-time highs in here. But this is definitely neutral to bullish. Over the next 22 days, you expect it to remain above that break-even of 283.50 if you collect that much, about 284.60 or 282.60 if you're going to collect a little bit more on something like that. So take that into account, but it's neutral to bullish with better probabilities of success. Now, on the flip side, I looked at a bearish, neutral to bearish, but more passive, just like Kevin's is a passively bullish trade. This one's going to be passively bearish. Using the December 5th weekly options here, so giving myself a little less time. December 15th, or 15 days to expiration on the December 5th weekly options here. We're going to sell it out of the money call for pullback. Sell the 310 strike call, which was just out of the money to the upside earlier, now far out of the money. Sell the 310 call, buy the 320 strike call, short $10 wide call vertical, where I had 280 credit on here. That's where it was trading earlier, trading closer to 180. But you got a better probability of success because the stock pulled back from when I looked at it earlier. But if you collect 280 credit, you collected the credit you can collect is what you can make on it. $720 in risk if you collect 280 on this one, but that's all the way above the 320 strike, which would be fresh all-time highs. This one, Kevin, got a little less time on it, only 15 days to expiration versus your short put vertical. Your thoughts here on the short call vertical?
Yeah, the short put vertical looks worse. The short call vertical looks better because the stock is sold off $10 from its highs. So what I guess the lesson is we're both looking at more passive delta plays here in Google Alphabet, but your strikes have got to be kind of flexible in the way you use your strikes. But as we started this discussion, an hour or so ago, putting these trades in, both were high probability trades. Yours is a little higher now, mine's a little lower, but both can still be profitable. If it goes in between 285 and 310 at expiration, both of these could theoretically be profitable.
And you make a good point on those. As the probabilities go up that your vertical, whether it's the put side or the call side, the probabilities go up, the amount of credit that you collect goes down. So Kevin's credit on a short put vertical went up, and his probabilities went down on the short call vertical after the stock fell. Probabilities went way higher, but then
get some of them cigarettes, some Rolos, what they call
goes down on those also, Diane. So we use the same strategy.
I'm still locked in my long position where I have no dollars on me.
Neutral to bearish, one neutral to bullish.
Yeah, and interesting to see how Alphabet Google fluctuates throughout this hour. Again, it's still higher, but it is increasing its gain as we speak. So, as you all mentioned about, some of the targets that people may want to watch out for. So it's up right now about 0.8%. Thanks, guys. We got hashtags coming up. The theme from Lifefolio will be along with a look at Ross Stores. Still sticking with the retail detail. Stay right here on Schwab Network. We'll be back after the break.
Hi, I'm Alex.
I'm Jean.
And I'm his mom. Sometimes you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Lattis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. We're taking a look at Ross Stores. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of Likefolio. We've had a big focus on retail all this week. We've looked at Target, we've looked at Walmart. Now we're looking in the discount retail sector. TJX has strong numbers. I'm curious to know, when you look across your sentiment data, what it looks like for Ross Stores compared to others.
Yeah, I tell you what, we always talk about this sort of K-shaped economy, haves and have-nots, and you don't want to compete on price, but I tell you, Ross Stores is somewhat blowing that thesis up in that we're seeing higher-end shoppers sort of trade down. They've been on, the company's been on an absolute tear. They're trading basically at all-time highs, 162-ish. Last quarter, their sales were up 7%. Even though TJ Maxx is sort of the leader in this space, we are seeing, more people come to the stores. They're buying more per visit, and they've had quite a turnaround. I mean, performing really well. They've got, ladies apparel is actually becoming a growth leader. Their cosmetics is the strongest of all of them. They've improved access to closeout deals, so they're able to compete on price. And like I said, it's not just the lower income people or medium income. It's the higher income people who are struggling a little bit more. Things are a little tighter and they're trading down. And so very strong numbers out of Ross Stores so far this year, doing really well, kind of bucking the trend. Another thing that we saw that they talked about in their last earnings report was the tariff exposure is sort of easing, and they're expecting that to go away or at least normalize so that margins can come back, and they're not too worried about that. They just opened a couple of stores in Puerto Rico and more stores in the New York metro area, and all of those had strong openings, much stronger than expected, which just, lifts investors' expectations even more. So, when we're going into this earnings report, I think it's against a backdrop of pretty high expectations from investors. So it's going to be difficult, to reach those levels. I mean, again, you're talking about a stock that's trading at all-time highs, and the stock's doing well, obviously, but then all of the stores are performing strongly. So on this chart, we do have a bit of a divergence to the sort of the downside, where that blue line is our data, where the dotted line is the stock price. So we think the stock is probably running a little bit hotter than the data justifies. But also note that big spike on the left side of the data for the blue line, that's that's Christmas and seasonal shopping that hasn't quite started. It's beginning to ramp right now, but it hasn't been accounted for in this chart. So it's not a huge disparity from last year. We're still up on a I think it's about 12% year-over-year basis for the data that we have, but the stock is just outperforming. So, if it wasn't for the stock being at all-time highs, we'd be pretty bullish. But that tends to ease us back a little bit. So I think investors have very high expectations. I'm not sure if they're going to be able to meet them. We're not necessarily bearish, but it's definitely cooled the bullishness that we see from the data.
Yeah, Landon, that's kind of the chart that I was going to kind of highlight where, hey, the stock price is running up a little bit thicker than what you guys have as far as your data goes. But, you look at, it seems like they're executing along the same lines as TJX in this space. And now you throw in Walmart. Is that one of the things with Ross Stores? It's really inexpensive for this company to open up one of their stores compared to other retailers. Their margins are okay, but are the affluent consumers trending down towards Ross Stores just like they're doing into Walmart? Is that kind of what you look at as far as your data states that, hey, Ross Stores is doing good because, hey, in good times they're doing well, in bad times they can do well because people trade down?
Right, and that's not something frankly I would have expected, but yes, they mentioned this on their last earnings report, and so, we can dive into the data and read specific mentions on social media. We don't have an algorithm that can quantify it, but I can tell you that we've seen a lot of people talking about trying Ross Stores for the first time. It's a lot cheaper, there's a lot of great deals, that kind of thing. And when you look at the history of those accounts, it's obviously someone trading down. And so, yes, we have seen anecdotal or at least qualitative evidence of that happening on social media, and it's supported again by the company reporting the same. So I would have thought that that's not the case again with all the talk that we've had about the K-shaped economy, has and has-nots. They're actually sort of proving to be the exception that proves the rule, and they're a little bit immune to this. Apparently they're going to do well in the not so good times, and they're going to do well in the good times. So hats off to them and TJ Maxx for both being able to execute very well. Walmart as well. So now I think it's really just up to investors to gauge this and say, all right, obviously, when it comes to an investor, what you're doing is you're taking your dollars and you're competing you're buying one stock versus another, right? There's always a different investment that you can make. Now, you asked me an hour ago, and I think everybody would have said, hey, let's get into tech. Let's get into, let's be aggressive and get into growth stocks. And now, maybe not so much. And so they're competing with this more as a more safe play, if you will, because they're going to do well, they're going to weather the storm, they're going to do well in good and bad times. So I think that's the case for Ross Stores and TJX, those kind of companies. But when that changes and safe is no longer in vogue and maybe growth picks up again and Nvidia can lead the way higher, we'll see, then maybe that's not the case. And that's when I think people are going to evaluate, well, maybe this stock at all-time highs isn't justified. Yeah, the company's doing well, but are they going to give me the returns that some of these other companies who've sold off so much could potentially give me? So that's kind of what's going through investors' minds right now.
So, let me ask you this about why hasn't Ross, in terms of shares, performed as well from your perspective, especially because of, how you all analyze your earnings for, as well as TJX? Because I do hear your point about they're more affluent. Listen, I know Gail King has gone to Ross before, but is it a one-off thing when a higher income shopper goes there, and why the divergence between how those shares have performed compared to TJX?
Well, I mean, I think that they're doing well. Maybe not as well as TJX, obviously, but they're still doing well. They're pushing up to almost highs. For whatever reason, when we look at mind share, so that's the number of people looking at, talking about all of these sort of discount retailers, TJX is a very dominant player. I believe the stat was over 80% of mind share. So they just dominate this space, and I think Ross is just sort of beginning to trickle into that. And so then, and you can kind of see it in the data. I mean, TJX is up 11% on a year-over-year basis, whereas Ross is up 12%. That sounds like they're about the same, but TJX was higher a year ago, right? And so the fact that they still are increasing that lead, and this is comps year-over-year, so they've done a good job of growing and continuing to grow, whereas Ross is, just started, I think, down this path. But again, pushing up on these highs of 162, I think they're doing well. It's just, I think when it comes to consumers, when they think about saving a little bit of money in these stores, TJX is the first place that they think of at a very, very high rate, 4, maybe 5-to-1 ratio versus Ross stores. And I think that's where the lead comes from.
All right, thank you, Len. And that's Len Esquan, co-founder of Lightfolio with a look across Ross stores. Now, for the trading perspective of all things Ross, I'm going to yield the floor to you, Tom. We'll bring Kevin back in here. We got some good insights on, what the discount picture looks like. Your thoughts before we get to the example trade?
Yeah, if you look at their last earnings report, they barely beat estimates. They guided for only 2% same-store sales growth, and then they cut their current quarter EPS. So the stock's up $16 from last earnings, and I'm kind of shaking my head when I look at Lightfolio's data versus the stock price, which has really become bifurcated. So Kev, looking at that, their data, they still like the company, but it's at all-time highs. Option market's pricing in at about a $9.50 move either way. How do you want to look at this one?
Yeah, off-price retailers have done very well, but every note I read about this company, they're worried about the valuation, guys. And TJX, kind of similar business makeup to Ross stores, had pretty good earnings. The stock hadn't really been able to move higher, moved up a little bit on some, the 1-minute charts, and then it settled back in. So what I want to look at here is the expected move, about $9.50. And I just looked and I want to sell the 170, 175 call vertical. Now, it's very important to understand. The markets in Ross store, the bid ask for options, a bit wider than I'd like them to be. Liquidity is certainly an issue. I looked at this spread, it was looking at pricing about 130. It's now about 90 cents. So the markets are a bit wide, and so make sure you're doing price discovery on any spread that you might trade. But this is selling a short call vertical in line with the expected move, but be very careful. The markets are a bit wide, Tom.
Definitely some price discovery warranted on that, but let's break this one down. November 21st monthly option, so just 1 day at expiration. Earnings type example here Kevin brought us. And the reaction to TJX, where the stock went up and then sold off throughout the session, even though they beat pretty handily their earnings, this may set up for that type of price action if that happens in Ross stores. But selling the 170 call, buying the 175 call, short $5 wide, neutral to bears, call vertical, collecting, we got a $1.30 credit, trading closer to 90 cents now because the market has pulled Ross stores shares down. But the credit you collect is what you can profit on this one. So if you collect $1.30, that's what you can make on this with $370 in risk on that one. But that's all the way above the 175 level. On this one, I mentioned that $9.50 move, the option market's pricing in. Probability on that short 170 strike finishing on the money at expiration, which is what you want, right? You want this to go to zero. About 76%. So you've got better probabilities of success versus maybe having a little bit more risk on a trade like this. Even if you collect 90 cents on it, you still got about $410 in risk on it. You got more risk, but your probabilities of finishing on the money, that chance that you can profit on it, even if you're wrong, say the stock goes up to 168, 169, maybe 170, but sits there, but remains below the break even, just above 171, you can be profitable on this type of trade. So, Diane, this sets up a little bit maybe with Lightfolio's data, but not where the stock has gone. They're bifurcated here, and this is a neutral to bearish type of short call vertical.
All right, thank you, guys. We've got the breakdown coming up. We're taking a look at Intuit ahead of its results. Those come after the close of trading today. We will have more Fast Market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Money here on Schwab Network. I'm Diane King, all live on board the Big Four. Before we get to the breakdown, let me give you a check of your scorecard. Where the markets sit as we get closer to the bottom of this lunch hour, we are seeing more red on the board and pretty much at the close of the session. The S&P 500 off by just shy of 1% now, the opposite direction where we saw things move earlier, right at the open. The Dow right now lower by 0.8%. NASDAQ 100 off by almost 1.5%. A lot of red on the heat map. Many members of the MAX have been under pressure. Small caps under pressure as well today. So we've seen quite the reversal since this morning after those honestly strong and better than expected results from NVIDIA that has reversed course today. Not tax time, but it's time for Intuit to release its quarterly report card. That'll come after the close of trading. Wall Street is expecting the parent company of TurboTax to report earnings of $3.10 per share on an adjusted basis. The company also announcing some coming changes to its board. With that, it's time now for the breakdown. For that, we want to welcome in Sam Vadas, host of Morning Trade Live and co-host of Market on Close, taking a look at Intuit today. So the share is under a little bit of pressure at the moment. Yeah, it was higher earlier today.
Well, I mean, we've seen the whole market just sort of roll over. I think it's your fault, Diane.
I know.
You're going to say, let's get into it, because that's the sort of thing that you have to say. But let me run you through the expectations for the earnings that come later this afternoon. We've got NASDAQ estimates we're looking at. Adjusted EPS of $3.10 on revenues of $3.76 billion for this company, which is of course behind TurboTax, QuickBooks, Credit Karma, and also MailChimp. Let's just rewind the clock to last quarter and just to see what happened there, because it does give us an indication as to what we could be getting here as far as the setup. It was an EPS and revenue beat. On the surface, the report card actually looked good, but we did see a sell-off post-earnings, and there had been some of the concerns really brewing here about how they see things in the future. So we do want to very much get an update on that, particularly around MailChimp's growth and also TurboTax. Now, we do need to keep in mind here that Intuit does have a reputation of giving conservative guidance, so very much take note of that as we look at some of this accompanying commentary today. But as Diane just mentioned there as well, we have been learning of some boardroom movements here. So today announcing the appointment of Bill McDermott, the chairman and CEO of ServiceNow, and Adina Freeman, who is the chair and CEO over at the NASDAQ, to the board of directors, effective from August the 1st, which will come next year. And then also announcing that Sasan Goodarzi, which is of course the now becoming CEO and board chair and director, and also Vasant Prabhu will become the lead independent director come January the 22nd of next year. So this is going to be at the annual meeting of stockholders come 2026. So there's been a little bit of movement there of people coming in, people coming out. We've also got this OpenAI deal, which is super interesting. Yeah, so let's just dig into that. We've learned in the last couple of days as well. I think this is a really interesting part of the story, Diane, because when we look at the software sector as a whole, there has been a lot of concerns about, where stocks have really been, because they've been under pressure with the thinking here that AI is basically going to be posing a risk and a threat to their business. They've now reached a deal with OpenAI to integrate personal finance data into ChatGPT. We know that this is a trend within ChatGPT, that they are trying to become more of like this super app. But apps like TurboTax and also Credit Karma will be available within the ChatGPT app. This is a $100 million deal that we're talking about here. And
in my bedroom, in the back, pantry's about to open. I'm about to go over and get my food.
With respect to, what
this is gonna bounce, you can tell. Just hang it out right here. Wait for a bounce.
But yes, this company is adding AI capabilities. It's branded its Intuit Assist as well. So I think, this just is another example where we're seeing, these technology companies sort of partnering up with each other, to try to add more services, integrate these into the ChatGPT
I
platform.
like the idea of a super app, but at the same time, it gives you a little bit of qualms about, just the financial data. I'm sure there's, some protection that will be built in, but when you think about TurboTax and QuickBooks, that's where it makes me a little bit squeamish. Not completely, because I guess so many people,
That's right.
Already give a lot of information out there to the platforms. MailChimp, it makes sense, right? Because, that's sending mass emails, but, it makes me a little queasy, I think, when you think about the financial.
Yeah, it does, and I mean, this company has been quick to sort of come out and say that data will be protected, I think, obviously, because that is top of mind. So, it's going to be interesting to see how things move forward. I suppose it's a personal preference, isn't it? I mean, when you do have all these kinds of platforms integrated into one app. I mean, they're talking about also, being able to book your travel, etc. through OpenAI. But just getting back to Intuit, obviously, as far as what the analysts are thinking here, there is a view that this is a compelling long-term growth story within SaaS. There are some risks around, the worsening macro impact. I mean, it is very exposed to any sort of cyclical downturns as well as, reducing new customer additions, etc. But just overall, looking at the stock right now, I mean, we are actually down year to date to about 3%. But as I mentioned, I mean, it's been a tough old year, struggling for some of these software companies as well. But if I look across the analyst consensus here, I mean, it's a little bit of a mixed performance here. But I mean, you've got the bulk of people in a buy camp, a strong buy as well, and really just sitting on the fence here as well, with just one underperform rating.
Right, yeah, under pressure a little bit year over year, year to date, just a slim, just above the flat line. All right, thank you, Sam. That's Sam Gladys, host of Morning Trade Live and host of Market on Close. Let's get Tom and Kevin back in here. So, Tom, you have got the example trade into it. What's the approach you want to take before these earnings?
Yeah, the problem that we saw last quarter was that guidance that they gave. MailChimp kind of dragging a little bit on this company, and then Credit Karma not doing as well as they expected, but they expect that to kind of turn around. So there's different parts of this business which are going to negatively or positively impact these earnings. Growth is supposed to slow from 20% year over year on revenue last quarter to about 15%. So that might be what maybe investors are looked at. Historically, or at least over the last year, we've had some big moves post-earnings, so you've got to take that into consideration. But we've seen on the chart a lot of consolidation between about 640 on the downside and maybe just about 700 on the upside over the last couple of months since that last earnings event. So I looked at that, the option market pricing in a plus or minus $38.50 move either way in this stock, and that's basically a one-day move. Got to take that into consideration. So I looked at something neutral, where if you think this consolidation that we've seen in the stock is going to continue, this takes advantage of this higher implied volatility. So I looked at selling an iron condor as a neutral type of strategy as an example. Selling the out-of-the-money 695 call, buying the 700 strike call, so a short $5 white out-of-the-money call vertical in the November 21st monthly options that expire in one day. And then on the put side, selling the 625 put, buying the 620 put. Now, the stock has pulled back from where it was trading earlier, so you might want to readjust some strikes on this one. But as an example, this is a neutral type strategy. Short $5 wide, neutral short iron condor. Collecting roughly about a 250 credit on it. Maybe collect about that. I think that's what it's trading right about now. So the credit you collect is what you can make. So you can make $250 if it stays between those break evens of 622.50 on the downside, 697.50 on the upside, with a $5 wide short iron condor. Collect $250, your risk is $250 per spread in risk on this neutral strategy, Kevin. So this type of strategy also just takes advantage of further consolidation while taking advantage of higher applied volatility, Kev.
Yeah, if you have a $38 move in either direction, that comes out to about $76. Your strikes are $70 wide. So you're a bit inside that, which means the credit's probably going to be a little bigger. These are pretty big premium options that you're having into it. So the credit, $250, that's a bit more than normal. You're a little bit inside the move on the put side. So that might be why you're getting a pretty fair credit here. Obviously, you're looking for a move inside those strikes. About $35 on in each side is where you can handle. Probably a little less on the downside, but yeah, you're looking for a range-bound trader, Tom.
Yeah, about the same price if you go down like maybe $5 on the short put side also. But the idea on this is earnings come out, the stock consolidates, stays between those break-evens that I mentioned. On this one, just below 623 and just above 697. And then the price of this short iron condor collapses where you can maybe buy it back cheaper, let it go out worthless. That would be ideal. But you've got to make sure that it stays between those break-evens on this. But Diane, neutral strategy, there's not only bullish and bearish, it's also neutral, and you want some further consolidation in Intuit post-earnings.
I feel like you may need those kind of strategies more and more right now. All right, guys, we got a lot of red on the board. We'll see if this holds up throughout the rest of today's session. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hinkson, Tom White. Download the Schwab Network app. It's in the App Store. Tune in 24/7 on SchwabNetwork.com. Stay with us. You've got Next Gen with Jenny Horn and Alex Coffey coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news.
Let me straighten out these lines on my chestnut, because that's some wonderful information you just provided.
Break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Slot insights, actionable data, major traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, anytime, anywhere, free. SchwabNetwork.com.
Sorry about that if this is loud. I'm still streaming. And a little bit behind. I've just been behind all day. It's a big jet lag. Well, I already had told them this is bullish though. This is at support. You know, it's clearly in a web of support. So I would say they are done going down a million here. Yeah. Let's see how my other position is doing. Because that actually was a great shot. Let's see how far it is. Nope, not good enough. It's another pullback. We're going to have to keep loading the boat on this one, boy. We're going to get rid of this one.
Watching anything interesting?
Yeah, the market. Hell yeah, the market. There's money everywhere. You talking about round it? You talking about get that bullshit off the, you talking about the round down shit. Get that bullshit you talking about off the damn TV. Over letting the TV break and stuff. Get that bullshit off that, whatever mommy watching, put it on the market. I ain't watching nothing. Put it on that market, bro. So I would be saying,
So I have a question for you, but I want to give some numbers and things that kind of changed just intraday just to kind of set this up. So at one point today we were up about 120 S&P points, which is basically 2%. At that time, the Magnificent Seven, as a kind of, if you were to index that group into one kind of symbol, it was up like 3%, accounting for about 60 of those S&P points. Which are now down about 3/4%. The S&P 500 is down about 0.8%. You mentioned NVIDIA. At one point, NVIDIA was trading closer to 196. It's sub 184 now. When we were near the highs, we were upwards of 90% of the S&P 500 higher. Had we have closed with that being the case, which maybe we turn around, that still is the case, it would have been as broad of a rally as we've seen really at any point over the last 3 months. That number is down to about 33% now. So, safe to say, the picture looks a lot different than it did just a few hours ago. So the question that I promised them, the big question in markets is AI a bubble? So, my question to you would be multiple choice. Does what has happened so far today make you feel better about that story, the same, or worse?
Better. Frankly, yeah, I listened to, I will say, not the most exciting news call from NVIDIA, but I listened to the call. I mean, you see these growth numbers. Everyone's concern last quarter was, data center revenue. It's all about the pace of growth. So you can see 60+%, staggering, but it's about the acceleration of a trend. NVIDIA has been one of our most consistent names, and somehow, even though it's gotten so massive, still being able to accelerate its sales growth. And I tend to focus on those individual components when you consider like the overall AI health.
I think that's an extremely rational approach. I will say, though, the emotional side of markets, I do wonder, not only was the stock rewarded, but the fact that it gave it all back and then some, if that scares the children, as they say, just a little bit here. And I guess my answer to that would be kind of the same. I think it's certainly preferred that the messaging and the numbers support continued growth, but you can't ignore, a $300+ billion reversal in market cap for NVIDIA, dragging things down. So to me, I kind of feel the same as I have, I guess, which is valuations are a little bit expensive. The market's had a really nice run, really now going on kind of 5 years post-COVID. But all that to be said, there is still a lot of real here. The numbers are real from NVIDIA. This is not a company, not to pick on Oklo, but Oklo is selling something that they might be. Palantir in many ways for a while was selling something they might be. They could become a lot of those things. But NVIDIA is that right now and potentially continues to be it. So there's a lot of real here, but it's really expensive. And so I look at it as, I think there's probably some asset price risk, but it isn't .com.
I completely agree. I think that that's actually a good way to put it, and I think that it's a better framing to say, maybe not better, because, there was they still gave no realized revenue from China. There was still, some areas of like margin, modest, modest, I'm talking, I have been deep into these numbers, but I do think that it just reaffirms more of the same, which is straight, yes, but then it also did silence, at least I thought this morning, some of the skeptics of the AI bubble fears, but then today, I feel like price, you can't argue with that right now.
Yeah, no, I think the reversal is notable. There's no hiding from it. It is what it is. What I will say, though, too, and this will build on your point, I think behind the scenes, there's been kind of worries that as the AMDs, as the Broadcoms, as some of these other, maybe even Intel, start to become slightly bigger players or start to close that gap a little bit, that the market share that NVIDIA has, or that strength, might wane. But what's happened, it seems, is NVIDIA's only secured that space more, but those names are now participating too. So you could almost look at it, I could see your point of the story is better. Now, what you want to pay for it, I don't know.
And well, I know we'll get into NVIDIA a bit more later on, but as far as its guidance and the earnings growth for this name, I mean, I can understand the case to be made from the bulls that its valuation actually is fairly justified given the expected growth and the delivered growth we've seen throughout this year. But I understand that right now the nature of this market is everything is considered expensive in AI.
I hate when I get the text a bunch of stuff to people because they text it too slow.
It's
like, what?
Enthusiasm or this sort of like buy the rumor, sell the news type event is just not enough to continue throughout the session. But we've seen NVIDIA shake off far worse headlines, and I mean it's just amazing today to see this not hold.
Well, we've had SoftBank recently sell NVIDIA shares, right? We've recently had, what was it, Peter Thiel, not the same level of SoftBank, but liquidate a little bit. It's starting to seem a little bit like maybe some of the longer term, maybe bigger money investors are starting to take some money off the table when it comes to a name like NVIDIA. And that's totally fine if the liquidity's there and there's a new buyer to step in. But there's certainly some, some exit, selling going on at the moment into the strength. And that's typically what happens when it's bigger money. Because if you've got a big position, it's hard to sell that into weakness, right? Like you're just going to make the sell-off worse. So oftentimes these bigger positions are offloaded into that strength because that's when people are excited and trying to buy, and that gives them an opportunity to actually get out of the position, knowing full well that they're probably not going to sell the top, but they got out when they could.
Yeah, and I do think that's also important. I feel like now this is also such an institutional read where there's, obviously things that go into day-to-day price that are just bigger than, of course, the average retail trader. I will say, I'm just curious of like right now some of the overall social aspect of what people make of this pullback. I think it's so interesting when people are like rooting against NVIDIA, rooting against AI, because are you rooting against the market?
Well, do you root against Alabama football after they had a nice run? Well, you do if you aren't an Alabama fan. So it just comes down to if you've been invested in NVIDIA and participated in this, you're going to have a different opinion about it than someone who missed out. And that's human nature.
That is also very true. I guess the winners, you tend to want some of the winners to fall.
The sad thing too, this is just the ugly truth. Social media today rewards obnoxiousness.
It does.
You're more likely to get the clicks, send the money for the clicks if you say something a little bit controversial.
That is absolutely correct, and unfortunately those are the people I'm tending to see right now across X. But we'll now focus a bit more on Walmart here to start off our show, as we'll dive more into NVIDIA later on. But right now, Walmart has actually been able to hang on to its 6% move, so it's not like everything is erasing its earlier strength. Walmart had some really strong financial performance. Revenue rose 6% year over year. Adjusted earnings also did come in above consensus. Net income rose 33%, and operating margins were consistent with a year ago at around 3.7%. Now, what was most notable is the fact that across their international sales were up almost 11%, but across comps right now, we're also seeing really strong numbers, even from Sam's Club to their international exposure, and even, some of the global growth for e-commerce was up 27%. That's its 7th consecutive quarter with 20% plus growth. And global ad revenue also rose 53%. Walmart Connect US was up another 33%. And they could say they saw U.S. delivery cost per order reduced by 40% for the 3rd straight quarter. So, this is amazing. They did also mention the fact that they are seeing right now the deliveries right now that were filled by stores rose about 70%, and 35% of those are under 3 hours, and they said that they can deliver in under 3 hours to 95% of the country, and that they're also serving a variety of cohorts. They typically tended to be more of the discounts, more of like the
lower end of the wage scale.
Yes, and then they mentioned over and over on this earnings call, we are really gaining traction with these affluent customers. I appreciate that, but I do also like that it gives a great read, I think, on broader America because of the fact that you have access to a Walmart. Apparently from delivery, if you 3 hours or less, 95% of the country, that's amazing.
Well, one has to wonder if some of that has to do with their efforts in e-commerce, the omni-channel aspects of it, and even partnerships with companies like Amex, where they have free Walmart Plus for Amex cardholders on some of the different ones, driving maybe the top end is Diane King Hall or Marley rather on Trading 360 was talking about that higher end of the top part of that steering them maybe towards Walmart. And the big thing is if you're a company like Walmart, the first couple times getting a more affluent consumer to shop there is way harder than the 10th or 11th, right? And it sounds like they're starting to get behavioral change. And look out above, perhaps, if you're Walmart. And what does that mean? Sending ripple effects. We've been talking about the struggles with Target. Maybe that's starting to show up in these type of metrics and these type of demo shifts.
Absolutely, and I think that it's been evidenced so much by, so many of the analysts I follow were saying, hey, basically watch comps in the back half this year, especially for retail or any discretionary exposed. It's not like comps have been, though, overall negative. We've seen really the haves and the have-nots. TJX positive comps, Walmart positive comps, Target, Lowe's, Home Depot, a bit more disappointment, although Lowe's was positive to their credit, but falling below expectations. So it's been a very mixed picture, which I think has also spoken to some of these moves, again, post-earnings, which I commend Walmart here hanging on to a 6% rally and saying that they are positioned well into this year as well as beyond. So our next name today is another name that is seeing a nice green shoot that is steady, at least as it stands. That's Block, which is rare that we get to say that Block is actually outperforming the overall market, but did give a positive update on Wednesday as they unveiled this 3-year financial outlook at their 2025 Investor Day. The company outlined a strategy that's focused on profitable growth, operating leverage, and projecting it will achieve the Rule of 40 in 2026 and sustain that metric now through 2028. So their long-term guidance highlights include gross profit, which is expected to rise in the mid-teens annually. Profitability is also on an adjusted operating income basis projected to rise 30% annually. Cash flows also right now continuing to grow. Right now they see that overall introducing a new non-GAAP cash flow measure, which is expected to raise roughly $4 billion or 25% of their gross profits by 2028. So all that being said, there's a lot of numbers to be enthusiastic about. This was a positive update though from their investor event on, hey, a more long-term outlook, which is encouraging.
Yeah, no doubt. And whenever there's numbers behind a move, it makes that move, to me, a lot more meaningful, especially these companies that have struggled. All that to be said, though, when you look at this particular company, it's kind of odd timing. I mean, they just had their earnings just a couple weeks ago. You would have thought that we'd gotten some of this messaging perhaps then, but holding back on some of it and recovering just a little bit, but still significantly lower than where it was in closed pre-earnings, which was about $6 higher, almost 10%. So let's get to Palo Alto Networks. We talked about chips and the importance there, but cybersecurity might be as important, if not more.
So I will say, this was a pretty strong before. I know we're down 6.5% here, but beat earnings expectations, but it seems like investors were more focused on these profitability concerns and aggressive spending rather than the headline revenue and earnings beats. So we did see GAAP net income fell about 5% year over year, even though revenues rose 16%. This does signal margin pressure, rising costs, which many say can be read as a bit of a flag when pursuing pretty aggressive growth expansion, which of course Palo Alto Networks is. CapEx also surged to $84 million. That was about 44% above expectations. The overshoot, though, combined with their shrinking net income, again raising some concern about the overall operational discipline. Now, also they've been announcing, the entire cybersecurity space has been on a acquisition spree. They did announce the $3.3 billion acquisition of Chronosphere at right now around 21 times its annual recurring revenue, and it's working on about a $25 billion CyberArk deal. So while those obviously could lead to long-term upside, there is some analyst commentary on the fact that near-term profitability as well as dilution could be factors that can weigh on price. So I think that cybersecurity is not going to go anywhere. If you believe in AI, you believe in cybersecurity, Palo Alto Networks is the most exposed of all these names. Platformization, though, has been expensive, and that's been a strategy that's been rewarded in the past, but then often criticized when the numbers perhaps don't necessarily meet expectations.
This is a long game play. Like they're probably pretty comfortable.
Oh, the target's right there.
Expected when you announce their surprise acquisition, 2%-ish of your market cap is what you're spending on it. I think your stock's going to get punched just a little bit for that. All that be said, it continues to build out that holistic offering. It's an AI play. They probably feel pretty comfortable about it, I would hope, given that they're going through with that. Last one, though, on our list here, Jenny, as we take a look, we're going to
Yeah.
WDC, another name in the red.
Another name in the red
Yeah.
substantially. And WDC has been part of this
Got to know.
broader memory strength where it has been just an absolute
I see it, bro.
for a lot of these names with, again, that hard
I see it.
exposure.
I just came here for that.
Still up about, I mean, 200 and plus, 223% roughly on the year, even with today's notable pullback in shares. And so it's interesting to see some of the fallout of these names that do have some exposure to NVIDIA. They're part of, obviously, the AI food chain.
I'm gonna keep one.
The innovate data
Keep
indicated
one
a
here.
buy rating
With the
on
rest
Western
here.
Digital today, raising its price target to $197 a share. And so
I just want to figure out my strike though first.
note really on the overall cybersecurity, not cybersecurity,
Yeah, don't
AI,
even matter, bro.
right now, overall tech is just seeing this plummet today.
I could just be throwing money out here,
Highlight
bro.
the fact that this is a name that has really continued to re-identify itself as one of these major leaders of AI. And I think this was a hugely optimistic note. Obviously, they're not being read at all to price today as we're down.
I want a little bit more conviction.
Yeah,
A little bit.
and you start to look at this.
Look, boy.
That's totally reversed here today.
I'm fucking impatient.
All that to be said, memory is so much more boom bust.
I know I'm
than
impatient.
other parts of the chip
I need this to actually go. Like right here, this will be well. This is the target, so this can also be a rejection right here. Right before they go. Yeah, they can go higher right there, but they can pull back or break through. Like I want to make sure because I like to be precise on everything.
Device solution, which is not as maybe critical to the AI story right now.
Pretty wicked candle though. Like a lot of these are.
Pretty wicked candle. Pretty wicked move this year. We're up 406% from off of lows in Western Digital, so it's been a clear winner to its credit.
I gotta put this on there.
Look at there at the top of our show today. Now coming up next, it's time to discuss two names ahead of earnings after the close today.
Yeah, I know. I missed that shit. I should have got it. I'm about to get. I might get some of this put now though. Yeah, I told you they might reject right here. You think so? Oh no, bro. Excuse me. Right here. Look at this rejection right here. And what's it? Oh, that's on me.
Stay connected to what moves markets. Download the Schwab Network app.
I am too, but this is insane right here though. Like this is a lot of power right here. Just like it was going up, but this is move my trend line. But right here this is like that's a lot. So I'm looking for a rejection right here, and some breaking down some of these supports. If this one get broken right here, this is gonna be like really ugly. So they need to figure out what's happening right now.
Schwab, a modern approach to wealth management.
Because the first target is back. I'm gonna tell you, it's back right here. Either this target or this target. They're gonna bounce upward from. Hey, let me see. Right, that was a pullback. So look at this trend on the longer time frame. Went up there, broke out. This is up here somewhere. That's from. I'm about to show you where this is from.
So Richie Cat, our chart master, here to help us make sense of some of the technicals. We will start off with a gap here, which has a variety brands. You have namesake Gap, you have Old Navy.
Oh, but it just comes out of nowhere.
It's been choppy though,
And
and I
the
wasn't
thing is,
seeing many losing years for Gap. All things considered, it's a
it
nice
affects
bounce off of
our money.
Yeah, I saw a nice rebound here from these low points that we saw in the sub 20 range here.
Oh, this is bullish right here. Look at that.
Grinding upward slower, more slowly than the bulls might like here. You could encompass our
That's
price
bullish as heck
action
at it.
between these two boundary lines here. We have a trend line going
But we gotta move all these lines, make new lines on here.
Most recently where we filled that gap near 2350 and seemingly for now have halted at that support
Right here,
level
though.
that's in line with our trend line here.
It can't be that precise, but it's super precise.
Here. So you can see just very moderately increasing highs.
All right, there you go.
Just as I said, grinding upward here.
All right, love you guys.
2507. So when we do look at some of our other studies here, we can see that our moving averages that we follow, yellow 21 day, 63 day,
kind of sort of, yeah.
52 day, they are not really diverging apart from each other anymore after our bounce. They are starting to stagnate. You can see the 21 day EMA.
Bro, what the heck is going on, bro?
Downside
And it's
level as well. It comes in near 2340, quite close to our low point that we identified earlier. RSI also breaking down somewhat here. You can see that our downward sloping trend line is still in play here. Our red line going across those highs. But our RSI indicator has dropped below its green trend line.
Bro, what the heck, bro? Look at this, bro. Just look at this.
Rewrite that story. That's something
What are
that
they gonna do
can
to me,
change
bro?
very dramatically depending on how those results come in. When we do
Look
look
at
at
this
our
delayed.
volume profile
Cam
study,
view. I'm looking
we
at
can
Cam
see
view's
that we
ass.
have a node
And it's like,
right
what
about
the heck?
here, lining up with our +1 standard deviation channel. That
I'm
comes
looking
in
at
just
Cam
below
view,
the
and I'm just
24
like,
level. So
what are they
it's
gonna
an
do to
important
Cam view?
area to clear if the bulls
What are they
want
gonna do to
test
me?
those old highs near 2507. We also
This is
have
not
a
looking good.
+2 standard deviation channel here at
Yeah,
2580.
I can look
To
up
the
here.
downside, our 63-day EMA.
But it's just like, what they gonna do to me right here?
That comes in around 2265. That seems like a downside area to be on the lookout for.
Yeah, and actually, I sort of buried the lead here. Somehow, Gap is actually still higher on the session by about 0.5%. So we've seen a lot of analyst news and momentum, at least as far as this earnings report. We'll obviously get more clarity on the financials, though, after the close today. But now,
Alright, check on Schwab. They ain't never talking about nothing.
Not as not even comparable to the
Oh, they get done falling on her?
Hey, I mean, there's always places with these green colors that are trying to really point themselves to the comeback.
Right here. I think they're gonna fall a little bit. Oh, fix. Right here.
Looking to sell December 5th weekly cycle. So it goes out just a little bit of time, gives the trader just a little bit more cushion than how this is structured, get a little bit further away from the current share price. It's a 23.2 short move vertical, so it's a $1 wide strike. We're talking about a $40 stock, so some of the
What'd you say? Say how you doing? Where your friends at too? Hey, where your friends at? I had to break over with this psycho girl that was manipulating me. Yeah.
Playing into, again, a lot of these similar prices we've seen. And of course today, hey, hanging on to a green day as it stands right now. But now looking at raw stores, if you're following the rhetoric that we're seeing this bargain hunting, treasure hunting type of consumer right now, we would say this could be a really strong report for raw stores. And it's much smaller than TJX, but it's also been a pretty nice performer this year.
Yes, the thing that stands out most immediately is if you were to backtrack and look at this green line here, around 158, 157. That's about where we topped out a couple times previously. That was our recent resistance area. But previously now, it's become a support area.
Bro, I need a couple dollars to get some damn Rellos, bro. This is stupid. I want to smoke and can't smoke.
Be on the lookout for a potential breach. Now that we have seen that resistance become new support. In terms of the actual new resistance levels to watch out for, 164 to 165 is about what we're seeing our
Alright, so you got this rejection right here. Like, just gotta be patient right here. right now.
high points that we established previously here. The price activity could describe as more of a rising wedge type shape here, with our two trend lines converging toward each other, but the steepness of the upper line is starting to moderate somewhat here, suggesting the pace of the gains is slowing down. We can also see that when reflected in our RSI study, our momentum indicator. We are still bullish. We are still above that 50-minute line. We're still in between both of these accompanying trend lines, one going up and one going down. Our 21-day exponential moving average, that comes in just below 160. So that could be another area that lines up quite closely with our trend line, pretty close as well to that 158 boundary that we mentioned earlier. If we were to start to break lower, there are a couple more notable low points here near 155. You can also see that that lines up with our orange 63-day EMA here. Finally, when we look at our volume profile study, we have some accumulation of volume here at these elevated levels near about 161, 160 or so. So the
Hey yo, Kiwi, you got some change, bro?
the upper end of that range is rather noteworthy. Look for that.
Gotta give me some cigarettes, bro.
Things start to go south. We can also see our +2 standard deviation channel runs at around 168. That could be an area to watch for potential resistance going forward. Remember though, that's just a snapshot for this moment in time. It will change as price continues to change going forward.
Okay, again, also up about 1% today, so bucking the overall market trend and hopefully easing off some of these lows we're seeing in real time. But appreciate it to Cat, our chart master, for all the technical help. And now as we do look through the trade, of course, raw stores for example purposes, I mean, it's been a really strong performer in the very difficult role right now of retail.
It has, this space though has favored the discounters, all things considered. You certainly could throw them off in that particular group, but neutral bullish strategy, very similar to what we look at in gas stores. Going out to December 5th again, doing that to give a little bit more flexibility here, maybe allow traders to select a little bit larger credit, but keep a similar strike. Looking at the 160, 157 and a half foot vertical. Looking for 30 cents for every dollar of risk. In this case, that's 75 cents credit. Max profit will be $75. On that max loss of 175, with the break even at 159.25. So really in both of these trades, Jenny, upside, great if it happens, but really sideways stability. Find buyers just slightly lower at worst, and you have a chance over the next couple weeks.
Hey, this is benefit from like the exact same type of move we saw in TJX. Like we're seeing, I mean, like the discount retail right now is faring a bit better. Obviously, that's more of a continuation of this trend when Ross and Ford today after the close. What we hear that for chart master today, now coming up next.
No, it's more time than nothing on this hit. Small place.
Stellar third quarter earnings report, but not enough to call shares. We're now down about 1%.
I went to the store with 50 pennies, bro. $1 bro. Seriously, bro. I don't even know how this even happened, bro. And then this other girl goes to me, they're about to get rid of the pennies. I said, no, they ain't. I still got pennies. Yeah, that's what she said. From Ohio. I said, bro, I have no relatives. And she said she don't have no TV or no relatives. And I'm saying, like, what is really going on?
Tailor trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 4
I can't keep a phone charged, bro. Like, I don't even know. I can do shit in this motherfucker. All over the place. Like, it's really bad. I don't even know how I got this way. It's probably falling, right? Let me see. Yeah, I saw the setup. I was just like, oh shit, let me just set this right here and move out the way. Because that's basically what it was. Oh, what? What? Yeah, I just don't understand everything. Because I need to be smoking.
I have a question for you.
Huh? I'm listening to a song too, though, bro. Let me pause my music. Oh, look at this call right here. It's bouncing right here in this spot.
After he passed away, the
This
torches
is
were
Bull's
passed to me,
Divergence right here, y'all.
and my advisor Jennifer, she was with me.
That look good, bro.
Working with the estate to
I actually still got some cue calls.
children, planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. It's now time for FOMO, and naturally we have to discuss NVIDIA, which I believe is our second day in a row discussing NVIDIA for FOMO because there's, a very good reason for that, the biggest company in the world. But today's move has been pretty staggering. Marley Caden, of course, joining us in studio here. It has been one of the strongest earnings reports from NVIDIA that I can remember in recent history.
Bro, where did all these stocks come from?
Down 1%, getting back all of our earlier strength.
Yes, we're seeing some seesawing here, and I think it's tied to this debate we had yesterday even about, is there an AI bubble? And I think there are still enough believers that we are in a bubble.
I'm about to use some of them next week.
All the guests that I spoke to on Trading 360 and everyone I've spoken to today about the earnings feels that this indicates
I can't do nothing right now.
clearly there are still naysayers out there powerful enough to be moving us.
I can't do shit. I'm about to go to bed.
We could be seeing that as well. But let's
I'm about to go to bed. Oh, yeah. Oh, yeah.
They don't as much as 5%. Like you said, they've given up those gains. They're now down about 1%. They beat Wall Street expectations. And they beat them really pretty easily. Provided a really strong revenue
I had to show my ex-friend off yesterday, bro. F her, bro.
Demands for their next generation GPU.
You know who? That Steph weirdo. She tried to tell me that she was using me. I said, how you use me when you afraid, nigga? You're afraid to admit the worst, nigga. You fake. You faking the fake.
The CFO, it came from Collect Press. Blackwell Ultra is now our leading architecture
I got carved up so bad. She finally called me. Out of the little 4 years we've been together, this is the first time she ever called me now. And I didn't answer. Now what? What you gonna do? She already done give me that peace sign bullshit like everybody else. Every other girl do. Give you that peace sign, y'all. And make you say it's peace or whatever. Make you think it's peace or whatever. They can really. I got big basketballs. Right, I had to tell that girl. I got to her my friend yesterday. Ever since she was tripping the other day, bro. I'm just been back here trying to smoke and shit. I don't got nothing to smoke. Like, I don't even know how all this smoke out here with no runner. I'm like, really? I'm that retarded. I'm trying to help everybody else and still, like, well, I already thought I didn't have nobody to begin with, but, I don't know, bro. I'm about to just, I don't know. I guess I'm going to go up here with 150 pennies now and get another pack of Rellos. I'm just so annoyed, bro. Today is a more mellow annoyed, but when you say I'm right with you.
But just some really incredible commentary from Jensen Huang as well. Blackwell sales off the charts. Cloud GPUs are sold out. They're in demand. We don't have any. They are sold out. He also said we've entered a virtuous cycle of AI. The AI ecosystem is scaling fast with more new foundation model makers, more AI startups across more industries and in more countries. AI is going everywhere, doing everything all at once. And I think that in more countries part is an important part of this conversation too, because this is a global AI story. This is not just NVIDIA here. This is not a domestic play. We want them to beat by $500 billion. They did all of the things and then some that the street was asking for.
I mean, like data center, for example, those compute revenues rose 56% year over year, 27% in the last quarter. I mean, this is a company that is roughly, say, $5 trillion. These are huge growth numbers from NVIDIA. And I mean, I know that gross margin was, say, like 140 bits lower than it was a year ago. It did also improve 90 bits from last quarter. So I think that their improved mix, their cost structure, their supply chain management has been so brilliantly executed that I know that we're lower today and everyone's concerned. I still give all my kudos to NVIDIA and their small.
Yeah, this company, I think what you guys are both highlighting is what makes the market so fascinating, which is if you're a fundamental investor and you're looking at this and you're saying, what is there not to like here? But if you're like a technical, price-driven investor, you're saying, yeah, and it still wasn't good enough. That's what I think makes the market so interesting.
Yeah, and that's what we always say. I mean, hey, there's two different things looking at it, but I mean, at the end of the day, I can make the case all day long. And so, I mean, so the bar that this was a great report. Price matters. Look at the overall market. I mean, it pulled down the entire market right now. And I know we're only down about 1.5%, but definitely quantum really take some legs here in the overall AI and tech story. So we appreciate Dan King Hall for always giving us an insight on what is moving the market throughout the day. But now to shift gears and focus more on some 2026 hiring trends as well as what we're making of the, of course, September jobs report. Joining us now is Corey Staley, economist for Indeed. So Corey, thank you so much for being with us today. What a wild day has been in these markets, but to focus on a very critical component of the overall economic and Fed landscape is jobs. And so what really do you make now of some of the trends you're seeing for 2026 hiring?
Yeah, thanks for having me. It's good to be here. So, I mean, yeah, obviously the September jobs report, very much surprised to the upside today, almost twice what, a lot of analysts were expecting. Good news, on the backside, I think we also saw unemployment kind of pick up a little bit. We saw some maybe concerns in the household survey. But all in all, we see, the labor market, didn't fall off a cliff, right? Things are still pretty solid. We're still very much in this low hire, low fire type of environment. And as we look forward to 2026, we're starting to see kind of that trend looks like it's going to remain. What we did is we looked and we did a forecast based on the blue chip consensus forecast. And we found that a lot of the outlook for GDP, a lot of the consensus points towards a labor market looks a lot like it does right now in 2026.
So, Corey, if we take into account kind of the economic theory around the beverage curve and job openings and that inverse relationship with the unemployment rate, it seems like we're kind of at that flux point. And that's why maybe the Federal Reserve is a little bit uneasy, even though the numbers don't completely support that just yet. Do you think that's fair? From the data you guys track around job openings, is that still trending lower?
Yeah, I think that's fair. And I mean, I think a big piece of it, very much comes back to the fact that, we added, almost 120,000 jobs today, but we're still seeing that job openings are coming down over time. The labor market continues to cool, and they're about where they were back in 2021, right? So we're seeing the Indeed data showing that the labor market is continuing to soften. Even in the absence of these government reports, we've seen that job postings now at the end of October were only about 2% above where they were before the pandemic. So a lot of opportunities pulling back, and I think even more so, something we saw in the report today and something we're seeing in the Indeed report is that these gains are not being added equally, right? Healthcare continues to add a lot of the jobs, also continues to be a lot of the openings, right? And that spells, concern, for the workers who in tech, for instance, who are impacted by layoffs, and those people who aren't working, as nurses, right? So definitely kind of a gap forming right now in the types of opportunities available, and the way you're feeling as a worker right now is going to depend largely on the type of work it is that you're doing or where it is you live.
I want to get your thoughts on the fact that we did see roughly 1 million people lose this legal status in 2025. I mean, how we're seeing immigration trends in real time shape these jobs figures.
Certainly. I mean, really what this says to me is that what it means to be a good jobs report is actively changing from month to month, right? Because we start to see job gains shrinking, but we're also seeing the pool of labor shrinking in real time as well. So with that said, I mean, it's hard to exactly know, right? We have the million number here, but at the same time, it's really hard to know, okay, well, what would have happened in the absence of these policies hadn't changed? And so the real tell here is going to be the household numbers, keeping an eye on the unemployment, because we can't have a case where there's been a lot of discussion about new entrants into the labor market, recent grads having a hard time finding work, and yet we're also saying, well, a good job report doesn't necessarily need to be as high of a number. Those things can't necessarily play together completely well, right? So if we start to see a case where job numbers are coming down and unemployment is going up, that's still a bad sign, right? So keeping an eye on how households are feeling about the economy and experiencing is a key here.
Knowing that we're always just doing our best with the information that we have, you mentioned the word no fire, the phrase no fire, no hire at the top, and that's been sort of the phrase that's been used for the better part of the last couple of years to describe the labor market. Which side do you think drops the no first? We're going to see perhaps unemployment start to pick up, or are we going to see jobs growth start to pick up from your vantage point?
I think that's a great question. I mean, ultimately, right now, it seems like the pressure is much more cracking in terms of the no fire, right? We're starting to see the tech layoffs, has been something that, has happened, off and on over the last couple of years. starting to see some more kind of transportation retail layoffs, with UPS and Target and some of these different companies, that starts to hit a little bit differently, right? So I think that's a big key to keep an eye on here, and where we'll know that kind of no state has broken is once we start to see that spreading out, right? So right now, obviously, a lot of fears about layoffs, still pretty low. We hear these tens of thousands of job numbers, and we think that's huge, right? Like, I work with 20 people on my team. Tens of thousands is absolutely ginormous, but it's still a pretty small portion of the 160 million people. But at the same time, again, it's going to be interesting to keep an eye on, and I think that's where a lot of the pressure is right now.
Right. I think a really good point too, because that's always what I can expect when you see something of like 10, 15,000. Check the scale of the company to that confidence when I do context some of these numbers. Although 10,000 jobs still, of course, that's like a naturally as a U.S. worker, you tend to care about these numbers. So we so appreciate it. Really great reading what we're seeing as far as hiring trends. Royce Daly, columnist for Indeed. Now coming up next, we will discuss about a body work facing for its worst day in over 5 years, down about 25.5% as their overall turnaround strategy is not paying off, and we're seeing overall a failure to drive that growth going forward.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Nicole Petalini's live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m.
Platforms and Tools webcasts are designed to help you broaden your knowledge to platform features and resources available through Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
seen a bit, obviously, re-rate higher here. It was pretty much a buy the rumor, sell the news event. We did see aggressive buying early on this morning here in the poll, but at the end of the day, we did hit some key areas of resistance. The 20-day moving average for the S&P, the 50-day moving average as well. That's really started seeing buyers stepping in. Maybe some Fed commentary also a little bit more bearish when it comes to the market as well. And that's where we actually saw this pullback in the overall broader market. Now, one thing to kind of note, if you look at the 4-hour block that we just concluded for the E-mini S&P 500 futures, we traded the most volume that we've traded in that 4-hour block since pretty much April 7th, actually, since April 7th, which we kind of had those capitulation lows, if you will. So the volume is definitely in an upswing here if you're looking at the broader indexes just as a whole here. And unfortunately, we are seeing a lot of weakness when it comes to the S&P 500. Who knows, maybe this is going to be the bottom, or maybe this is the start of another wave to the downside. We will see over the next couple of days here. This usually does not stay at around this 30 level for too long, unless we do have an event like we saw back in April. So sometimes this actually does provide an opportunity, especially for those that are long-term investors. Maybe not on an intraday basis, but a long-term investor, you might actually be able to buy some stocks that you may see as value right now.
It's interesting because it was the AI trade anxiety, the AI bubble, coupled with everything else, you know, the Fed and what the Fed may or may not do. So I guess there's less of the AI worries and more just on economy and what happens next. I mean, what were your thoughts on NVIDIA?
Yeah, well, you know, Nicole, NVIDIA's earnings was phenomenal. Obviously, both beating both in the top bottom line. The guidance was actually really good as well. The commentary when it comes to Blackwell demand obviously provided a lot of enthusiasm. But that does not put at bay the concerns that the market had around AI. It was not so much the consumption or the demand for GPUs. It's the fact that we are seeing financing activity or the circular financing activity that is actually creating a little bit of a concern here. NVIDIA's earnings does not change that narrative at all. And I think the market now is kind of realizing that. Obviously, we did see a bid earlier this morning, but the concerns around some of these players like an Oracle still remains here. We did see revenue coming in at $57 billion. That's up 62% on a year-over-year basis. Once again, record data center revenue, seeing a 66% increase on a year-over-year basis. They did increase their guidance as well. And the commentary from Jensen Huang obviously has been very bullish. So this is a good report. Buy the rumor, sell the news. NVIDIA doesn't really do that well to the upside on earnings over the last year or so. So at the end of the day, treat it as a little bit of a normal type of rotation, at least for that particular stock. But I still think, obviously, there's other risk that does remain here, and the market's obviously realizing that right now.
And then you know, that's the whole thing. It's about that circular funding, the debt that could be accruing. And while some of our guests today said, look, you know, it's early, it's probably not a big deal now, but they wonder what happens next, you know, because it's sort of unprecedented. We never saw anybody doing something like this, funding the way that they're funding. And then with the jobs report, which came out as a surprise of 119,000, but that revision for August, minus 33,000, and then we're not going to get the next one until mid-December, which is after Fed Day.
Yeah, I mean, if you are somebody that's very optimistic about a rate cut in December, you actually wanted to see that revision for August, as you talked about, kind of revising down to the downside. Now, for the August decline, we lost 4,000 jobs there. The September number coming in at 119,000, obviously far exceeding the street's expectations of around 50 to 52,000 there. And you did see average hourly earnings actually coming in at an increase of 0.2% on a month-over-month basis. That's also an inflationary gauge as well, which if we do start to see that moderate a bit, that could also help us out on the CPI as well as the PCE front here. But as you talked about, a lot of volatility when it comes to these jobs reports, not only the upcoming one that we are going to get, but probably the next couple of them. We also had initial claims that came in, let's say, in line with the street's expectations. So from the labor standpoint, Nicole, if you're looking at the revisions, you're saying, yes, we are seeing some cracks in the market here. And I'm actually a little bit surprised that some Fed members didn't acknowledge that today, maybe change their tone when it comes to the rate cut in December. Hopefully, over the next couple of weeks, we might see that tone change if the ADP report also kind of confirms this particular trend.
All right, Kevin Green, great to see you. Thank you so much, because when we got that revision of August, that's when people started to bet more, and not 100%, that's for sure. It went from the likelihood of a rate cut went from 24% change to 37%, and I haven't checked in the last few minutes. Anyhow, that did at least give a boost to the idea of a rate cut, but still, it's really very much up in the air. And let's ask Brian Dietrich. market strategist at Carson Group. What are your thoughts on whether or not the Fed may cut or should cut?
Boy, what a day. When you guys invited me to come on yesterday, I didn't expect this.
Right.
Listen, again, thanks for having me back. We do think they should be cutting. You guys just had a great conversation right before I came on. There are signs the labor market is cracking a little bit, not falling off a ledge. And we look at inflation, the most recent data that we had before the government shutdown showed that shelter was coming back. We know that private data with used cars are coming back. Rents year over year with Zillow is like negative 2.6%, one of the lowest we've seen in a while. So I'm not saying inflation is perfect. We just think when you look at it, the Fed should be cutting, but hey, it's not my job or our jobs to complain or talk about what the Fed should do. It's what are they going to do? And those Fed fund futures, like you were just talking about, continue to say the chance of a cut this December is not as likely as it was this time a week ago. Obviously, that's why the market's throwing a fit. One more thing. I don't know if history repeats itself, it often rhymes. Mark Twain, December 2018, we had that near bear market when the market threw a big fit because the Fed became a little too hawkish. Then the Fed did change their tune. I don't think we're going to go down that much, but it feels like we're in a kind of world like that where the market's throwing a fit, and once it's rate cuts, it's not getting it.
Right, understood. I mean, that 2018 December was terrible. That really went bad news. So, maybe the Fed remembers that if they were too hawkish at that time, and they should take that into account, perhaps. We know that the president, of course, is pushing for more cuts. What do you say between now and the end of the year? Are you seeing, optimism, more tailwinds, headwinds?
Well, we're not seeing a lot of optimism, and I think that's pretty good from that contrarian point of view. You look at different sentiment polls, a lot of fear out there. You guys just talked about the VIX before I came on. I mean, the VIX was down almost 4 points early this morning, imploding, and now it's soaring. I need to look into the data, but this is probably one of the bigger moves from the bottom to the top of the day on the VIX. VIX up above 30, kind of where we are in this I'll still call it the bull market, right? We're down, I think, 4.8% on the S&P from the recent high, so almost 5%. I think it's really important to remember on average, and no such thing as average, but still, 4 times a year, 3 to 4 times a year, you see about a 5% peak to trough correction. Is only the second one this year. And I know we had a near bear market in April, Nicole, but we like the fact that there is a lot of fear coming in, that VIX is spiking. We know the economy's solid. I mean, this earnings season was really good. Well, everything NVIDIA had to say was all in all pretty darn good. It's just the market is obviously upset about the lack of a Fed cut here, but we're still pretty optimistic we're going to have some type of a low here probably next week or so, and still think we're going to have still think Santa's coming to town. Maybe I'll put it that way.
All right, well, we have to see. I mean, in the meantime, the seasonal trends, let's talk about that, because generally November, December, you start to see some good news, even if you had a good run up to this point, that continues, possible Santa Claus rally. What do you think about the seasonality, and what kind of names could work maybe in the short term, whether it's a sector or a name?
Yeah, we're optimistic. I mean, one thing to think about, when you're up 10% for the year going into November, like we were clearly this year, the last 16 times, November and December, so those 2 months combined, were higher. When you're up 15%, like we were this time, for the year going into the last 2 months, the last 2 months have been higher like 21 out of the last 22 times. And I get it. We know what's happening right now. I think after a 6-month rally in the S&P, 7-month rally on NASDAQ, obviously AI's done great. Just letting a little bit of air kind of out of it. I'm not calling it a bubble, letting a little bit of air out of it. And again, what should you do? I mean, look at Europe today. Now, I know Europe's probably going to play catch up tomorrow. I get it. But we're saying have a globally diversified portfolio. This is a global bull market. Just last Friday, which feels like a long time ago, right? The ACWI ex-US global stock market hit an all-time high. Okay, it's not just about the U.S. We're U.S.-centric. We have a lot of U.S. investments, so be clear. But I think having a globally diversified portfolio in this world right now makes a lot of sense, Nicole, with all the uncertainty we have, with Fed policy and Washington and all that drama. There's still some good areas around the globe that are honestly very, very cheap still, even after the rally we've seen all over the globe, specifically in Europe.
It was interesting. Another thing that may have dampened the markets, and it was a conversation I had earlier today, private equity, and there are different parts of private equity, right? And they're giving out loans, and the best managers are going to give out and vet and give really great loans to great peoples and businesses and all that. And then you have the other side, the question marks, right? And that's what happened in the great financial crisis. There were loans going out that were, bad loans. And then it messed up everything, right? And that's sort of where we are now, at least according to Ray Dalio, who says we're 80% into the bubble, and venture is having problems, and a lot of private credit is connected to private markets. And that may have spooked folks today.
Not just today. I mean, we've been hearing about this, but you're right. I mean, clearly we've seen we've seen a lot of relative weakness from those areas, from private credit and some of those areas. Now, what did we just hear at earnings season about a month ago? Right, the large banks are saying things are pretty good, consumers are solid, people are still lending, people are still getting out there doing things. But you're right. I mean, you've got housing that's cracking under the surface. What's going on there? It's probably still a rate thing, but that's something to pay attention to. And then the private credit, the continued worries and concerns. You know, how big's the monster under the bed? I mean, nobody truly knows that. Is this the first domino to fall? All those cliche things we say, we're watching it obviously closely, but I'll just put it real simply. When we look at like credit spreads on AAA spreads and BBB spreads, we're still not seeing credit spreads on the whole blowing out nearly as much as you would expect with all the fear and everything. That CNN Fear and Greed Index, I think I just saw before we did this, is like 6 right now. That's like one of the lowest it's ever been. We get it. I mean, it's been low for a while, but those are things that we're thinking about. There's a lot of bad stuff priced in with the market that's only 5% off the highs. Two ways that can go. It can go a lot lower to catch up to it, or we're just panicking once again after a 40-something% rally in 6 months, and we're giving some back. I like to think it's more that one, Nicole, and we're going to get some better news going forward because the economy's still solid and it's still a bull market.
Right. So if it were buy, sell, or hold, you'd say hold on if you're on for the long term, or take profits if you needed to, but you're not selling just to sell to sort of beat some big sell-off. All right, I got it. Ryan Tekucic, great to see you. Thank you so much, Ryan. Really appreciate it. Coming
Thanks,
up,
Nicole.
Options Corner. Tom White is standing by. He'll highlight the unusual options activity we're seeing from the day, how investors are looking to trade on recent news of Capital One, Cisco Systems, and Apple. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. Welcome in Tom White, host of Fast Market here on Schwab Network. And what a day it has been. We've seen the Dow swing 1,000 points. In the morning, we started off with NVIDIA jumping 5%. Everything was in the green. And we've had a turnaround. The VIX is up 14%. Bitcoin drops below 87,000, the lowest since April. Just really feeling wild a bit. And also the fact that we've been breaking some key levels lately. It's a little different than what it has been. You tell me.
Yeah, Nicole, horrible price action today. I think that's the first and foremost when you've got, Nvidia up 5 or 5% early on in the session. Now it's down about 7% from the intraday highs. That's bad price action right there. After a really spectacular earnings report, Walmart's kind of hung in there after their earnings beat, which is positive. But then you mentioned some of the asset classes that are really selling off and impacting this market. Remember, margins, margin levels are at record highs right now. So when you start seeing weakness in one maybe asset class, where you're levered up maybe in one, where you've got to start maybe getting out of those positions when other asset classes start to fall, like equities. We've got the Dow and the S&P 500 now 5% off of those record highs. The NASDAQ's now 7.5% off of its record highs. So we're starting to see some weakness here in historically what's been a pretty strong month. November is one of the top months on a historical basis for the overall equity market. But remember, we didn't get those bumps and those headwinds in September and October, which we typically see. So now that we're getting through earnings season, maybe some people taking some profits off the table. We've had 2.5 great year run here for the equity markets in general. But at the same time, when you see price action like this, you see the volatility pop with the VIX near that 27 level, and the expectations. Remember, the market had priced in a December rate cut as early as 2 weeks ago. Now it's below 40% chance according to the CME FedWatch tool. So that's causing a little bit of consternation here for risk on assets, including equities.
For sure, absolutely. And then you have, thank you for all of that. And then we have some trades that you're going to share that you've prepared for us. First up, Capital One, which has had right now a tough month to date, down about 8%. Tell us a little bit about the same.
Yeah, still having a decent year, still up about 13%. This comes on the back of a pretty good earnings report. EPS came in at $5.95. That was above the expectations of about $4.36. So really a big beat there on earnings per share. Revenue came in at $15.4 billion. That was above the estimated $15.1 billion. So pretty good report. The integration of Discover into their business, that's accretive immediately. That's going really well. The company commented on that. They raised their dividend from 60 cents to 80 cents after that earnings report. High net interest margins, better credit out there, and the consumer is still spending. Nicole, we had the Atlanta Fed GDP now come out twice this week. They raised it. It's up to 4.2% so far from this quarter. You saw Walmart's earnings results. The consumer is still out there spending. They're just making different choices. Capital One relies on those swipes, and they've got a little bit of a loan book also that's done pretty well. So everything going well for this company, and seeing the stock was up a couple percent earlier in the day, just like I think everything, but it's pulled back to basically flat today. But we did see some bullish activity out in the January monthly cycle. So about 57 days to expiration, the trader bought 3,000 of the 220 strike calls, and then sold 3,000 of the 240 strike calls. So they bought this call vertical bullish, paid an average debit of about $4.80 for this vertical. So that takes a break even where this trader starts to profit above 224.80 over the next 2 months. That's about 10% above the current share price. So you're going to need to see some more gains in there. And call volume about double normal daily average volume that we've seen over the last 5 trading days.
All right, thank you for that. Appreciate it. And then we turn our attention over to Cisco, which actually we have a quantum networking partnership or plans with IBM. And this name, Cisco, is at some new highs. So let's talk about where you think it could be headed based on the trade you saw. What is the person betting?
Well, it's a bullish trade, but yeah, I mean, this stock is a legacy tech stock, right? Hit 25-year highs earlier in the session before pulling back, still up about 30% so far in 2025. You mentioned that partnership collaboration that they're doing with IBM on quantum computers, the investment that they're making on that side. We keep on hearing that, quantum's 10 to 15 years away. It seems like, just from some of the commentary and partnerships that IBM has, that it's maybe going to be less than 5 years. So that's one of the key takeaways. They just announced with AMD a partnership with Humane over in Saudi Arabia and the Middle East. That came out yesterday. Saudi prince was at the White House. So a lot of deals going on there, a lot of partnerships ramping up, and the amount of networking capacity that is needed for these AI data center build-outs is right in the wheelhouse of Cisco. Their last earnings event, they beat on EPS, they beat on revenue, and raised guidance moving forward. And that's why the stock, you've seen the stock move to those 25-year highs. But we did see some bullish activity in here also. Out in the January cycle again, so 57 days to expiration. Trader bought 5,000 of the 82.5 strike calls out in January. Paid an average debit of about $2 on those, so the break even of 84.50 over the next 2 months is about 9% above the current share price in there. So this trader is going to need to see some more gains here in Cisco, but it seems like a lot of the news has been pretty positive on this company lately.
Yeah, 25-year highs, and we've been talking about that because we've hit that a few times, as you said, even today, before pulling back. And then with Apple, you know, we got some great news recently about 1 in 4 sales were in China, were actually the iPhone 17, that the demand was still very hot there. It was looking good. You found a bearish trade now. Tell me more.
Yeah, this stock's off of those all-time highs, just about 3% below them, but they've gotten some positive news lately that the iPhone 17 drove 37% rise in monthly smartphone sales in China for Apple. They're taking a bigger chunk of the overall smartphone market over there also. And this comes on the heels of positive data here in the U.S., right, where they, on their last earnings call, which only had a couple weeks of that iPhone 17 sales, that they had seen those ramp up pretty solidly and beat expectations on not only iPhone sales but service sales on that side also. 74 Berkshire Hathaway, Warren Buffett, his company sold a bunch more of Apple stock. It's still their biggest holding, but they've sold about 74% of their total Apple holdings since about September of 2023. They've sold about 677 million shares. They did put those proceeds into Google Alphabet. They bought about $4.3 billion worth of stock in Google Alphabet. And then Tim Cook, the succession plan, the 65, their company talked about that on their last earnings event also. So they're going to have to figure out. That's probably going to be somebody on the inside. But the iPhone 17 sales above expectations so far. We've seen a little bit of a pullback. But then, Nicole, you're going into the holiday season, and that's where Apple has typically their biggest quarter with all the tech products that they have. But did see some bearish activity, and this took place really early, Nicole, before we saw that massive turnaround in the overall equity market. So, and in Apple shares. Trader in the May 280 strike puts bought 10,000 of those, paid an average debit of about $20. This trade's already working out pretty well, just because of the pullback that we've seen. By paying a $20 debit, takes a break even for this trader when they start their profits below $260 over the next 176 days. So this is a really long duration position that this trader's taken. That break even of 260 is only about 3% below the current share price in there. So they got plenty of time in this position, but then they could always close it early. Put volume is about 2.5 times normal daily average volume that we've seen over the last week of trading. So yeah, somebody may be taking advantage of the recent highs that we hit with the expectations the stock may go lower.
Already looking pretty smart, at least for the moment, but as you said, it's a long duration trade. Thank you so much, Tom. Mike, great to see you. Really appreciate it. Always appreciate your insight as well. Thank you. Coming up, folks, we're going to look at the crypto space. Of course, you know Bitcoin has dropped below 87,000 today. It's the lowest levels since April. I mean, if we look at Bitcoin, it's down 8%. IBIT down year to date, down 7%. Ethereum down 16%. BitO down 40%. A lot more to discuss. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. We're looking at a few movers for you. This morning we saw Palo Alto under pressure, even though it did have a good quarter. So we're looking at it pulling back. It did have current quarter guidance that came in line with consensus estimates. The cybersecurity provider did beat expectations for the trailing quarter and revenue growth of 16%, remaining performance obligations rising 24%. Palo Alto Networks also announced a $3 billion acquisition of the startup Chronosphere. Bath & Body Works falling today after a double miss on earnings the third quarter. The retailer slashed its guidance for the full year, citing continued pressure on the consumer. Bath & Body Works CEO saying one source of weakness was a strategy pursued by the former management that neglected popular categories. Bath & Body announcing a comprehensive transformation plan in an effort to turn that business around. Joining me right now to take a look at the crypto space, Christian Lagoon, CEO, Amplify ETFs. So glad you're with us. Is this the start of the crypto winter? What is going on here?
Nicole, I hope not, right? We got to get our coats on early. It could be a bit of a prolonged downturn here. We've certainly seen some bad price action on the Bitcoin side, being down 30% in short order from October all-time highs is problematic. We're seeing a lot of
Freestyle.
outflows from
Freestyle Friday, y'all.
on the retail side.
Freestyle Fridays.
It's definitely looking a little bit stormy out there, but remember, Bitcoin and crypto tend to have 4 to 6 times the volatility of the S&P 500.
Oh, sorry, I had to take a
So
shower.
we are in a kind of a risk-off environment here, thanks to those, I don't want to say jerks, but those people at the Fed kind of pulling out the rug from under us on an expected rate cut, which impacts liquidity, impacts risk assets like Bitcoin and crypto. So we think investors should bundle up and maybe explore not just owning crypto directly, but maybe owning crypto with some option income on the side.
Interesting is, no matter how you did it, you're pretty much losing. If you had Coinbase or MicroStrategy or BitO or Ethereum or, when has it become an opportunity to pick these up? Because now, if you're down 10 or 20 or 30%, BitO is down 40%. Would you step in and buy any of this now? Is this like a big opportunity? Because we were at 127,000 on Bitcoin.
Yeah, that's right. I do think, Nicole, it's an opportunity for people who have a longer-term time horizon. By that, I mean maybe 6 months or more. We are going to see a lot more liquidity come into the market here in 2026, whether that's a new Fed chair and kind of a Trump-appointed Fed chair from an interest rate perspective being quite, I think, bullish for rate cuts. But also just look at the declines. We have seen over time, very large declines in Bitcoin and crypto, over 30%. We're at about that right now from October highs. So I think it's time to get your toe in the water. Another way way again is to maybe look at crypto option income ETFs where you still have some of the upside of the crypto exposure, but you get paid 3% or 4% a month through option income along the way to kind of cushion the downturn but still keep you in the game.
Those are?
Yeah, so we have a variety of them, 6 of them. We have Biddy and Baggy, which focus on Bitcoin, and essentially they're giving you about 3% monthly option income and upside on over 50% of the portfolio, or Baggy, which writes options on the entire portfolio and targets around a 40 to 60% annual option income. We also have some weekly upside potential. We have versions of Ethereum, Solana, and now XRP. XRPM is the ticker, which just launched this past week. So it's a way to kind of combat or harness the volatility as a crypto investor to your advantage, because as volatility increases, option income increases, which accretes to your return in a crypto option income strategy. It doesn't necessarily if you're just buying a spot crypto ETF.
And what about Block? You have the blockchain technology ETF. What's that
That's
about?
right. That's right. So, we've been out since 2018 with our blockchain technology ETF, BLOK. It's a 5-star rated fund in that crypto category. It's actively managed, has about 10% exposure to crypto ETPs through that are targeting Bitcoin. The rest are blockchain and crypto specific stocks. It still gained 33% on the year up until this morning when I looked, which is great compared to a negative return versus Bitcoin. So that's a risk managed play to invest in not only crypto but the stocks surrounding it. The manager seeks to navigate kind of the ups and downs of the market. And again, been out since 2018 and it's averaged 20% a year returns since then. So that could be another option for those who are looking for more of an actively managed equity solution.
When do we see the turnaround happen? There must be a lot of frustration for crypto investors. I mean, I also think, look, Bitcoin did very well and held, was less volatile at one point when the NASDAQ was all over the place, when you started to see, other issues that were happening about a year ago. It was interesting how Bitcoin didn't get as wild. That being said, I think crypto investors have a mindset that it's more of a long term, but there's no doubt they have some frustration when they see it at 7-month lows. When does this turn around and go back up?
Yeah, well, I think the average crypto investor is not going to like the fact that it probably is surrounding, this turning point is surrounding a rate cut, another rate cut. We're getting back on that cycle. I think the crypto markets are very highly correlated right now to the equity markets, but have increased sensitivity or volatility than the equity market. So I think we need kind of a risk-on market to a return. And right now, the risk-off market, I think, is in place in equities. It's jumped over into crypto. And I think it's a lot to do with less liquidity in the system. Again, that rate cut that was expected, that's likely to not happen next month, and then kind of what that means going into early 2026. So I think as we get closer to maybe that May period of 2026, or maybe a new Fed chair is named before that May period, I think we could see a reversal if, in fact, the current Fed committee is just against interest rate cuts and wants to maintain this low liquidity environment.
And then what about some of the things that are a little more, we talked about XRP, Ethereum, Bitcoin. What about Solana and Dogecoin and anything else that may be a little, people know it, but a little less popular? Thoughts on those?
Yeah, I think we could potentially see a disconnect with Solana and Ethereum pricing relative to Bitcoin. And that is just simply because of the Genius Act and stablecoins. There is going to be a big move here to move the payment system from ACH, SWIFT, etc. to stablecoins. And stablecoins are primarily built on Ethereum and Solana blockchains, or versions of that called L2, which use those chains. More payments done on stablecoins equals higher prices for Ethereum and Solana, and that can actually potentially push those up sooner than Bitcoin, which I think is a store of value, is waiting more for liquidity to emerge in the marketplace. So those are 2 points to keep an eye on for sure.
Great. Well, it's great to see you, Christian Magoon. Thank you so
Thank you. Coming up next, we'll do some faith-based investing. We have a special guest with us who will explain.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardas and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Pavlidis. Navigating markets while maintaining values can be a difficult task for investors. There's one way to actually look into this, and Michael Schnackenberg, head of distribution at Eventide Asset Management, is with me to talk about faith-based investing. It's great to see you. Thank you for being here.
Absolutely.
So, a lot of folks know ESG investing, environmental, social, governance, and they look for companies that do good and all that. This is similar but different, faith-based investing. Could you explain?
Absolutely. So we're a values-based investment firm rooted in a biblical worldview. So as we think about values, we're really rooted in unchanging biblical truths. So similar goals to ESG, but slightly different inputs. Essentially, we have an investment philosophy that is rooted in the idea that investing is ownership. We believe that owners of a company, you have an ethical responsibility to understand the products and practices, and we want to find those products and practices that are creating value and leading to human flourishing.
And you are going to share several ETFs with us. I'm looking at them here, and they somewhat track indexes, but you take stocks out that don't have the values that you have when you talk about biblical values and all that.
Yeah.
For example, when you look at U.S. markets and you're tracking the S&P 500, right? You have the U.S. market. That must be the ESUM.
It is.
And is that one? How many of the S&P 500 names make it into your fund?
Yeah.
Half?
Less.
Well, I mean, less.
Less.
Okay.
Yeah.
So I was going to say, do you take out 10 names?
Yeah.
I said, no, that can't be right. Half? It's, okay,
Yeah.
so less than that of the 250. How many names of the 500 are pretty much in the fund?
So for the U.S. market fund, we're benchmarking against the Bloomberg 3000. So we're really intending for it to be a broad U.S. market exposure.
Okay.
But within that Bloomberg 3000, we're screening out about 70% of the names.
And what would be some things that would take a company right out
So kind of back to the idea of investing as ownership, we're really calling clients to think about what they own and root for what they own. And so we've developed a framework called Business 360. And essentially what we're trying to do through this, and you probably don't hear this too often on the show, but take a love your neighbor approach to investing. So we've thought deeply about who are the neighbors of a business, and we've come up with 6. So customers, employees, supply chain, host communities, environment, and society. And so we have a team of 5 that work with our fundamental investment team to identify which companies have products and services creating value for all 6. And those are the ones we want to embrace, lean into, and remove those that are detracting value.
And then you have large cap growth, large cap value. Tell me about some of those.
Yeah, so
are there names that stand out that are, top holdings, for example, that you want to share?
Yeah, so large cap value and large cap growth, as well as the small cap and the soon-to-be international, are all in that systematic vein as U.S. market, in the sense that we are seeking to track broad market indices while removing the problematic areas, which creates very differentiated products that we can then optimize back to a similar risk and return feel. Within large growth, I think that's maybe the most unique. I'm sure you're talking a lot about Mag 7. We actually only have one that passes our screens currently, which is NVIDIA.
Oh.
So we do have a very differentiated product within large growth, as do we in these other areas as well.
Why did the other Mag 6 not make your cut?
So as we think about all the stakeholders in the products and services, typically there's some aspect of that business that we would argue is detracting value. So for example, social media, we typically avoid anything that's leading to addiction. And that can span from tobacco, alcohol, gambling,
right.
And we would include social media in that as well.
What about Apple?
Apple, same thing. It's web hosting, it's certain media exposure that is detrimental.
And then you have the high dividend fund. Tell me about that.
Yeah, high dividend is large cap value is an incredibly difficult area for a faith-based investor to allocate to, because it is typically fraught with products that are typically addictive or they're causing harm. And so our high dividend value, ELCV, is a fundamental active strategy managed by our co-CIO, Dolores Bamford. And we really think the first of its kind, a faith-based offering in a large cap value space with a high dividend focus.
Eventide has been around for a long time.
Yeah.
These ETFs are more new, right?
Yes.
What sort of led to this?
Yeah, so we've been around for 17 years, really starting with an expertise in healthcare, and we continue to have that. But more as a fundamental active investment boutique. We still have those capabilities. The reason that we've launched Systematic is to try and create an ethical win-win for a faith-driven index investor. Our view is that as a faith-driven investor, you don't have the luxury to invest passively, given that indices are inherently values agnostic. So what we're trying to do is broaden our availability as we seek to create full portfolio solutions and create easy opportunities for faith-driven investors to align their values with their investment.
So all those sin stocks that we used to cover, those are all out.
Those are out.
And you mentioned NVIDIA would be one that's in there. Any other names that seem to make the cut on a regular basis?
Yeah, so any company that is creating value, right? We don't want to just avoid. We are unyielding in our avoidance of problematic areas.
Yeah.
But we want to be taking a positive look at the opportunity that business has to create impact. So any product and service that is adding value to those 6 neighbors of a business that I mentioned, that's a great opportunity for us to consider for our portfolios.
And how do you feel about the economy and the Fed and where the market is headed in general? Because good values or not good values, you need a market to go up, right?
Yeah.
How do you feel in the big picture?
Yeah, we're very encouraged on the fundamental active side of the resurgence and sentiment for healthcare. That is a big part of what we do at Eventide. So our fundamental active strategies have performed very well as a result. Generally, we're optimistic, and we're optimistic about long-term equity market exposure, which is really the intention for offering these systematic strategies.
Right.
Is we believe in the benefits that offers for investors. We just want to be able to offer that further values alignment there with them.
All right, Michael Schnackenberg, thank you so much. Really glad that you were with us
My
today.
pleasure. Thank you for having me.
Faith-based investing. Thank you,
Thank you.
Michael. Coming up next, our panel standing by to talk all about Walmart. Those earnings, in fact, did really well, and a lot of folks are shopping, particularly for groceries, but they've been pushing some other things that are doing well. The big picture for Walmart and retail will be right back. The final 90 minutes of the trading day, that's when markets make
from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Linus, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome back to the watch list. Time for our panel to discuss Walmart. The earnings are out. It was good news for Walmart overall, but we've had several retailers this week, and there's definitely a theme of a cautious tone when it comes to the consumer. But Walmart seems to do a little better than the rest. Charlie O'Shea from O'Shea Advisors and Jamie Myers, analyst at Blacker Tanger Investments, with me. Jamie, I'll start with you. Some of your thoughts here on the big picture.
Nicole, thanks for having me. You know, Walmart's a great business in any environment, and what they've really done over the last decade is lay the groundwork to become this omni-channel tech powerhouse that, you know, nobody can really compete with in retail, with the exception of Amazon, of course. You know, but importantly, the big picture, they're diversifying the business. Ads are growing over 50%, e-commerce is growing over 30%, Walmart Plus had its best quarter since it launched. And what we see moving forward is we see a cash flow inflection that has already happened and will continue over the next several years.
We have good news overall in that the grocery always seems to do well. Also, they've been investing in picking up other areas like apparel, like fragrance and self-care and things like that, trying to improve the look of the stores, getting mannequins for the apparel, to try and push some of the other areas, because grocery's been the bright spot. Charlie, what do you think? Does Walmart have a good look ahead?
Oh, absolutely. I mean, the seeds for this were sown in 2015 when Doug made his speech at the stock exchange during the analyst meeting, said we're going to make all these investments, and people didn't really understand why. And the online business is just rocking. The move up market, you know, they keep calling out the higher end consumer driving a lot of their growth in both sales and traffic, and that's a testament to the merchandising. They tried this before. They went up market. They had a fashion show during Fashion Week and put some ads in Vogue. That didn't do so well. This time it's doing much better. They really nailed it on multiple fronts. I don't see any headwinds at all ahead of them. You know, the Amazon story, when I was covering this company, you know, years ago, I used to hear the question, how does Walmart compete with Amazon? And I would always reframe it and say, how does Amazon compete with Walmart? And I think we're seeing that today. I mean, Amazon has not made a dent in the food business, despite the Whole Foods acquisition, and Walmart keeps growing share in food, which drives traffic, which drives sales of other products. You mentioned the stores being fresher. They keep refreshing the stores. I can remember 20 years ago when I first started covering the company, the stores were pretty grim, and now they're not. I mean, they are anything but grim right now. Doug and his team have done a phenomenal job with this company.
As I've been following Walmart over the last 24 hours or so, you definitely have different, you mentioned the upscale shopper who's now going to Walmart, and that's one thing. They also
absolutely. And you know, Walmart, they're absolutely restless to have the consumer. And what they've done over the last decade is they've always offered good value, but now they offer the convenience. And in today's society, it's all about personalization and speed. And so, like you mentioned, we're seeing all income cohorts pay for expedited delivery. You got about a third of e-commerce orders that are people are paying for delivery in less than 3 hours. And then when it comes to the trade down, we do see a lot of the higher income consumers spending more money at Walmart, but we also think that's going to be sticky. Because to that point, the Walmart stores of today are not the Walmart stores of yesterday. It's a completely different environment, so, you know, we're very optimistic about the future.
Someone's home, maybe they work from home, maybe they have children or pets. The convenience of having the food delivered is worth in great value to maybe a family or a mom at home. How about just the big picture here? Charlie, the other names, I mentioned a few that reported. We'll get, I think we're also hearing from Ross stores and BJ Wholesale. Gap is also on my mind. Tell me a little bit about just the trends. Are there specific names that stand out to you? Maybe pick a name and give me a thought on it.
Well, I keep thinking about Best Buy. You know, we're heading into the holiday, and it's an electronics-driven season, and I think Best Buy will do really well, even though there's been continued deflation in the price of electronics, specifically televisions. I think Best Buy will really rock this holiday. BJ's was a sleeper for years until COVID. I covered BJ's since it went private with Leonard Green, you know, over a decade ago, and it was always an impressive store with an impressive management team. Costco is kind of the sleeping giant, but Costco's almost boring with how predictable well their performance tends to trend. So I would think those guys will do really well. I think Target's got some challenges, but I don't share the angst that a lot of other analysts share. They've held on to almost all the sales they generated during COVID when everybody was locked down, and I think that's pretty admirable. I think they just have to corral the beast of those sales and start to make money with them. So I think the holiday is going to be incredibly competitive. The consumer's going to spend, but I think Walmart is definitely at the head of the pack here.
And look, there's been talk about Dick's sporting goods heading into the quarter with solid demand. A final quick thought here, Jamie.
We're pretty positive on retail in general going in as it relates to Walmart. Some of the other names you mentioned, TJ Maxx, Costco, but you know it's going to be remain a private pay consumer, and we think Walmart's in a better position than anybody to take advantage of that.
Great. Great to see you both. Charlie O'Shea, Jamie Myers, thank you both for being with us here on Schwab Network. I'm Nicole Pedalini every single day. Opening bell at 9 a.m. and the watch list here at 2 o'clock. I'm glad to be with you live on the floor of the New York Stock Exchange. Dow right now down 156 points. Keep it right here. A lot of action going into the closing bell. Market on close next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network. Your real-time market coverage, expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of the pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change in EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area
interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
And this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
Hello, Marley. I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. Nvidia's earnings that drove an early market rally, but we have seen stocks giving up those gains, with the Dow falling over 1,000 points from its intraday high. We'll discuss Nvidia's downside role in the market and look at some of the volatility and options data as well for you. Investment philanthropist John Hope Bryan stops by to discuss his advice for business, financial literacy, and crypto. Plus, post-market earnings continue with Intuit and Ross Stores and Gap due out after the bell as well. But for now, Marley, take us through what you're watching today.
Of course, Sam, Nvidia at the top of the list here. We saw shares seesaw today after reporting third quarter earnings results that beat analyst estimates on both the top and the bottom lines. The company also gave better than anticipated outlook, with CEO Jensen Huang saying, quote, Blackwell sales are off the charts and cloud GPUs are sold out. Shares still under pressure though right now. Palo Alto Network stock also lower today after its latest acquisition surprised Wall Street. The company announced it's buying Chronosphere for $3.35 billion during its earnings yesterday, where it beat on both its profits and revenue in the fiscal first quarter. Walmart, though, is higher following a very strong third quarter. Earnings and revenue topped expectations, driven by double-digit e-commerce growth. The retailer also upped its full-year forecast for the second quarter in a row. We'll talk through all of those reports in just a minute, but first I want to get a look at where our markets are. A very different picture than where we were earlier today. Now all red across the board here. As we look at the S&P, we've given up about 0.75% on the day, 65.91. The Nasdaq down almost 1.5%, 24,289.47. As for the Dow, we're 142 points lower, 45,995. And the Russell 2000 trading down about 0.9, lower at 23.27. For the dollar, right around the 100 mark, relatively unchanged. Gold as well, mostly unchanged on the day, 40.81.40 a troy ounce. Crude oil down 0.5%, 58.94 a barrel right now. And Bitcoin continuing its slide down more than 3% at 86,795. Now, Sam, I'd love to know what some of the stories that caught your eye today. You know, the Bitcoin number is one of the lowest we've seen in months.
Yeah, that is right, and I do want to start there, obviously, Marley, because crypto has been really the big focus. Bitcoin was trading, remember, above 90,000 this morning, alongside the risk on that we saw in equities, but then mid-morning it rolled over, falling over 3% and hitting that 86,000 mark, as you just mentioned. What's interesting about that is that Bitcoin actually turned lower before stocks did. So some are actually saying that it took stocks down with it, which is consistent with what analysts have been saying lately about drawing a connection between crypto and U.S. equities right now. Bitcoin is down over 30% from its record high of over 126,000 in October, but the cryptocurrency, as we've been saying, has been coming off ever since then as investors continue to see their leveraged positions get liquidated. Bitcoin Treasury Company's strategy, which is really seen now as a Bitcoin proxy, is falling today. It's down 40% or so year to date as well. The other thing that we need to highlight, of course, is that
We've now given all of that back and then some, down more than 2%, following what you could make an argument was a blockbuster quarter.
I mean, and I know this happens a lot on earnings. This is not abnormal to see the price not match the report, but when it comes to this degree of strength from a company, it does feel a bit staggering, considering we gave back again all of that strength. I mean, we basically took down the overall market, and with NVIDIA then falling today, and there was still so much to like. I always think it's important to know. I mean, we saw 62% growth for revenue year over year, sequential growth 22%, which is astounding. Data center revenue, which was being more criticized after the report last quarter, rose 66% year over year. Your networking revenue up 162%, gaming revenue up 30%. That's been their weaker component of their business, but their GAAP gross margin did also come around 73.4%, and non-GAAP gross margin also did exceed prior outlook as a result of some of the data center mix, improved cycle time, and cost structure. Going forward now, they do expect revenue of $65 billion, plus or minus about 2%, implying about 14% growth sequentially at the midpoint. And the Blackwell platform, when you do that, the GB300 made up about 2/3 of the total Blackwell revenue. They're now the leading product, also with leading customer adoption, and they're expecting, I mean, overall going forward, mid-70s gross margins for both GAAP and non-GAAP basis, despite some of the rising input costs. And so I think that is hugely optimistic, especially when you have the commentary that the clouds basically are sold out. I mean, it seems so much demand, they're not even able to fully fulfill, or I mean, it sort of depends, I guess, how you look at it, because then you could also say, should they be further boosting their capacity? But I mean, the work faced for quite some time is their AI market options. There's good reasons behind that. They control 90% of the AI GPU market, and think about GPUs as like the brain behind a lot of what powers AI and these various LLMs. And to me, the only thing that makes sense of for the more bearish take today is valuation. I mean, I see several analysts now, one about seeking alpha with a downward to sell, but actually, if you look at their valuation, first of all, it's not at, I mean, like, as elevated as levels we've seen historically. It's not at lofty levels like, say, AMD, Palantir, CrowdStrike, these names that carry huge forward-looking multiples. And a lot of people would argue that with growth expected for the next, 3 to 5 years, it's actually fairly justified. But perhaps this is just the risk of being the most valuable company. There's not really anything that contributed to the weakness. I would argue to the skeptics on the valuation, maybe they learned this midday today. So what caused the complete rewriting of the narrative that was very strong out of the school?
Well, it's very interesting. It seemed to be that the conversation was that it had quelled a lot of the AI bubble fears, that would put some of that to bed, and then by midday today, we were seemingly back in that conversation. Had those fears started to creep back up, we started seeing the reversal, and now we've really seen a strong reversal.
We have. I mean, down now about 2%. We've seen now hundreds of billions of dollars change hands just throughout today's session. And I think they're looking no further for market weakness than NVIDIA pretty much every single session, because not only does it drag on some of its peers, like some of the, even like high bandwidth memory, but then also like your AMD's, Broadcoms, it drags on pretty much the rest of the market.
Well, and every dollar move for NVIDIA is roughly 3 points in the S&P. So it really can have some significant impact. Also want to talk about Palo Alto Networks. They put out a good report as well yesterday. Strong numbers, but they had a surprise announcement of another acquisition while the street was still digesting its previously announced acquisition, and now we're seeing their shares are heavily under pressure, down more than 7% right now.
Yeah, pretty big move to the downside today in Palo Alto Networks, which did get top expectations for earnings and announced that splashy deal with Chronosphere, which is right now focused on these observability tools for cybersecurity, valued at roughly $3.35 billion. But the company also did see, I mean, again, like pretty strong growth metrics. Revenue climbed 16%, easily topping forecast, and the revenue guidance was now in line to estimates, and have been very busy as far as this acquisition front, as we have seen. I mean, the company really tried to focus on accelerating execution, their platform adoption, and strengthening overall their share across various enterprise accounts. And so, not the first we've heard of various cybersecurity companies purchasing one another to create this sort of monster platform. Now, Palo Alto Networks has called it platformization. It's been hugely criticized because it takes a long time and it's expensive, trying to basically become the one-stop shop for cybersecurity. But this was actually mentioned from a note out of Wedbush, which is, they've been longtime fans of this name, saying this is still the right move for the company as they become become this sort of third derivative party in the AI revolution, and thus continuing to help gain market share. So they said that the company will continue to be aggressive in M&A, and that this Chronosphere deal they see as hugely lucrative, as well as, of course, that recent acquisition of CyberArk Software. And so they actually saw all of the report as pretty positive. So I think, don't let some of these moves necessarily dictate the financial health that these companies just disclose, because maybe we're skeptical about the amount of money they're spending, but some analysts do actually believe that that will lead to longer-term upside.
Yeah, it's not abnormal to see the purchaser move down on the announcement, but I heard the same sentiment. The guests we had on Market Outflows yesterday when we were covering the earnings all said if there is any move to the downside, they've got to be corrected even by today. So it might just take a little bit longer to digest, but the long-term narrative seems to still be in play on the sell side. For the sell side community, that it is the long-term play. Walmart, though, really coming out of the gate with some strong earnings, strong outlook, a lot of commentary on the consumer, some of it divergent from consumer commentary that we've heard from some of the other retailers, but a very strong final report as its CEO signs off.
I will say, yeah, talk about a good way to exit, and I do applaud McMillan for, like his tenure at that company, really reshaping it from seen as a retailer to now a massive omni-channel presence. And that's, I think, what this report really reiterated. You had a clean beat, revenue rose 6% from last year. Net income also improved 33% from last year. Operating margins were consistent with last year, but specifically as far as like segment sales trends, we saw Walmart U.S. net sales rise 5%, comps were up about 4.5% excluding fuel. Internationally, we saw that rise about 11%, and Sam's Club also rose about 3%. E-commerce, as far as the global e-commerce push, that was up 27%. Their 7th consecutive quarter of 20% plus growth. And advertising, global ad revenue surged 53%. So they did say that, first of all, they have more delivery capabilities than ever. They're able to deliver to 95% of the country in under 3 hours, which is, first, I think, huge. And I think also, I know that it was hugely mentioned that they're seeing this higher income consumer really drive a lot of their growth and drive this consistency where these customers are coming back to Walmart, finding the experience to be pleasant and worth, returning to. And I think that's a huge driver of growth, yes, but it's also such a great read on middle to lower America, because they serve so many communities throughout the United States. So I think that the results speak to this strength, and also they did mention the fact that delivery is being used more and more by not just the affluent consumers, by those that need, all sorts of grocery and type deliveries. And they said that they try to keep such a disciplined approach to some of their costs to continue to drive this loyalty. And frankly, you talk about names like we did yesterday with Target and like Lowe's, Home Depot, reporting pretty disappointing comps for this quarter and the foreseeable future. There's a reason that this company continues to surprise to the upside, and it's because they are, not saying that they're stealing from Target, but that those customers are allocating those funds elsewhere, frankly.
I mean, they didn't go so far as to say it, but they almost did. That they are bringing in a different type of consumer. They're appealing across all income levels, and they aren't losing those consumers. And as we sort of look at some of their primary competitors, here's Target that you mentioned down 2.25% right now. Walmart up almost 7%. Amazon, obviously in their e-commerce space, a competitor here. Costco up 1%. And we'll hear from BJ's Wholesale tomorrow to sort of see how they stack up in this scenario. Walmart also has Sam's Club as a part of its company, but very interesting to see that also that Walmart's switching to the NASDAQ, that they're going to move to the NASDAQ in December, which didn't seem to have any significant commentary from the street, but just something interesting to note. Last, I want to talk about Block. They had their first investor day in 3 years. The shares trading had to be halted on the news as we saw Jack Dorsey speak for the first time in a while about Block and some of the commentary there, and then we saw a lot of analyst response to it. So, walk us through some of the news here. They are still trading higher on the day despite the pullback that we're seeing.
Yeah, this thing came out of the gate hot today, as I guess did most of the market, and as then pulled back. But at least in terms of Block, seeing some of that hold as they unveiled this 3-year financial outlook, and of course at their first investor day in quite some time. So they did outline the strategy focused on profitable growth, operating leverage, projecting that the rule of 30 that they will maintain in 2026, but they hope to maintain that through 2028. Gross profit is expected to grow in the mid-teens annually, while profitability is also expected to rise about 30% to $4.6 billion for their adjusted operating income. Cash flow, they also did introduce a new non-GAAP cash flow measure, which is expected to reach more than roughly $4 billion or 25% of their gross profits in now 2028. But, boosting investor sentiment, they did also note this $5 billion increase their share repurchase program and highlighted their scale and efficiency as far as Square and Cash App ecosystems. So initially, yes, it was a bit higher today, but holding on to a 2% move is still something to applaud here, especially the timing of this event was very odd to me, and we just had their earnings, of course, which were not a huge upside catalyst to the shares. So then I was trying to figure out like why hold this so closely to that event. I mean, remember there were like $1 million party that everyone was so critical of. That doesn't seem to matter though. It does feel like the long-term outlook was very much appreciated today by the street.
Yeah, and I think investors turned skeptical following that last report. We saw it move down. The stock's down by about 30% so far in 2025, a little bit more. But, this investor day came, I guess, right at the right time. And even on a down day, they managed to stay up. So, Jenny, thanks for breaking that down for us, co-host of Next Gen Investing here on Schwab Network. I do want to check back in with Sam, though, in New York, and hear what we have coming up in the show.
Well, Molly, Zed Francis stops by to discuss the impact of NVIDIA's earnings on volatility as we have seen wild swings in the market today. Market of close. We'll be right back.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Pedalini's live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with the information. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com. Welcome back to Market on Close. I'm Sam Bartis on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. Let's just give you a quick market update because if you're looking at your screen right now, you're probably seeing a lot of red, but that actually wasn't the case this morning. We did see very much a risk on to start the day. Everyone thinking Jensen Huang, everyone thinking the BLS are finally getting some of that data out. We did see stocks popping, yields dropping, but then things started to fizzle out as far as that rally is concerned. We've seen the Dow swinging about 1,000 points from the highs to the lows. And now, of course, what seem to be some AI valuation concerns which were pushed aside because of what we heard from NVIDIA are very much starting to re-emerge, that some of the circular financing we've been talking about and some of the worries around how these companies are actually raising some of this capital to fund their AI ambitions, while went to the back of the mind, very much have come back to the forefront. So we have got a little bit of risk off here. We did see most of the sectors in the green this morning, but we are looking at actually most of them in the red right now. So we're seeing down arrows across the board. We've got the S&P 500, which is falling through 6.6 right now.
from the
all of
country.
this that kind of risk-off type of sentiment in the market, as we did see Bitcoin falling through 90,000 earlier today, and then we subsequently saw the markets taking a turn as well. Apple's lower by 0.4. Nvidia, which as I mentioned had been higher earlier, now trailing by 2.2%. Meta's down fractionally. Microsoft taking a leg lower by 1.5%, and Alphabet and Amazon are also down on the session. So a very, very different day to what we were looking at earlier this morning when we woke up to what had been a global rally, particularly when you look at some of the chip and tech-related names. But we've got about 40 minutes to go, so let's see how things go till the rest of the session and the closing bell. But I'll send things over to Marley over in Chicago for now.
Thanks so much, Sam, for that market update. I want to discuss NVIDIA's earnings some more, some of that volatility that you just mentioned, as well as the overall market action that we've seen with our next guest. Joining us now, Zed Francis, the Convectitas co-founder and CIO. Zed, great to have you with us. You know, we saw markets pricing in some big swings for NVIDIA today, and we saw some swings. We saw a swing to the upside. We're now seeing a swing to the downside. You know, walk me through your takeaways for NVIDIA's earnings.
Yeah, I mean, first off, I'm really sad to not be, sitting across the table with you. I had to reschedule to be at the desk because of these swings that you mentioned. But funny enough, I think most of my conversation is the market is actually moving a lot less than what was actually priced in. So for NVIDIA specifically, the market was pricing at approximately a 7% move for NVIDIA on earnings. It got close-ish during the rally time of the day, peaking at, we'll call it a little over a 5% rally. Live was sitting down a little over 2%. So this is well within the range of what the market was pricing in for NVIDIA specifically. And then the market in general was pricing in about 1.33% movement, which in the morning we were rallying beyond that. Like the macro move was actually greater than the NVIDIA move in terms of what the market was pricing in. But live, we're kind of settling in down 85 basis points. So even though this feels like a wild day, and yes, a reversal day always feels like a much more wild day, ultimately this is all within range of what the volatility markets were pricing in at a pretty aggressive rate, to be fair, coming into today.
So if this is what was priced in, what does that tell us about market positioning, Zed?
Yeah, I think that's a great next question. I think this was a circle event on, we'll call it everybody's calendar, even if they didn't trade technology, even if they didn't trade equities, to be frank. Like, this was the remaining event that was on the calendar for 2025. The expected move today was greater than CPI in December, was mildly greater than the FOMC meeting the third week of December. So this was what people were keyed on for the final, 5.5 weeks of the year. Is this was the day of movement, and we've experienced intraday movement, but we'll see where close to close is. As of right now, if you didn't trade intraday, you probably were overpaying for that one day of movement.
So if NVIDIA, now with them rolling off the calendar, we've called it the Super Bowl of earnings. Everybody had the big red circle on their calendar. We do extended coverage for their earnings. Now that it's off the calendar, now that we've moved beyond it, does it give the markets permission for volatility to finally collapse down towards realized levels?
That would be potentially one thing that allows volatility to fade towards realized levels. So, what you're indicating is almost the last 6-ish months, implied volatilities across essentially seal names, index, everything have been elevated in comparison to how much actual movement every day markets and individual equities have been experiencing. And yes, April obviously was a chaotic time that allows a little bit of additional volatility risk premia to be priced in, i.e. elevating implied volatilities higher than realized. For a period of time, we're good, 6-7 months away from like the major parts of those events. So it's been a little surprising how much volatility has been able to maintain this elevation, even though in general we've not been moving a whole lot, and in general we've been moving a little bit higher. And I do think this is one potential reason why volatility has the ability to collapse if we get through a chaotic day like today. But ultimately, I think we might need just a calendar reset. We got to get to 2026, because I think a lot of institutional investors became light risk, late January, early February this year. They celebrated that positioning throughout Q1 and early Q2, but have a little bit kind of been chasing their own tail ever since then. And I think that's allowed volatility to remain bid as they want to utilize volatility to, we'll call it, create any sort of directional opinions rather than just buying or selling.
And then where we have been seeing a bit more stability this year is in U.S. rates. You know, the U.S. bond market here has been relatively stable. Now that we see that, I'm seeing that you're saying that rates will be the story of 2026. I'd love to know what catalyst we should be looking for. And are you talking here in the U.S. or are we talking about international?
Yeah, that's a great question. So I guess go backwards. In 2025 thus far, I guess we have a little over a month left. U.S. rates have been very benign to a small rally, but persistent rally. In Europe, it's been pretty low volatility with a mild to moderate sell-off. And then in Japan, the kind of, we'll call it, surprise financing center of the globe, it's been a pretty darn good move. I mean, they've had a pretty persistent sell-off all year long, and it's only been accelerating. But back to the original question, why is 2026 where we should actually refocus on U.S. rates? And to be fair, 23, 24, 25, we did the step-up function in 2022, and we've been reasonably range-bound ever since that large move in 2022. I think we finally are going to learn about all the confluence of events in 2026 between budget, between can we keep this issuance game on the front end going, to can stimulus both on the fiscal and monetary side maintain a stable rate environment, or does that actually allow things to get a little more unhinged than they are today? Because for right now, all of the stimulus hasn't caused any problems in the rate environment. I think that's been frankly shocking so far to most in 2025, but sometimes things just take a little bit more time. We might have to wait for 2026.
All right, so last question here. Let's focus on the here and now. We're dealing still with this volatility. I was just pulling up the VIX quickly. We're north of 25. We were as high as 28 earlier today. Is this elevated volatility that we have right now a risk that investors should be hedging, or should we be exploiting it right now?
Yeah, I mean, I think the real answer is we've experienced choppier and choppier markets, not only in terms of direction, but even more dramatically in terms of volatility moves. And what I mean by that is a lot of the events that we've had over the last 5 years have been very V-shaped events in terms of direction, but even more dramatic in terms of changes of volatility. So saying time into buy or sell is now is never a great rule of thumb. What really you need is some sort of management process to monetize things along the way, because even if hey, you were right, we bought now, the better question is, if you were right, when the heck are you selling? Because these reversals have been so dramatic that it's less about we'll call it entry point, and even more important about exit.
Well, Zed, we appreciate you joining us. Wish you could have been here in studio with us, but we absolutely understand it was a very busy day in the markets, and we always appreciate your insight. That's Zed Francis, the co-founder and CIO at Convexitas. And coming up next, we're going to be joined by